I would now like to request Dr. Pankaj Trivedi, sir, Head of the Department of Finance and Law at KJ Somaiya Institute of Management, to speak on the journey of Investrix.
Yeah. Chief guest of the day, Mr. Jim Rogers. Of course, he will join in a few minutes. Keynote speaker of the day, Mr. Marc Faber. Our director, Madam Dr. Monica Khanna. My faculty colleagues, invited guests, alumni, and student friends. Good morning and warm welcome to all of you for our annual program on financial market called Investrix. Investrix is an annual program of KJ Somaiya Institute of Management of corporate panel discussion for over 3 decades. As Madam has said, this program is going on since 3 decades. So that itself is a great achievement. Every year, we invite market leaders, investment experts, investment decision makers, and we hear from them about their views and their experience with respect to investment, and there is a good learning. We also keep a theme for Investrix every year. This year, the theme of this program is resilience of Indian capital markets and the rise of alternative investment class. As all of you know, that market, when you talk about, particularly capital market, volatility is linked with the market. In the current time, this topic is highly relevant. Since last few weeks, we are observing there is a lot of volatility in the market. As I said, you can't separate volatility and capital market. But since last few weeks, we are observing this is going to a great extent. Even yesterday, all of you must have observed, in just 60 seconds, the market went down by 400 points. To that extent, this market is volatile. But in spite of this volatility, Indian capital market is showing good amount of resilience. In spite of COVID situation, in spite of various uncertainties, as Director Madam said, VUCA, you are noticing a lot of uncertainties with respect to inflow of foreign funds into the market, uncertainty with respect to very recently, all of you must have seen our IIP figure, industrial production figure, it is falling. Inflation figure is showing rising trend. In spite of all these challenges, situations, and fluctuations, the market is showing good amount of resilience. And this resilience is because of the strong domestic forces. That is one of the matters that we should take proud of. This resilience in the market is mainly because of the retail investor. As all of you know, just last year, if you talk about, nearly 1.4 crores new retail investors are added into the market. And this is the direct investment. If you talk about participation of retailer indirectly, if you look at the mutual fund performance, there also you are noticing that retail support to our market is to maximum extent. Just one example, if you compare the data about November and December 21, in just 1 month through SIP, mutual fund is able to mobilize double the amount what they have mobilized in November compared to that in December 21. The amount mobilized through SIP, and that too for investment in equity scheme, is straight away doubled. So this is one of the strong factors. Along with that, the local institutional investors, they are also supporting our market to a great extent. So Indian market is showing very good resilience. At the same time, the new class of investors is emerging. The millennials, as Madam has said, the young people. These young people, they are techno-savvy. They believe in traditional investment, but along with that, they want new investment opportunities, something like cryptocurrencies. technology boom and technological development has also boosted this new alternate investment class. So friends, there are so many questions that a common investor is having in his mind, that where should I invest my money in 2022 when there are a lot of such uncertainties? Whether alternate investment class like cryptocurrencies is a right investment, because all of you know there are a lot of controversy also you must be reading with respect to cryptocurrency. The regulator is having altogether different views than the government. Government prefer to go slow. Regulator prefer to go fast with respect to cryptocurrency. So all these nitty-gritties, if one has to understand, then naturally we should listen to the experts. And that's the reason today we have invited galaxy of speakers to share their knowledge and experience with us. I once again welcome all the speakers, and I'm sure that this deliberation that we will have today will give us a lot of takeaway and learning. Thank you very much. Thank you.
Thank you, sir, for the wonderful journey throughout the Investrix moments. And Investrix 2022 has been made possible because of a very committed team. It's none other than Team FinStreet, the official finance committee of KJ Somaiya Institute of Management. FinStreet has been organizing innumerable informative activities and programs to provide a rich and varied experience to the students of our institute. So let's have a glimpse of the journey and events at FinStreet.
Greetings everyone. Let me take you through the journey of one of the prominent committees in KJ Somaiya Institute of Management, FinStreet, the Finance Committee. The seed idea was to bridge the gap between industry and academic curriculum through effective delivery of knowledge-oriented sessions and events by a network of highly motivated members and renowned industry experts. The committee's history goes back all the way to the inception of the college, and currently it's flourishing under the guidance and leadership of Dr. Pankaj Trivedi. The committee has been expanding in scope in its influence and activities year after year with new initiatives such as magazine and journals like Finlay, a monthly finance magazine covering sector analysis, company analysis, person in focus. It has one of the highest readerships amongst all the monthly magazines across B schools in India. It is currently running its 107th edition as of January 2022. The FinStreet Journal, a weekly newsletter helping readers stay updated with recent financial information and analysis on various parameters like macroeconomic indicators, corporate earnings, market overview. It is currently running its 108th edition as of January 2022. We also cater to finance enthusiasts by organizing events like Winzomania, an intra-college business quiz that tests participants' financial and business knowledge. Lock Stock Trade, an inter-college virtual trading competition with real-time stock quotes. Abhigrahan, a one-of-its-kind inter-college mergers and acquisition warfare, tests participants' valuation and negotiation skills. Equity Research Competition, an inter-college event wherein the participants need to come up with their analysis of a listed company. CIFICO, International Finance Conference, where we not only hear from esteemed guests but also organize paper presentations on various contemporary financial themes. This year, we will be hosting the 11th CIFICO event. Investrix, a corporate panel discussion wherein stalwarts from the global finance industry come together on one platform. And today, we welcome each and every one of you to Investrix 2022. With an august gathering of industry stalwarts, we will be enlightened on the theme of resilience of Indian capital market and the emergence of alternative asset classes. Ever since the outbreak of COVID-19, there have been radical and sudden changes in the world and in various industrial sectors, and even in the way business is done today. Despite the multiple lockdowns and an atmosphere of chaos in India on a financial front, there have been notably 43 IPOs launched with a cumulative issue size of $4 billion in 2020, ranked 9th globally. And an equal number of IPOs worth over $12 billion were launched in 2021, thereby surpassing France by becoming the 5th largest country in the world in terms of market capitalization. Our analysis of BSE 500 companies shows that a conducive capital market along with a strong OCF generation enabled BSE 500 companies to reduce net debt positioning by a whopping 4 trillion rupees in the financial year 21. At the same time, along with traditional asset classes including cash, equity, real estate, commodities, and fixed income, we saw a rise in alternative asset classes like collectibles, insurance products, foreign currency, cryptocurrency, and NFT, ushering a new era in the field of investing. Thus, with a combination of resilient capital market and the rise of alternative asset classes, it will be interesting to see the directions in which the Indian economy will progress in the decades to come. Let us hear from the stalwarts themselves.
I'm glad to be a part of such an excellent team. Now, Investrix 2022 comprises of multiple sessions throughout the day. Let's have a look at the events lined up for today.
This is the pre-lunch session that we have, in which we have our guest speakers, the one-on-one discussion and panel discussions. In the post-lunch sessions, we have 2 one-on-one discussions lined up. Looking forward to the event.
I'd now like to introduce our chief guest for the event. We're honored to introduce our chief guest, that is Mr. Jim Rogers, who needs no introduction. Still, for the uninitiated, Sir is an investment guru currently based in Singapore and the chairman of Beeland Interests Incorporated. So was also the co-founder of Quantum Fund and Soros Fund Management. And to give you an idea about this mogul of the market, back in 1980, the Quantum Fund portfolio had gained 4,200% against the S&P's advancement of 47%. An expert in the commodities market, Sir is also credited with being the creator of the Rogers International Commodities Index. Now, it's our pleasure to introduce our host on behalf of ET Now, Mr. Ajaya Sharma, who is a senior editor's market anchor at Times Network, ET Now, and ET Now Swadesh. Sir is a part of the senior editorial team of ET Now, having worked with the Times Group for over 12 years. Market intelligence combined with macro analysis is a bedrock of Sir's work, and Sir is engaged with ET Now, Economic Times, and ET Print, the Times Group key offerings. Sir regularly interacts with top global and domestic fund managers on their portfolio allocation, approach, and quizzing top industrialists on their business strategies as a critical part of the work in order to spot themes in the investing environment and the big deals brewing before they become mainstream. We welcome you to Investrix 2022, sir. I'd like to hand over the mic to Mr. Ajaya now.
Good morning, everybody. Dr. Trivedi, Professor Punjabi, all the students out here. Thanks very much for inviting ET Now to be a partner of the event. We've been partnering your wonderful event for many years now. And I hope that a lot of students will be able to carry lots of takeaways, and it'll enhance their knowledge overall with the galaxy of speakers which are coming in. And it's so nice to be chatting with Mr. Rogers this morning. And in fact, it'll be an understatement to say that Mr. Rogers is an expert on commodities. Actually, he's an authority on commodities, and for 40 years. And global commodities have actually developed as an asset class right in front of his eyes, and he was very instrumental in shaping the entire ecosystem, as well as the thought process of people who have joined in last few decades in the commodity market. Just to give you a quick perspective why commodities market is very important is that, the more glamorous part of the asset class is actually equities. But very few people understand that commodity trading is many times more global equity trade which happens. And it is very important to understand the commodity market also if you want to be a good equity analyst, because commodities are the inputs of all several industries globally. So if you understand the backward part, how commodities are priced, how are they traded, all of that, then you become a better equity analyst and you start understanding stock markets also very well. So let's not make Mr. Rogers wait more. Mr. Rogers, good morning and thank you very much for chatting with us from this event of KJ Somaiya today. Let's start by understanding your thoughts on, right from when the mankind used to be hunter-gatherers and we used to depend on livestock a whole lot. Commodities have been part of the mankind. How have you seen the evolution of the importance of commodities in globally in our lives?
Well, first, let me say I am delighted to be here. I tell many people all over the world, and I have written it, that if you can only visit one country in your life, it should be India. There is no country in the world that has a combination of man-made sites, natural sites, food, languages, religions, everything. The women are obviously very smart and are always winning the beauty contest. Men are smart too. I mean, it's an astonishing country. So everybody should, as I say, if you can only go to one country in your life, it should be India. And I hope everybody will do it. And I have always been stunned and startled and everything else when I go to India. Let me see, am I not the only? Always when I go to India, I am always shocked, stunned, and delighted. Now, why can't I do it? I need someone from India here to make my video work.
There you are.
Can you see me now?
Yeah.
Yes.
Well, I don't know what keeps happening because I think I keep doing it. See, I need somebody from your institute here to make my video work. I keep hitting.
We got you. Got you back.
Now we are able to see you.
Let's hope it will continue. Let's hope it will continue. I think it's continuing. I also, just as an aside, I can remember one of my first trips to India, I read the Economic Times and I said, wow, what a fantastic newspaper this is. And I have been a great fan of the Economic Times, both the paper version and the TV ever since. So this is a very good day for me because it combines some of my favorite things in the world: India, Economic Times, et cetera, et cetera. So I'm delighted to be here. Thank you very, very much. As far as commodities, I can remember when I first started in the business, the Wall Street Journal had one page that was the, what happened?
Jim, we lost you again.
I know, I don't understand why this keeps happening. I'm not touching anything. And yet, can you see me?
Yes, we can see.
Okay, hooray. Now, I will show you. See, I'm not touching anything. So if it goes away, I need somebody from your institute here. Quickly. Everybody knows that the Indians know more about technology than anybody else. So I hope it works this time. When I first went to Wall Street, there was one page in the Wall Street Journal every day, the commodity page, and very few people read it. I realized early on that I should read that because it would give me one advantage, since other people didn't seem to know much about what was going on. If you wanted to invest in electricity, you needed to know about copper. In automobiles, if you needed to invest in cars, you needed to know about copper and lead and things like that. So I learned, for whatever reason, early on, And then I continued to invest in commodities among stocks, bonds, currencies, and everything else. And I continued to realize that commodities were very, very important. And in the late 90s, I was going to drive around the world. Some of you know I've driven around the world twice now, since I'm a little bit nuts. So I realized that commodities were proper. Now, see, I didn't touch it. I didn't touch it. Let me see if I can find it again. I'm here. Can you see me again?
Yes, we can see you.
Okay, I keep my hands up. You can see I'm not touching it. At the late 90s, I realized that commodities were probably going to be good again. There had been, in my first trip around the world, I realized there'd been very, very little investment in commodity production, and that demand was continuing to grow, that Asia was growing, India, China, everywhere had continued to growing, so continue to grow. So demand had to be getting better and better. So then I realized, well, I should invest more in commodities because there's going to be another bull market. Anybody who does a little research will find that there have been periodic bull markets in commodities, periodic bear markets in commodities, just as there have been in stocks. You know, frequently, I remember when I first went to Wall Street, the brokers always and still would tell customers that stocks always go up. I realized, wait a minute, stocks don't always go up. There are many bear markets in stocks and bonds and currencies and commodities, I learned. So I realized that if I wanted to be a decent investor, I better learn about all asset classes. I think that at your institute, you teach about all asset classes. And if everybody wants to be a good investor, they can come to your institute and learn about investing in all asset classes, not just stocks. Because if you're going to be a successful investor, you have to know about everything. I wish it were easy getting rich. It's not. At times, I was a professor at a famous business school in the US, and my students would always say, well, tell us what to read. They wanted which page, which chapter will tell us how to get rich. And I tried to explain to them, there is no chapter 3 to read to make you rich. There is no page 37 that if you read page 37, then you're going to be a successful and rich investor. Oh, I wish it were that easy. I wish it were that easy. So maybe if we go to your institute, we could all get rich easily, but I doubt it because I know investing is hard work. I wish it were easy. So I think we're here to discuss questions and answers, aren't we?
Right. So the idea, Jim, is that we'll just chat for some time, maybe 15, 20 minutes more, and then we'll start taking questions from students as well. Just your thoughts on the investing world now versus how you've seen it for the last 30, 40 years. Is it becoming difficult to generate alpha? Is it investing and making superior gains? Is it becoming difficult now versus how it was a couple of decades back? How are you seeing things change?
Oh, how I wish it had gotten easier because time has passed. There are some differences, you know, we all can get a lot more information a lot faster. Certainly over the past 200 years, 100 years, et cetera, things have gotten much faster and much more accessible. But 100 people can go into a room, can all hear the same information at the same time, but it's judgment that makes the difference. If the 100 people all hear the same thing, but only 4 or 5 of them will make the right decisions, only 4 or 5 of them will have the right judgment. I wish we could figure out a way to teach judgment. I don't know. I mean, we can all go to your business school, we can all read the Economic Times, etc. But I don't know how to teach judgment yet. I've certainly made plenty of mistakes in my life because I got the judgment wrong. I often get the facts, but it takes more than just facts.
So you just said that, you know, I hope it was so easy, but if over here, a lot of students follow markets and want to become successful investors, if you could tell with your rich experience, what are the ingredients, how to conduct yourself over the years in order to raise the probability to become a successful investor?
Well, there are a few lessons. One, don't follow the crowd. Very few people who follow the crowd are successful at anything, whether it's writing or tennis or sports or anything, merchandising. You really have to come up with your own way. And then you have to have the depth of knowledge and confidence to do it your way and not to follow the crowd. But again, in my way, and everybody has to find their own way. When I first went to Wall Street, I assumed everybody knew what they were doing. They were older, they were educated, they were experienced. It didn't take me long to figure out, these people don't know any more than I do. These people don't have a clue what they're doing, many of them and most of them. So I realized I had to read the Economic Times to find out what was really happening in the world in order to be successful. I then also realized I had to do it my own way. I knew people who were fantastic short-term traders. I mean, they could, if they owned a stock for a day, it was a long investment. They were great short-term traders. I'm terrible as a short-term trader. I'm probably the worst short-term trader in the world. So I had to learn my way, and everybody has to learn their way. My way is to try to find something that's cheap, where there are positive changes taking place, and then to invest. And since I'm lazy, that makes it easier, because then I can own it for a long time. I don't have to. Short-term trading is hard work. Not that investing is not hard work, but I had to find my own way, which I did. And sometimes I get it right. But I want to repeat you, I make many mistakes. And one of the things I try to teach students and everybody else is, don't worry about making mistakes. If you learn from them, it's fine. I made plenty of mistakes, but make your mistakes when you're 25, not when you're 65. Make your mistakes and learn from them when you're young and early. But the most important thing for me, if I had to say it in one sentence, but it's much more complicated, but it's supply and demand. If you can figure out where the demand for something is going to be going higher and where there's not enough supply, you will probably make a lot of money, whether it's computers or wheat or anything else. It's that simple. It's that difficult too. Because in the investment world, there are millions of people every day trying to figure out how to make money. And so it's not easy, because you're against millions and millions of people, and you must do your research, you must do your homework. This is not easy. Everybody loves to watch the television. They all say, oh, I could have bought Apple. This is easy. I could have bought Apple. I wish it were that easy.
Jim, I'm very happy that you touched upon that point, because right now we are in the phase of the market where scores of young millennial investors are entering the market, not only in India, but abroad. You can call them Robin Hooders or whatever. Here too in India, it is becoming a fad, investing. So if you could scratch that point a little more about short-term making money fast versus the long-term making money slow but more durable. Because short-term is quite sexy.
Well, back to lessons. One of the first and most important lessons is, do not listen to hot tips. Everybody wants to get rich this month. I am telling you, do not listen to hot tips, even if it's in the Economic Times. Do not listen to hot tips. Only invest in what you yourself know a lot about. I mean, everybody watching this knows a lot about something, whether it's cars or fashion or something. Stay with what you know. Do not listen to hot tips. If you only have 20 investments in your life, you will probably get rich, because you won't be jumping in and out of things all the time. You will only stay with what you know a lot about. But then you'll say, well, that's boring. Be boring. If you want to be rich, if you want to be successful, do not worry about being boring. Do it your own way. Figure out your own way, and then do it your own way. I wish it were easy. Oh my gosh, I wish it were easy. I wish we could be lucky. Oh my gosh, if I had had good luck, I probably would be very rich right now. Don't think luck is going to help you. It's not.
How important is the role of skill versus the role of luck in being a successful investor over the long term?
The role of what?
Role of skill. Role of skill. Skill versus luck. How much is your skill being tested in the market, and what is the role of luck in it?
I repeat, if I had had good luck, I guess I'd be very, very rich right now. When I was starting, I will tell you, when I was starting out at one point, I made a judgment which turned out to be right, and I tripled my money in like 5 or 6 months, and everybody around me was going bankrupt. I said, this is easy. This is so easy. I am so smart. I'm going to be so rich. Well, the rest of that story is 6 months later, I'd lost everything. Now, whether it was luck or whatever it was, but I will tell you, it taught me how much I did not know. And it taught me that I had to learn a lot. So I developed skill, if you will. I have learned many times that luck is not going to save me. The only thing that's going to save me is doing my research and developing good skills.
Mm-hmm. Jim, I must tell the students over here that you have worked with some of the legendary people. You are yourself a legend as well, but people like George Soros in the past. Talk to us about your days then, and how was George Soros so successful? A couple of things which not many people know about. If you could share, you worked with, very closely with them.
Well, yeah, George Soros and we did start the company together, but that was a long time ago. That was 40 or 50 years ago. You might as well ask me about my first wife, or where I went to university or something. It's not terribly relevant. I will answer your question. We both loved the world, the investing world. He was a much better short-term trader than I was, but I was much better at finding good investments, and I loved doing the research. I loved finding things that were cheap. A couple of sentences of whatever success I've had, it's been finding things that were cheap. And if something is cheap, it's usually ignored. That's why it's cheap. But if I could find things that were cheap, where there were positive changes taking place, I could probably make a lot of money and have great success. So I guess cheap and change is what I did, but other people have their own way. And we both love what we were doing passionately. And he was a good trader, and I was reasonably good at doing research and finding new investments.
So how are you scanning the environment right now? Where do you see opportunities in the investing environment today?
Well, if you look around the world, you see that bonds are certainly a bubble. Worldwide bonds have never been this expensive in the history of the world. So bonds are definitely a bubble. Interest rates have never been this low. Property in many countries is becoming a bubble. If you go to Korea, New Zealand, many places, I'll let you talk about India and property if you want to, but property is becoming a bubble in many places. Stocks are developing bubbles in many countries. I mean, Samsung goes up every day. Tencent goes up every day. So the many stocks in America are always going up. So we can see bubbles forming. You mentioned before, many new people and young people. Well, I will tell you, it always works this way. And I urge everybody to do their research and read about the history of markets. After markets have gone up a long time, a lot of new people come into the markets and they all tell their friends, I have discovered this new thing called the stock market, and it's fun and it's easy and you can make a lot of money and it's easy to make a lot. It always happens. Don't think it doesn't happen. And unfortunately, they'll use the young people because the older people have learned from previous bear markets that it's not easy and it's hard. But it always happens. People come pouring into the market and they tell spread stories. Another thing that comes up, SPACs. SPACs have been around for 300 years, but at the end of a long bull market, SPACs come again. I hate to say it, but I've seen this movie before. if you do your research and do some little studying, you will see, and you will be a better investor probably if you understand it's not easy, it's not simple, and there are lots of things to learn.
Jim, where do you see assets cheap? Is there any asset class which you find cheap right now?
Well, the only thing that's cheap, I mentioned everything else is expensive. I mean, commodities are the only cheap thing that I know of. Silver is down 60% from its all-time high. Sugar is down 60% from its all-time high. When you talk about things being down 60%, that's not a bubble. That's probably cheap, and maybe one should be looking. Just because something is cheap does not mean you should buy it. You have to do research to find out if there's something changing, which is going to change it to make it expensive. But the only asset class that I see worldwide that is cheap commodities.
Mm-hmm. Especially, Jim, I wanted to ask you, when we look at the real long-term, 8, 10 years, 15, 20 years type of horizon, the way population is increasing globally, what happens to food commodities? Most of the countries are working in the direction of securing adequate food supplies. How are we going to feed so many mouths? What will happen to food commodities, agri-commodities? Production is not going up in the same way.
Well, I'm extremely optimistic about agricultural commodities here as we speak in 2022. They've been a disaster for a long time. Another thing I have learned in the investment world is if something is a disaster, you better look, because maybe you're going to find great opportunities. In Asia, in Japan and Korea and China, they have a character, which means that disaster and opportunity are the same thing. Well, the Asians have been around a lot longer than we have been in the West. And so that disaster and opportunities are often the same thing. So agriculture is a disaster, been a disaster for a long time. So I own agricultural investments and I am looking for more.
And how do you see the future of energy, oil, renewables?
Well, we all are going to have electric cars, apparently. It seems to be quite the trend right now. But one thing that I quickly will tell you is that electric cars use 4 or 5 times as much copper as petrol cars do. They use a lot more lead and lithium and other things than petrol cars do. So if we're going to have electric cars in the future, I would urge you to learn about how these cars are going to be powered, and it's going to take some kind of energy. Electricity has to come from somewhere. And in the meantime, we still do use oil, gas, coal, etc. And I have investments in energy, oil, gas, and coal. Yes, if the world changes, and it always is changing, it's not going to end immediately, and the known reserves of oil continue to decline. Fracking came along. Fracking turned into a bubble. We still have fracking, but it's nothing like what it was before. So known reserves of energy, of oil and gas, continue to decline all over the world. One thing I have learned in the investment world is you can have a bull market in something even if demand goes down, because if supply goes down faster than demand, you can make a lot of money, especially in a place that people will not be looking because they think, there's no demand. I'm going to tell you a quick example. Once upon a time, paint, petrol, everything else had lead in it. And then the world came along and said, no more lead in paint, no more lead in petrol. And so everybody said, well, that's the end of lead. Forget it. If you go back and look, you'll see that the price of lead went through the roof because there was no supply. So even though demand for some things went down, the supply went down faster and you could make a lot of money. So always please remember supply and demand, whatever you're looking at.
Excellent point. That's a very valuable point. Jim, also want to understand and also help our students understand the role of the dollar, because all global commodities are traded in dollar mostly. What is the role of dollar in international capital markets and commodity in particular?
Well, I'm an American citizen, so I have some experience with dollars. I've made and lost money in trading in dollars over the last few decades. History will show you that has always been a dominant currency or medium of exchange. History will also show you that nothing has stayed on top for more than 100, 150 years or so. It's always changing. The US dollar has been on top for a long time now. Unfortunately, and I don't like saying it, I'm an American, but I would suspect that that era is coming to an end. The US is the largest debtor nation in the history of the world. No nation has ever been this deeply in debt. I own a lot of US dollars at the moment, so you should say, well, why do you own them if they're so deep in debt? I own them because whenever there's a crisis, people look for a safe haven. Many people think the US dollar is a safe haven for historic reasons. So what my plan is that when the next crisis comes, the US dollar is going to go up a lot. It'll probably get overpriced. It might turn into a bubble. I hope I'm smart enough to sell it at that point because, again, the US is the largest debtor nation in world history. And history is very clear that when countries get themselves into this kind of situation, they start to lose their status. 100 years ago in the 1920s, for instance, the UK was the richest, most powerful country in the world. There was no number two in the 1920s to the UK. You all may remember that because the UK was around in India in those days. Well, 50 years later, the UK was bankrupt. Only 50 years later, the IMF had to fly into London airport to bail out the UK, which only 50 years later had been the single richest country in the world. I don't like saying it, I don't like seeing it, but, and I do own a lot of dollars at the moment, but I do know that our role as the world's reserve currency medium of exchange is coming towards an end, not an end today. I told you my market timing is bad, but I know it's coming.
Sure. Understanding our geopolitics is also plays a very important role if one has to, be a good investor. Which other regions of the world? Asia you mentioned before, but which other countries you're bullish on? 20, 30 years far out, mid. How do you see the world order actually stack up?
Well, that is another thing that is always changing. Nobody has stayed on top forever, as you know. You go back a few hundred years, India was one of the most extraordinarily successful countries and rich countries in the world, as you well know. If you don't know it, go out, look out the window. You will see how rich India was at one time. China was very rich. Japan, oh my gosh. Japan at times has been extremely rich. And they are now, but in my view, they're in decline now. They've peaked. As I look around, I certainly expect China to be very successful again. I have investments in Russia. I don't expect Russia to become the great power that they think they would like to, but I see opportunities there because Russia is hated so much. Korea, once they open the 38th parallel, the Korean Peninsula is going to be extremely, extremely exciting. I have new investments in a couple of African countries. Part of the problem, to answer your question, is a lot of bull markets going on right now. If you read the Economic Times, you'll see that many countries and markets are doing well. So it's getting harder to find things that are cheap. As I said before, the only class that I know, asset class, are commodities, because stock markets around the world are doing very well, have been doing very well. I mean, look at India. I think India was the strongest stock market last year, or certainly one of the strongest stock markets last year. I mean, somebody's been doing something right.
Do you also keep a very close eye on political leaders across the world, because their policies also shape how countries will grow? If you can share your thoughts on any of the global political leaders that you read about and you are observing the work well.
Well, I've read enough history and been around long enough to know that most politicians are pretty hopeless. They can't get a real job, so they go to work for the government. That's why they have government jobs. Yeah, and central bankers too. You know, India had a great central banker a few years ago. I think he's a professor now, but especially central bankers are usually pretty hopeless. History would show they're pretty hopeless. We certainly have hopeless central bankers in America. I can remember one in my lifetime who was any good, but most central bankers, most politicians, most government people. There was a survey done in the United States recently of politicians, and the study showed that the people who were successful politicians in America are the people who were good when they were in primary school, were the people who were good at playground. They didn't know much about math. They didn't know much about reading and writing, but they were very good at playground. Well,
Jim, the central banker, the professor central banker you're referring to, by the way, was sitting on ET Now just last evening. So we were having a chat with him last evening. You can catch that interview. The other thing is, you're based out of Singapore. Lee Kuan Yew was a legendary leader. I mean, now his son is, I believe, the prime minister, and he has done wonders to the Singapore as a country. So there have been some very good political leaders as well. The world has seen, isn't it?
Oh, yeah, Lee Kuan Yew did a fantastic job. He did some bad stuff, but I mean, look out the windows. Singapore has been one of the most successful countries in the world for the past 50 years. Yes. But Lee Kuan Yew's dead. I thought we were talking about living politicians. No, there's no question. You know, the Nobel Prize for Economics has never been given to an Asian. The Nobel Prize for Economics started in 1969. Since 1969, the West has basically gone into decline. And since 1969, Asia has skyrocketed and become much more successful. No Asian, well, one Asian, but he worked at Cambridge University in England. No Asian has ever won the Nobel Prize for Economics, even though the West has been in decline since it began, and Asia has been on the rise. I can tell you, I mean, you know, there's all sorts of these things that your central banker, I wish he were running the US central bank. I wish he were running your central bank again.
Yes, that's correct. I mean, the way they have really done the amazing job of handling the crisis, the COVID crisis, has been remarkable. Jim, you studied finance, you studied philosophy. What are the subjects you would recommend to students who want to become great and good investors, successful investors going forward? Because there is one school of thought that finance and hard subjects. The other school of thought is that even softer subjects, music, philosophy, all of that shape your brain very well. So which are the subjects to your mind which you recommend?
You should only study what you yourself love and are passionate about. Yes, I can tell you, I would strongly urge you to study philosophy. I strongly urge you to study history. But then you'll say, wait, I want to be rich. I'll say, okay, study history. Study philosophy. History will teach you the world is always changing. Philosophy will teach you how to think for yourself. But you might say, well, I don't like history and philosophy. Then don't study it. Don't study it. If you love gardening, study gardening. The most important thing is for everybody to study what they love, and that's how you will become successful in life. You can go to Wall Street if you have studied something else. I studied history and philosophy. I never had an accounting. I never took an accounting course in my life. I never took a stock market course in my life. I didn't know anything about it when I went to Wall Street. I thought stocks and bonds were the same thing. I knew nothing about the investment world when I went to Wall Street. If you have brains and if you love it, you will be successful. And don't worry whether you studied gardening or finance, you will be successful. Now, that of course, you've got to, if you go to the right schools and you're at the right school, then maybe they will teach you. But even if you're at Investrix or something, only study what you love. That's how you will be successful.
Great. Let's throw open the dais for some questions from our students community as well, guys.
Yes, sure. Anybody who wants to ask questions is allowed to raise their hands and they can ask questions. Yes, Hitesh sir, you may please go ahead.
Good morning, sir. Thanks for being a part of our event. My first question, I have a couple of questions. Uh, Based on your vast experience in commodities market, it takes time for us to study the cycles. So, can you help us with how to identify where we are in the commodities cycle currently as of now?
Well, that at least is somewhat simple to answer. Get out the charts and you'll see that commodities have been going down for quite some time now. So we're certainly not at the top. I told you silver is down 60% from its all-time high. Sugar is down 60%. You can get, even oil is down 40 or 50% from its all-time high. So it's fairly simple to go and look what has happened. I'm not a chartist. That's not how I invest, but I do look at the charts to show me what has happened. The charts will show you the history of any asset class, and the charts will show you that commodities have been going down for some time. And that doesn't mean you should invest, but if you ask me, since commodities are down and have been going down for a while, it may be an opportunity. And when I look at commodities now, I see that supply and demand are changing. And if you can find something that's cheap where supply and demand are changing, you might find opportunities. And that's why I think commodities have been making and are making their bottom, and where there may be great opportunities for the next few years. Okay. But you should go to Investrix. They will tell you.
Sir, on the same lines, is it always good to be a contrarian to be successful as you have been, sir, in past?
Well, yeah, people call me a contrarian. I didn't know what a contrarian was. I never thought of myself that way. I just tried to find cheap investments. And if something's cheap, it's usually ignored. And then people said, oh, you're a contrarian. I never thought of that way. I was just trying to buy low and sell high. And anything that's low is usually ignored. And okay, yes. If you want to be a contrarian, be one. But I mainly just tried to find cheap investments, which meant obviously that they were ignored and nobody was interested. But if I could find things that were cheap, first of all, it reduced my risk because it was already cheap. But if I could find positive changes, I might make a lot of money. And even if I were wrong, I probably wouldn't lose a lot of money because it was already cheap. So yeah, if you want to be a contrarian, I never thought of myself as a contrarian. I guess I am, but it's just because I try to buy low and sell high.
Thanks.
So Deshna, would you want to go next?
Yeah, sure. Good morning, sir. I hope I'm audible. Yeah. So basically, we're talking about how the US dollar right now is at a high, like it's the most traded currency, and that could change as history repeats every 100, 150 years. So I would want to know, what do you think would be the next at par currency to the US dollar?
You see, I told you India was full of really smart women. And here you have one right here. Well done. Good question. You asked me a question, and I will tell you, you're such a smart woman, I don't have an answer. I can tell you what I can see on the horizon. If I had to pick a currency now, I would say it would be the Chinese currency, but that's absurd. Chinese currency is a blocked currency. You can't buy and sell it. You know, you can buy and sell the Australian dollar, but you cannot buy and sell the Chinese currency. But China has a big enough economy, big enough population, strong enough balance sheet. It's the only one I see on the horizon. But I'm not telling you it's going to be the Chinese currency at all. I'm just saying it's the only one I see on the horizon at the moment that could compete with the US dollar. There are several countries, including India, that are looking for a competitor for the US dollar. You know, the international currency is supposed to be neutral so that anybody can use it. But in Washington, if they get angry at you, they say, you cannot use the US dollar anymore. Well, there are many people, rightly so, such as India, China, Russia, who are saying, wait a minute, that's not the way the international medium of exchange is supposed to be able to work. Everybody's supposed to use it and buy and sell it with no restrictions. So many countries, as I say, including India, are looking for something to compete with the US dollar, and they may come up with a new international currency. We need something to compete with the dollar. The fundamentals of the dollar are becoming negative. The political aspects, I just told you, they don't play by the rules in Washington. So everybody is looking for something. I suspect it will be the Chinese money, but I do not know yet, and certainly would not answer your question that way. I am looking just like everybody else. You're there in India. You can tell me. You can tell me what Delhi and Moscow and Beijing are going to come up with. And Brazil is looking at, they're part of the same group.
Thank you, sir. So just since we were talking about this, I really want to know, since US dollar, like we in India, we do have the pairs, we do the USD INR pairs and everything, but INR is not a major currency with respect to what it goes on around in the world. So what is the perspective of people basically when they trade, like right now, how the present scenario is, people don't consider INR to be the next major currency also. Do you really think it is going? What is the perspective people have actually regarding INR? Why is it not going up that way?
When you say INR, are you talking about the Indian currency?
Yes, sir.
Well, I told you before, if you can only visit one country in the world, you should go to India. It's a phenomenal country, but you also have one of the worst bureaucracies in the world, and you're full of restrictions. You know, if I want to buy and sell something in Australia, I just go on my computer and do it. You cannot do that. I'm a foreigner, I'm not Indian, but you cannot do that. There's so many restrictions. Your currency is blocked. I mean, this is 2022. This is not 1922. I don't know why India restricts its currency and blocks its currency. I don't know why India blocks trading in so many assets in India. India should be, and has been at times in history, a very powerful and successful country. So I wish you would open your currency. I wish you would open your markets completely. I remember in 1990, Delhi said, we're going to privatize the economy, and we're going to make our economy competitive and private like the rest of the world. Everybody, including me, got very excited. Well, in the next few years, Delhi privatized 5 companies, 5. And one of them was a bakery. So, I mean, I love India, but sometimes, your politicians might be worse than mine. And that's hard to say that anybody could be worse than American politicians. I wish you would open your economy. I wish you would open your investment, your currencies, your stocks, and everything else. And then, yes, India would be a competitive currency, but a blocked currency can never be a competitor on the world stage, whether it's China or America, anybody, nobody can. India, you have to open your currency and your economy. And I hope, Indian agriculture, for instance, I told you before, I'm very optimistic about agriculture. Indian agriculture at times in history has been astonishing. You have the weather, the people, the soil, everything. But Delhi has so many controls, so many restrictions on Indian farmers. It's illegal for an Indian farmer to own more than 5 hectares. Well, 5 hectares is great, but how are you going to compete with Brazil if you own 5 hectares, and in Brazil they have 50,000 hectares, or Australia or Canada or other countries? I wish and I hope that someday India will be as open as it used to be when you're periods of greatness. But unfortunately, as long as you have blocked currencies, blocked economy, it's difficult to develop the greatness that India has had in the past and that India will have again.
Thank you, sir. Thank you so much.
I'm sure that the next time I come to India, I will be arrested.
Next, Kamlesh, would you want to go?
Yeah. So good morning, Jim sir. So I have a question that I read one of your interview. So in that you have spoken about the bear market, which according to you will be the biggest that you have ever witnessed. So sir, can you put some light on that?
Well, yes, as I've said before, I've read about a lot of markets in my life, a lot of history. And as you probably know, in 2008, we had a huge bear market worldwide, an economic problem. And it was because there was so much debt. I mean, the debt everywhere was very high. Well, since 2008, the debt everywhere has skyrocketed. Now there's gigantic debt all over the world. So when I say the next bear market is going to be the worst in my lifetime, to me, it's a pretty simple statement. I'm not trying to be dramatic or something. I know what's happened to the world debt in the past 14 years. It is skyrocketed. And we always have bear markets. We always have anyway. And so the next one has to be the worst in my lifetime because the debt is so much worse. Now in Washington, D.C., they say, no, we're not ever going to have a bear market again. We have figured things out. Well, if you believe the politicians and the bureaucrats in Washington, don't listen to me because they say we're not going to have any more bear markets. I would tell you my reading of history is we are going to have more bear markets and economic hard times. And the next one has to be the worst in my lifetime because the debt is so staggering.
Yes, so you have all answered the question. So thank you.
Aman, would you want to go next?
Yes, sure. First of all, thank you, sir, for conducting this session. This has been really an insightful session. I wanted to ask about, you mentioned that if something is cheap does not mean you buy that, right? Like silver is 60% cheap today, and it does not mean that you go and buy that. So how do we value that we need to buy silver today or not? How do we decide that?
Wait, I'm sorry, you were talking about buybacks? Is that, did I hear the question properly?
Sir, I mentioned that you said that if something is cheap, it does not mean that you go and directly buy that. You analyze that, right?
Well, if you're going to be an investor, you need to do a lot of analysis. Yeah, so whatever you're investing in.
So how do we evaluate commodities? Because they don't have, they cannot be valued just like stocks are valued. So how do we value silver?
Aman, that's a very good question. I told you before that there are a lot of very smart people in India, and obviously there are a lot of smart people at Investrix. Nothing is easy. I will repeat to you again, there are millions of people every day trying to figure out whether to invest in stocks, bonds, commodities, everything. With commodities, it is very directly supply and demand. Everything is supply and demand, stocks, bonds, everything, currencies, but especially commodities. And it's much simpler. You have to figure out the supply situation. And that's not always easy. And you have to figure out this demand situation. I mean, if you have cotton, for instance, are people going to want more cotton for whatever reason, changes in fashion for whatever reason? But you also have to figure out the supply situation. You have to, and it's not easy. You have to figure out how much cotton will be planted. First of all, how much cotton is in inventory, how much cotton is there existing in the world now. And then you have to figure out, okay, how much cotton will be produced? How much cotton are people, how many hectares are people planting? Will there be good weather? These are impossible questions to analyze, but this is what you have to figure out. Will we have good weather? Will we have proper production of cotton going forward? And then will the demand be there? Are people going to change? Are they going to start using synthetic materials? Will the demand be there for cotton, or will fashion change so that everybody wants natural products again? I mean, these are the kinds of things you have to figure out. And I hasten to tell you, it sounds easy. But remember, right now, there are millions of people all over the world trying to figure out the supply-demand situation for cotton. If you can figure it out, please do not announce it on this show. Send me an email later, okay? And then we can invest in cotton once you figure it out. I will do my homework. I'm not going to rely just on you, but if you do your research and you have the answer, please send me the answer and I will research it too.
Sir, I have a follow-up question. Other than the supply and demand side, we also do technical analysis for commodities?
Well, for all commodities, that's the way you do it. And if you ask me, I will tell you how I often start. I look to see which commodities are down the most, which commodities are the cheapest on a historical basis anyway. Right now, for instance, copper is going through the roof. Everybody's buying copper for some of the reasons I mentioned to you before. Copper for me is not a place where I'm going to spend a lot of time. I own copper, but I'm not going to spend a lot of time now trying to figure out whether I should buy copper or not. I will get out the list of commodities and see which commodities down the most, which commodities are down the most. And I would say, well, maybe that's a place to start looking because at least it's cheap. Doesn't mean I should buy it. Just means it's cheap on a historic basis, and maybe that's where I will find an opportunity.
Thank you, sir.
Thank you.
Thank you very much, sir. Aishwarya, would you want to ask your question? I think we'll take just one question for now, given the constraint of time.
All right. So, good morning, sir. I mean, it's morning in India, so there's that. Then, considering how many businesses are exiting China, its biggest contributors to economy is manufacturing and construction and mining. But considering how the manufacturing sector is like expected to go down because of the businesses exiting the country, what avenues of their economy would you believe are expected to become the leaders of their for contributing towards their economy, would you say?
Well, back to something that I have mentioned before, agriculture worldwide has been a disaster, and especially in China, because over the past 30 or 40 years, everybody has moved to the city and or to manufacturing. And Beijing knows this. So I've already explained to you that agriculture has probably been making at a bottom worldwide, and the fundamentals are changing. But Beijing understands that too. And Beijing says in the past 40 years, farmers have done badly. The cities have done very well, but the people in the countryside and the farmers have done very badly. So now Beijing will do just about anything if you're a farmer or you live in the countryside to help you. They know they have to do something to help the countryside. They know they have to do, or they think they have to do something to help farmers. So agriculture in the world has making a bottom, if you ask me, but especially in China, because if you like the sun, Miss Mohan, is your name Mohan?
Yes, sir.
Miss Mohan, if you like being in the sun and getting dirty, and you like growing things, maybe you should go to China and become a farmer. They'll give you anything you want. India, it's hard, but in China, they'll love you. So agriculture certainly has a great future in China, and it's cheap because for all the reasons that we said before. But other things as well, if you look at transportation, tourism in China, like the whole world, everybody has suffered. And if you learn to buy low and sell high, you might find great opportunities in Chinese transportation, tourism. I own Chinese airlines, for instance. You might find opportunities in places like that. Do you know how to drive a tractor, Ms. Mohan?
A tractor? No, never tried that, sir.
You don't know how to drive a tractor?
No, never tried a tractor, sadly.
Okay, well, at Somaiya Institute of Management, do they have tractor driving lessons?
I suppose not.
Well, maybe you should start a tractor driving lesson at your institute, because you've already explained one thing that I loved. They don't even teach you. you don't have much competition. I told you before, if there's not much competition, it might be useful. I'm not very smart, but I like to go where there's not much competition, because then it may give me an advantage. When I went to Wall Street, my professors would say things to me like, why would you go to Wall Street? The city of London is a backwater. Wall Street is a backwater. And none of my classmates, nobody wanted to go to Wall Street in those days. Now, of course, everybody wants to have a hedge fund in her hotel room or in her dorm room. But in those days, nobody wanted. They thought I was a nut to go to Wall Street. Fortunately, I didn't know. I was not smart enough to know. And I loved it. So I went. But maybe you should try tractor driving. You might like it.
Sure, thank you for that. I'll give it a try definitely someday.
Where are you from, Ms. Mohan?
Sir, I'm from Bihar. It's a fairly poor state of India.
Well, that's a start. Maybe there's less competition. Are there lots of farmers there?
Yes, there are actually quite a lot of farmers, and mostly they contribute to labor, the seasonal laborers in different states. So the migrant laborers a lot from Bihar.
Okay, well, you have been to a famous institute of management. Maybe you can go back and manage the farmers.
That would be quite interesting.
Who's next?
Very much, sir. Thank you, sir. I myself am an agriculture graduate, and I also come from Bihar. So I am happy that Aishwarya asked this question and your focus on agriculture and commodities. Really happy to hear that from you, sir.
Well, I want to just say to you, agriculture worldwide is making a bottom and has a good future, but India, for whatever reason, India makes it difficult to have a success in agriculture. I told you that they have a lot of laws that they think are helping farmers. They are not helping farmers in India. They should open the economy, make it a free market in agriculture, and then India could be and has been in the past one of the great agricultural nations of the world. That's hard now.
Definitely, sir. Definitely. Aparna, ma'am, would you want to ask your question, please?
Yeah, I know we are short of time, so I will just try to make it quick. Thank you, Jim. It has been a pleasure listening to you. I just wanted to ask a question. We all have read in the papers that inflation in the US is at a 40-year high, and everybody expects the Feds to start raising interest rates. So my first question is, do you think the Fed will hike interest rates as sharply as they were hiked in the 1970s by Paul Walker, and what will be the effect on commodities and the stock market? That's my first question.
Wait. I will answer both your questions, but let me do the first one first.
Yeah,
what year were you born?
I was born in 1971.
Oh, that's why you've heard of Paul Volcker.
Yeah.
I was going to say,
yeah.
I'm sure even the ET reporter never heard of Paul Volcker. Yes, we do. Throughout history, when you have a lot of money printing and a lot of money borrowing and spending, it has always led to inflation. Now, the politicians will tell you, no. We know we've solved the problem. They haven't solved the problem. So yes, we have had more money printing than we've ever had in the history of the world. In the last 2 or 3 years, we are going to have more. We have more inflation, and it's going to get worse and worse. I hope that the central bank will try to do something to stop it. They're not very smart people, as I said before. That's why they work for the government. What will happen is they will raise interest rates, but somewhere along the line, markets will go down, and then the bureaucrats will get scared because they don't know what they're doing, and they're not very smart people. They don't know what they're doing, and so they will try to stop. They'll stop raising interest rates, or they'll print more money. They'll do something. The markets will have a big rally because they're trying to keep their job, but that will probably be the last rally. That's my view of how things are going to work, and that is the rally when I will start selling shares again, because it will probably be the last rally. One of the things that, at least when I started in the investment world, a rule of thumb, no rule of thumb works always, but The rule was when the central bank raises interest rates 3 times, get out, get out, get out. And not the first time, not the second time, but the third time, you better get out. So that's how I look at the world right now.
Right. And my last question, sir, was what is your take on cryptocurrency?
My what?
Your take on cryptocurrency. What do you think of Bitcoin?
You were born in 1971? Wow. Well, a lot of people I know have made a lot of money buying and selling cryptocurrencies. A lot have lost a lot of money. We don't hear about the people who've lost all the money. But as you know, hundreds of cryptocurrencies have already gone to zero and disappeared. But right now, they're great trading vehicles. I'm a horrible trader, so I don't bother. Now, the crypto people tell you cryptocurrencies are going to be the new money and are going to replace money. My view on that, and by the way, all over the world, money is going onto the computer. If you go to China, you cannot take a taxi with money. You cannot buy ice cream with money. They're ahead of the rest of us, certainly ahead of America, but America and everybody else is working on computer money now. So all money is going to be on the computer eventually. But it is my view, having read some history, that governments do not like to lose their monopoly, do not like to lose their control. And eventually, when I'll use the US, when the US says, okay, this is money now, but if you want to use that money over there, you can use that money too. That's not the way Washington works. That's not the way the politicians and the bureaucrats in Washington think. They want to keep their monopoly, they want to keep their control. And I suspect that they will continue, that they will do something to make it very difficult to use crypto money if it becomes money. As long as they're trading vehicles, who cares? At least I don't care. And I doubt if the politicians will either.
Thank you, Jim. Thank you. That's all from my side.
Thank you.
Thank you very much. Sir, you've really enlightened us on a wide range of topics. Do we have any other question? Because we still have a couple of minutes. And if Yash, you had a question earlier. Do you want to ask your question?
No, Aravi, thank you. Ma'am has already asked both of my 2 questions. I guess she was reading my mind.
That's great. That's great, sir. Hitesh, sir, would you want to ask anything more that would help in building knowledge for all the students and the audience?
Well, if nobody has a question, I just want to say one more thing. I'm not going to say that India is one of my favorite countries, but I am going to say, because I am speaking to students, please study what you love. Just pursue your own passion. There are many people in the world who never figure out their own passions, or they never pursue their own passions because they're afraid, or their parents or their teachers or their friends or somebody says, that's crazy. If people tell you it's crazy, you're probably doing the right thing. You're probably going to be one of the richest people in India someday. So please, if you can, figure out your own passion and pursue that. Don't listen to your friends, your parents, your professors. Don't listen to anybody. Figure out your own passion and do that. And someday you're going to be one of the most successful people you know. And, you know, even if you're not a big success, you don't care. You're happy. And if you're happy, think of all the people in the world who are not happy because they're doing something they don't like. But that's my strongest advice to every student in this room.
Thank you very much, sir. Thank you, sir.
Can I ask a silly question?
The sillier, the better. Yes.
Thank you so much. I'm not even a novice in finance area. Out of curiosity, I want to ask you a question. And that is, how do you think the ESG factors would affect the valuation of companies going forward?
The what factor will affect companies going?
The ESG factors, the environmental, social, and governance factors.
Well, yes, it's an insightful question. everybody seems to be very keen now. Whether it is valid or not, doesn't matter. It's going to happen. It is happening. It's going to happen. It's going to be a big expense. I'm a director of a few companies, and I will tell you, we have to do it whether we want to or not. It is a big expense, but you cannot, certainly not in the investment world, you have to have answers for questions like that. And your customers are going to ask more and more and more. So in my view, and again, it doesn't matter about my view, I can see what is happening. More and more companies are going to have to pursue the avenue. They're going to have a department to do something to make sure that they're doing what everybody wants. It's a new expense. Is it a productive expense or not? We'll know in 15 or 20 years. I don't know. I'm going to give you one slight example to show you that maybe we don't know. Have you heard of Lehman Brothers by any chance?
Yeah.
Okay. Well, Lehman Brothers had been around, a famous American firm, investment firm, been around for 150 years. But it went bankrupt in 2008 after 150 years. Lehman Brothers, like everybody else in America, had a diversity department, a group of people who made sure Lehman Brothers had diversity in its workforce, et cetera. Lehman Brothers had more people in its diversity department than it had in its risk department. I repeat, they had people in, they had a department for risk, R-I-S-K, to make sure that they were controlling their risk. But their diversity department was much, much, much bigger. I think you know the rest of that story. They went bankrupt after 150 years because they were spending more money on diversity than they were on risk. Now, there were companies who were spending money on diversity that didn't go bankrupt. So don't think I'm saying diversity is bad. I'm just explaining. You need productive entrepreneurial people, whatever you're doing.
That's right. Okay, thank you. Thank you for the answer.
That was a question from our honorable director, ma'am, and we are happy that, ma'am, you put this question across. Omkar, would you want to ask your question?
Yeah, sure. Thank you. Good morning, sir. So my question is like currently, as we know, world is moving towards the green energy sources. So how it will affect the future of OPEC countries, as we can see currently, like completely depending on just oil economy. We have seen that how the situation of Venezuela is. So how it will be for the other countries in the future, and if they fail, then how it will affect the remaining countries in the all over the world.
Very good question.
Well, I've been investing a long time, including investing in oil for many decades. I never paid too much attention to OPEC because it's more public PR than anything else. Yes, it does have an effect. And if OPEC tomorrow says the sky is blue, everybody's going to act because they say, OPEC said the sky is blue. But the basic, in the end, it's the fundamentals of energy that determine things, no matter what OPEC says or anybody else says for that matter. And you have to understand the supply and demand of oil, or you're not going to be successful. And those fundamentals have much, much more to do with the world, your world, my world, than OPEC does. OPEC was founded in 1961, I think it was, and every year they raised the price of oil, and every year the market laughed at them and ignored them. Eventually, supply and demand got out of whack, and the price of oil went through the roof. It wasn't because of OPEC, though. OPEC had been raising the price of oil for many years, and the market ignored them. If you want to listen, go to their parties. They have big meetings, big parties. But if you want to understand what's going to happen to energy and energy prices, figure out the supply and demand. The known reserves of oil have been in decline for several years. Fracking came along, changed that for a while, but now fracking, for a while there, if you could spell fracking, people would give you money to invest. But now the world knows, wait a minute, they have to make money. Fracking is still there, but it's not a bubble anymore. The fracking bubble burst. And in the meantime, known reserves of oil decline, even in Saudi Arabia. I mean, Saudi Arabia won't admit it, but everywhere, oil reserves are declining. And that's what's much more important to you and to me, or to me anyway, and to the world. You got to figure out what's going to happen to the supply and the demand of oil. Yes, we're going to have electric vehicles. Okay, fine. But then you have to figure out the demand as well and the supply. And from what I can see, the supply and demand of oil is not great going forward, not because of OPEC, but because of the world.
Yes, sir. Thank you, sir.
I don't know if I answered your question. It's probably not the answer you wanted, but go to some of their parties.
Yes, yes.
That's the best part of OPEC.
Yes, sir, definitely.
Thank you, sir. Momita, would you take the question?
Yes, Arvi. Thank you. Hello, sir. I was curious to know whether this pandemic has brought about any change in your perception or your take on the market and how you take financial decisions, and whether you had any advice for us on how to handle such crisis.
When you say, which market did you say, do I have any change?
It's a commodity market or money market, or how you take financial decisions.
Well, as I said before, the cheapest asset class that I can see around the world as a class are commodities. I don't see any, I mean, copper is the only commodity I can think of, which is really, really strong in the past few years. But other than copper, and copper has, I told you, if electric vehicles come, they're going to use several times as much copper as petrol vehicles use. So I don't know if it's, I just know it's gone up a lot. So all commodities that I know of, nearly all commodities, are still cheap on a historic basis. Doesn't mean they're going to go higher, but that's the main asset class where I am looking for opportunities now. I mean, the Indian stock market's making all-time highs. You've had a brilliant stock market. I don't like to rush around and find something. My parent, I hope your school is teaching you to buy low and sell high. I hope they're not teaching you to buy high and hope it goes higher. Any success I have had has been buying low and selling high.
Thank you, sir.
So what about selling at high and buying at low?
Well, yes, selling short is a very, selling short has been around for decades, centuries all over the world. It's good for markets if you can sell short. I am not selling short at the moment for the reasons I mentioned before. I expect the governments to continue printing and spending and borrowing a lot of money, and that's going into markets. But eventually, I hope I'm smart enough to sell short because stocks are getting very, very expensive all over the world. Bubbles are starting to develop. I hope that somewhere along the line, I'm smart enough to sell short again, but I'm not selling short now. And if and when I sell short, it will probably be, you know, the bubble stocks. That's usually, I mean, that's the hard place to sell short. It can be very painful, but if you can take the pain and if you can get it right, you can make a lot of money.
Right, sir. So we had a host, Mr. Ajaya, with us to chat with you from ET now, a while back. So he had to rush. He has extended his thanks to you for being a part of the session and engaging with him. Thank you very much, sir, on Ajaya sir's behalf also.
Well, I would just say again, I'm a fan of India. I'm a fan of ET now. And now I'm a fan of your Institute of Management.
Thank you very much, sir. Looking forward to hosting you on campus sometime. Thank you very much.
Right, that would be great. I love Indian. I love Indian food. Oh my gosh, I love Indian food. So I hope we can do it in person someday.
Thank you, sir. Sir, for this now, I request Pankaj Trivedi, sir, to please come up for the vote of thanks.
Sure. So thank you very much, Mr. Jim Rogers, for your very frank and clear views about everything, about the market, about how the students should develop their career, how they should take decision. So apart from your expertise in the commodity market, in the financial market, some of the very important points that you have highlighted, and those things are very, very useful to the students. I would like to reiterate again that do what you passion. That is one of the most important things, right? Don't go just by taking the decisions the way your friends are taking or where your parents ask you to do. Instead of that, you have to do what you like. That is one of the most important things. Second most important thing, which I have noticed and which I have taken out from your talk, sir, is that when you started going to Wall Street, you have looked at commodity sector where others were not giving attention. So this is something which is very unique. You have to select that path where others have not went, and then there is a possibility of success. So that is another most important thing students should remember from the talk of Mr. Jim Rogers. One more aspect that he has highlighted that is very, very unique, that there is no chapter, there is no page in any book which will tell you if you do that, you will be rich and you will be successful. All you have to do is you have to use your judgment. That is something which is most important thing. Sir has told us out of his rich experience. So thank you very much, sir. And developing skill is also equally important. You know, apart from your luck, it is the skill which you need to develop. And for skill development, there is nothing but hard work. That is the only thing which is required. And this is all our learning from your talk, sir. And as Arohi said, we are looking forward to invite you at our campus once the things become normal. And our campus is very beautiful campus. So thank you very much. I would also like to extend our thanks to our director, Dr. Monica Khanna. She is here right from the morning, and she has also asked some questions to you. Our director always support us to organize these kind of events. So thank you very much. Also, I would like to thank Professor Hitesh, all my faculty colleagues, and of course, the students. Let me tell you, sir, this entire program is organized by my students. So they are doing wonderful job. And finally, thank you, ET Now and Ajaya for wonderful comparing of this particular event. And finally, thanks and best of luck to all of you. Thank you.
And I hope all of you listen to your professor. He has some very good points.
Certainly, sir.
Thank you.
Thank you. Thank you, sir. Thank you for your time. Thank you, sir. Thank you.
Thank you.
Thank you.
Thank you, sir.
I hope to see you in India. Bye-bye.
Yeah, sure.
Bye.
Thank you.
I think
Bye,
next
sir.
year we can already invite you in advance.
Yeah.
At least the earliest it can be whenever the travel is permissible.
Yeah.
We invite you to our campus.
I hope so. I hope so, but not
Yeah.
today.
Not
Too
today,
much
not
virus.
today.
Too much virus.
Yeah.
But I would certainly love to come to your campus and eat good Indian food because I love India. I love Indian people, but I love Indian food too.
Okay. You're most welcome. We have a beautiful 50 acres campus right in the heart of Mumbai. And our main trustee, Mr. Somaiya, he's a Harvard and a Cornell graduate. And he's very, they're into the traditional, I mean, for the past, I think 75 years or so, they are into the sugarcane business. They are in agriculture. That's the traditional business. But Mr. Somaiya has now diversified into biorefining. That's, I think, the new age. And I think they would be coming up with some announcements and all now. So, and he's very much interested in education. The campus, the trust is there in the education field since 1959. And they are really doing a lot of work. We have around 35 institutions. That's management, engineering, polytechnic, medicine, physiotherapy, they've started a design school recently. So it will be a full, the trust got the mandate to be a private university, the Somaiya Vidyavihar University, in July 2019. Wow. So now that they are a private university, they will have the freedom and flexibility to launch many more programs and multidisciplinary and interdisciplinary programs. So you are most welcome to come to the campus and interact.
I would love to come and have Indian food with you, because I could see that not only all of you are smart, but you're all going to be rich. That would be...
I mean, I'm waiting for riches to come. I'm waiting to be rich.
Terrific, terrific. Well, maybe I'll come and I'll have good food and get rich.
Yeah, I think I just want to make a small comment. I think most Indians are happy, they are happy. They may not be very rich, but they're happy, They try to make the best of their circumstances.
I would like to say what Madam has said. I think many of you must be knowing Professor John Kenneth Galbraith, one of the great economists. He has made a very good comment on Indian poverty. He once said that I have seen poverty in many countries of the world, but in India, I see richness in their poverty. That was the comment he made in, of course, late 60s when he was ambassador of USA in India. Professor John Galbraith, famous economist.
I remember Galbraith. Yes, yes. Yes. Well,
I think that's right. Most of us are happy within our circumstances. I think education will be a very big enabler for material riches.
That is most important.
Material riches, but otherwise, I think spiritually and otherwise, it's a very evolved society. I think it's a very evolved society. I hope our young millennial crowd, they appreciate our culture and our traditions, which I can see they're doing it. And they celebrate all our festivals with great gusto and a lot of passion and enthusiasm.
Well, I am extremely keen on education. Education changed my life. So I know how important it is. That's one reason I became a professor at one point for a while. No, education for me, and that's most important for the way I'm raising my children, their education is the single most important thing.
Yeah.
So keep up the good work.
Thank you. I really want to congratulate Professor Trivedi and Professor Hitesh and the full student team.
Thank you.
Doing a wonderful job, and really thank you, sir, for really enlightening us today.
Thank you. Thank you. It was a lot of fun. Thank you.
Thank you, sir.
Bye-bye.
Bye.
Thank you, sir.
Bye-bye.
Bye-bye.
Bye.
Thank you very much, sir. So now we move ahead.
Yeah.
I am delighted to introduce our keynote speaker for Investrix 2022, Dr. Marc Faber. Sir is a Swiss investor, the publisher of the famous Doom, Bloom and Gloom newsletter, and the director of Marc Faber Limited, an investment advisory and fund management organization. Sir studied economics at the University of Zurich, and at the age of 24, obtained a PhD in economics magna cum laude. Back in 1980s, he was the managing director of Drexel Burnham Lambert Limited. In June 1990, he set up his own business as an investment advisor, fund manager, broker, and dealer. Sir is considered to be one of the best in business when it comes to predicting the market, like the suggestions for the clients to pull out of the market just before the 1987 market crash, or him predicting the meteoric rise in Asian markets in his book, Tomorrow's Gold, Asia's Age of Discovery. Dr. Faber, a regular speaker at various investment seminars, is well known for his contrarian investment approach. As the anchor for the session, we have Mr. Nikunj Dalmia with us. A network stalwart, sir is the face of ET Now and one of the India's most seasoned business news anchors who has witnessed the Sensex journey from 2,800 to 36,000 points. Sir anchors shows like The Market, Closing Trades, and interview-based shows that focus on financial market participants, the weekly show Market Makers. Nikunj sir has been instrumental in creating path-breaking content for the channel. We welcome you to Investrix 2022. Sir, you may take over from here. Thank you, sir. Do we have Nikunj sir in the meeting currently?
I think he got disconnected. He'll be rejoining shortly.
Yeah.
Thank you for your patience.
We welcome you, Marc sir, to
Thank you.
Investrix 2022. It is an honor to host you, sir.
Thank you very much.
So the theme for today's conference we have is Nikunj sir has entered, so definitely he'll take over from here.
Okay.
Yes, yes, sir. We have Nikunj sir here. Welcome, sir. You may take over. Good morning, sir.
Good morning. So nice to see all of you. And it's so nice to spend your Saturday morning in a very productive manner, meeting everybody here. And my sincere compliments before I start to the students of KG Somaiya. The galaxy of speakers, the event, what they've created, even though it's virtual, it's quite extraordinary. We are in the business of meeting and interviewing guests every day, but getting Marc, Jim, my dear friend, Vijay, Ramdev ji, it's not a mean feat. So hopefully we need to learn some tips of organizing such a grand event from your students and for people who are behind the event. But Marc and me go back a long time. I've interacted with him for almost 20 years. And I dare not say that I used to meet Marc when he used to come to India, when he had only black hair and perhaps no white hair. And he had a lot of hair. But Marc, we have a lot of student audience here. And I guess the students today really want to know that how next couple of years will be different from last couple of years. How can one really take big bets in this kind of an environment? And like your famous newsletter, which used to write, Marc, gloom, doom, and boom. So for all of us here, why don't you tell us, in the world right now, where there is boom, there is gloom, and there is about to be doom?
Well, first of all, thank you very much for inviting me to your conference. And I remember you, and I've been actually to India for quite some time. The first time I went to India was in 1973. So I guess it's way before most of the students were born. And I had a close relationship with India as a child because my grandparents, they had a hotel in the mountains in Switzerland, in Engelberg. And they built also the air cable going up to Titlis. And we had a lot of Indian guests already starting in the 1920s. Not that I lived in 1920, but also in the 1950s when I grew up, we had a lot of Indian guests at the time. So I always had a very close relationship to India, and I was always interested in particular in Indian history, because it's interesting. We're talking about a very large country, probably population-wise today as large as China or even larger. And in history studies at school, in college, in Europe, people will spend maybe 10 minutes or 20 minutes on Indian history. And of course, Roman history is very important and it's very well documented because they wrote books about it and so forth. But still, I thought, compared, we have history in college for 7 years. and you spend so much time on European history, on all the kings in France and in England and so forth, and on India you spend maybe 1 hour and that's it. Same for China. So I think that Western society, and in the US it's probably even worse, they wouldn't even mention Indian history classes on normal schools. Of course, at universities, there are classes about Indian history and so forth. But I think it's a subject that is grossly neglected.
So, Marc, you didn't answer my question, which is where there is gloom, doom, and there is going to be a bubble in the world. Your famous newsletter, Gloom,
Yes.
Doom, and Boom.
So first of all, I want to say that throughout history, even during war times, or especially during war times, unfortunately, there are always great opportunities. It's just a question of turning over the stones that come across your path and finding these opportunities. And so I would never despair and say, oh, we, the Generation Z or the millennials, we have less opportunities than people before. I always said, I went to Hong Kong in 1973. I started to work on Wall Street in 1970. And I went to Asia partly because I saw the opportunities that existed in Asia compared to the Western world. But following the opening of China and following the policies of liberalizing the economy in India and moving from self-reliance, socialistic planning economy to a more market-oriented economy, I think the opportunities have exploded in Asia. And I think that if I were young, I would do pretty much the same that I did before. With the experience I accumulated over the years, I would probably waste less time on certain things that I wasted time upon and focus more on other issues. But I think the future for people who are willing to work and focus on opportunities is still huge everywhere. So when people talk about, we are in a financial bubble, I agree. Of course, we are in a bubble. Governments have printed too much money, whereby I always say the Reserve Bank of India for the last, say, 5-8 years has been very reasonable compared to other central banks. They've done a very good job. It's actually, for me, amazing that reserve banks, central banks in emerging markets, by and large, have been more responsible than central banks in Europe and in the US, who in the brain-damaged mood have been printing money and more money and more money, which is historically proven to be a disastrous recipe for economic success. But that's what they've done. And so when we talk about opportunities, people say, oh, the Indian market is overvalued. I agree, some stocks are fully priced and overvalued. But India is a continent, a huge economy. And out of the maybe 20,000 stocks that are listed, I am sure I could find you 10% of the shares that are inexpensive. The same, if I look at the real estate market in India, in some cities, it's overvalued, fully priced. But in other cities, in the countryside, on the beach somewhere, there's still plenty of opportunities. So I think that we have to focus on micro factors and less on the macro, because the macro is important. And I also observe global trends and currencies and commodities and all that. Of course, this is an important factor. But I can tell you, if you look at the richest people in the world, for the last 100 years, these are people mostly, they built up a business and they didn't focus and didn't listen to any economists. That, I would say, the most important in life, don't trust any economist. They all don't know anything. They're not businessmen. They are academics. Would you, if you have a company, you inherit from your parents a company, would you put a university professor in charge of the company? Never. You put a businessman in charge.
Mark, just because it's a student conference, are you referring to academicians? No pun intended.
The what?
Just because it's a student conference, are you referring to academics?
I just want to say, I also studied, I have a PhD and I study every day. I have a huge library and I still read, I still write. But there's a difference between academic wisdom or religious wisdom and being a businessman. What I want to convey to your students is, don't focus on academics. If you want to be rich, you have to be a businessman and go about your business and not dream of macroeconomic trends. All the pioneers in business, they focused on their companies and on making products that appeal to someone, whether it's the consumer or government officials or whoever it is. But it was a focus on business. And this is different from academic focus. I'm an academic. I happen to be lucky in my business because of some fortunate circumstances, like money printing. Money printing lifts all boats.
You know, I'm going to share with the audience here that just about everybody I've interacted with in last couple of years have said one thing: for anybody who wants to be successful in life, they should focus on two things: either sell something or build something. That's the only way out, whether you sell something or you build something. If you can do both, you create magic. But if you can do one also nicely, but focus on one thing, sell something or build something. So Marc.
Or invent something.
Or invent something. True.
This is very important. You know, I know a lot of people, they work hard all their lives, but because they never innovate, say someone who is a boot maker, makes shoes, unless he invents, he will still make shoes with his hands. So he has to progress and translate his skills into a business. But I do not want to diminish the achievements of academics. But you have to understand, if the question comes up, how will I be successful? I'd like to say that if you look at most of the rich people in the world and in India, these were entrepreneurs. They didn't, worry too much about what is the business climate going to be tomorrow and so forth. They focused on their business. And in investing, I have a friend, he started in my office as a fund manager. He says, Marc, we are good friends and I read your newsletter because I'm interested in your way of thinking, and you helped me a lot in my business because of your unusual way of thinking. But he focuses on individual companies. He manages now $7 billion. He started with $10 million in my office at the time, in the mid-1990s. And most of the appreciation in assets is actually not through new money coming into his fund, but through performance. And what does he do? He bought, and he still owns in the portfolio between 12 and 15 companies and no more. Very focused. He invested very early on in Taiwan Semiconductor, and he's kept the stock through all the ups and downs. And this is what I want to say. I believe that in investing, a very important factor, and this is never explained, is patience.
Well, money is made by not timing the market, but by spending time in the market. Something I just want the students here to realize and understand.
Yes, I agree. And also, aside from patience, you need discipline. He has a model. If I tell him, say, look, you should buy commodity stocks and so forth, he says, I'm not interested. Because commodities is a cyclical phenomenon. You know, you have these huge bull markets in commodities. They last 2-3 years, sometimes longer. And then the whole thing collapses again. So it's a cyclical investment. It's like some people are traders, some people are incredibly good traders.
Right.
But most people are not very good at trading. And I can tell you, recently, we've seen in the US a huge increase in trading in options. Yes. These are people, they buy and sell essentially every day. They trade on Interactive Brokers and on Robinhood, and they read the Reddit news and so forth. And they're piled into meme stocks. Meme stocks is nothing new. We had them in the 60s. All of them collapsed eventually, but all of them.
Okay, Marc, so, now I'll refer to your style of investment, which is that, you know, you made a presentation which I had the pleasure of attending in 2003. You said, look, if you went long in Japanese stocks in 80, you hit a home run. After that, if you bought US TMT stocks in early 90s, you hit a home run. Last 10 years, if you bought into US tech stocks, you hit a home run. What is that big trend or trade for this decade, for next couple of years? Let's say if you have to say, this is one asset class or one market I will go long on, and one asset class or one market I will go short on. What is that one trade which Marc Faber always identifies at the beginning of the decade for us?
Such an easy question.
It's student audience. Keep it very easy. Sometimes easy questions are the most difficult one, like they say.
Yes, yes. I want to tell you, I think, and this was the subject of my book in 2002, Tomorrow's Gold. It was not specifically about gold, but it was Asia's future, essentially. And I believe you are students, you also know something about facial reading and so forth. Just look at American politicians. Then you look at Putin, then you look at Modi, and then you look at Xi Jinping. The European politicians, the American politicians are vastly inferior. They're completely useless characters. Useless. And I believe we are at a major change in the world, that the superpower, the US, is on the way down and new powers are coming up. Incidentally, I am worried that whenever these changes happen in the supremacy, in the hegemony of the world, there's war. But I would bet on Asia and on emerging economies, and I would avoid the US. Now, I have to admit, I own some mining companies in the US, but as a market, as a society, I would avoid the US.
Marc, I have a simple follow-up question, and this is something which is even puzzling me. I'm asking everybody who comes on my show. US inflation is at a 40-year high. We may be charitable and say it's a 30-year high. Some may say, no, it's a 25-year high, but US inflation is at a structural high. Why is the US 10-year paper, the most liquid instrument in the world, not panicking? Why is US 10-year paper not at 2%, 2.5%, 3%?
Well, you are asking a very good question. And it's difficult to give you a precise answer because in economics, there are always many factors that influence the price of something. But let me put it this way. Yes, the last time inflation was as high as it is now, interest rates on the 10 years in the US were between 8 and 10%. And at the present time, the 10 years is at, let's say, 1.7%. In Germany, now think it through. The euro has been weak against the US dollar for the last 12 months, okay? It is logical that in Europe, inflation is actually moderately higher than in the US. Because the currency was weak. But let's say it's the same. In Germany, we had until just recently negative interest rates. In real terms, real in interest rates is the rate of inflation, whereby here I have to also explain for each household, the rate of inflation is a different one than from another household. If you have children, you have to pay for the education in expensive universities, the rate of inflation may be higher than if you're single and so on. So it's not easy to measure, but in general, I would say at the present time in the world, whether it's in India or in China or the US, the rate of cost of living increases for the typical household is between, say, 7 and 12%. Approximately. And interest rates are far too low. That is the real interest rate that is negative. And whenever you have real interest rates that are negative, it will lead to inflation. In other words, to cost increases. In this environment, the least desirable asset, except for trading opportunities, the bonds may be oversold today. They could rally for 2-3% in the next 10 days, possible and so forth. But in general, when interest rates are negative, you should own assets like real estate and stocks and art and commodities, precious metals.
Marc, today I just want to, since we again have a young student audience, the future of India, the future
like
of
us, like me, you mean?
Yes, certainly. You're always young at heart, don't I say that? I've had the experience of meeting you. I can share some stories. Like I said, we have a young student audience here. We'll talk offline about that. But Marc has some interesting stories, which I'll be happy to share privately. Marc, how is investing in this decade different from investing in the last decades? And if I amplify this question, what I'm trying to perhaps understand from you is that the information flow is far more seamless. The awareness of global trends is far more seamless, whether it is a mobile app or whether it is internet. Do you think too much of information is creating a clutter, or investors in general today are much more aware and much more smart?
I think throughout history, people were similar, but in changing conditions, you can manipulate people. In other words, the COVID, which is now established, came out of a lab in China that was partly financed, and the research was partly financed by the US, because in the US, this sort of research is not permitted because it's highly dangerous. And out of this COVID, they have created an atmosphere of extreme fear. You want to control a population, you make them fearful. And so my sense is that we have to get away from this control of fear, and we need to realize that I was just now reading about Julius Caesar, and the leader before him was Sulla. And as he came, he invaded for the first time, or he moved into Rome with his army, because he said to himself, if I go alone, they're going to kill me. So he moved in with his army. The Senate in Rome was very upset, because they said, well, we represent the people and you come with your army. And so they said, and Sulla responded, tell me whenever the Senate represented the interest of the people. That you have to realize. The governments, by and large, are not looking after the interest of the people. They look after their own interest. This is a very important lesson in life that I want to tell everyone.
Marc, let's talk about the future growth sector, because that is important for at least the audience here, as in some days, in some weeks, they would be shaping up their careers. If somebody decided to, let's say, move into the business of technology and coding, that has turned out to be a great career option to be. If somebody, let's say, a couple of years decided to, associate with financial market, Wall Street or Dalal Street, those career options have been good, because in India, the financial market is growing. Where do you see are the high growth opportunities in this market? I mean, your dear friend and our common friend, Jim Rogers, he always says that don't go to Wall Street, become a farmer, because he feels that the world right now has more MBAs and less of farmers. But for the audience here, for some people who are looking at building their careers, where do you think they should be tilting their mindset to, the career opportunities?
Well, one gross industry is always the government. The government is becoming bigger and bigger. Now, maybe in India, the government officials are not very well paid. But I can tell you in the US, many people, this is one of the problems of democracies, that in a democracy like the US, politicians become very well-to-do, and they are politicians, they're not there to represent the people, they're there to make a career. And in Switzerland, if you work for the government, I'm not saying in all cases, but by and large, you are better paid than for the private sector in the whole of Europe. So if you talk about the growth sector, I said the government in Europe and in the US in 1910, okay, this 110 years ago, the government spending as a percent of the economy was nowhere more than 10%. This is the reality. Now it is usually around 50% of the economy. So this has been a huge growth industry.
So
but
Marc,
I want to tell you, if I were an Indian, I would focus on areas in the real estate market that are not yet discovered. I think one big trend, and this has happened already before COVID, but one big trend is there's no need for you to live in Mumbai. You can live in the countryside with the internet that we have today. There's no need to be in a financial center. So for the last 200 years, from 1800 to recently, we have urbanization. Maybe we at a time where people will move away from cities and have small clusters, small relative to Mumbai, cities with 500,000, maybe cities with 1 million people. but not the 20 million people cities. And so I think there's a huge opportunity there. Number two, if I look at India and I compare the economic development that we have in Europe and the US, in India, not many people have second homes yet. Holiday homes, retirement communities, all this is going to develop over time. So in India, there's so many opportunities, whether it's in healthcare. You look at healthcare expenditures in India as a percent of the economy. You compare it to healthcare expenditures in Europe and in the US. In the US, it's maybe 10 times higher than in India.
Marc,
not that the quality is any better, that I can assure you. The
so
last
Marc,
thing I would do in my life is go to an American hospital.
Marc, last question from my side, and I know we've shamelessly extended appointment with you. It's a Saturday morning, so I'm going to take the liberty of asking you one more question. And this is a question which perhaps let me ask as a father, not as a managing editor. I've got a 10-year-old son. So if I have to gift my son a gift of prosperity, should it be a brick of gold? Not that I can afford a brick of gold, but a small piece of gold or Bitcoin. Should it be Chinese stocks or should it be Indian stocks?
The answer to this, and that I want to say, and I didn't have the opportunity before to express this view. The audience that I'm addressing here are young people and are students. Unfortunately, and I have this to say, this didn't exist when I grew up. When I grew up and I spent time, I had grandfather, grandmother from the mother's side, grandfather, grandfather from my father's side, and my parents. We never, ever discussed money in our family. Never. It was not an issue. Not that we were rich, but we had other things to talk about. And the money printing by central banks, and this, you have to see, you talk about growth industry. The financial market as a percent of the economy has exploded. We are in a financialized world, and everybody dreams and thinks that money is the most important thing. So if you ask me what would I give to my son or 10-year-old child and so forth, I would give him wisdom, or try to give him wisdom by having people talk to him that have wisdom. And I don't count myself to that group. But, you know, in former times, there were not public schools, but wealthy people and the aristocrats in Europe, and I guess the leaders in India, Maharajas also, they had at their court people, teachers with wisdom. And so I would say, you know, the best you can do for someone, and I hope your university does that. Money is of secondary importance. First of all, philosophically seen, we are blessed to be here in this world. Now, maybe this world is for some people hell, and for some people it's heaven, who knows? But one thing I know is that when I go somewhere else, I will take nothing along with me. So people should enjoy their moments. They should enjoy, look out to the gardens, to the trees, listen to music, and so forth. And money, if you're lucky, will come as a gift to you. I didn't start working in the financial field only because of money. I studied economics, and I was interested in economic history. And in history anyway, money came later as a bonus in my life.
What a nice answer, Marc. I mean, if COVID has taught us something, it has taught us that that we all are mortal and we should never take things for granted. And money is a byproduct. Like money, they say, is a score you keep in life. With that, I'm going to hand it back to the MC to take things forward. But Marc, always lovely interacting with you and meeting you personally.
Thank you
I
for
haven't met you in
having
a
me.
while. So
And luckily, we're mortals, so also politicians go away.
Well, that's a perfect world we're looking at. But thank you very much. And all I can say to the student audience is something what we apply at ET now, which is that do what you love and love what you do. Money is a byproduct, and wealth is something as a score which you keep in life. With that, I'm going to take the liberty of logging out, and I'll just hand it back to the MC of the event.
Okay, thank you, and nice to see you.
Thank you, Nikunj sir. Thank you, Marc sir, for this wonderfully enlightening session. I request Dr. Pankaj Trivedi sir to propose the vote of thanks. Sir.
Yeah. So good morning to one and all. And thank you very much, Marc sir, for your wonderful interaction with us, our students, as good learning from your experience and from your interaction. I would like to emphasize a couple of things that you have covered in your talk, which will be very, very useful to the students. To begin with, history is important. That is something very, very important thing that you have covered, because human being has to learn many things from the history. And they say history repeats, right? So the learning from the history is something which is very important, and we cannot ignore that. That is one aspect you have nicely narrated. Second most important thing, sir, you have covered is academic wisdom and the business practice. These are the two different things. So that is also very, very important input. I always tell my students that we take different degrees, MBAs and postgraduate and PhDs and whatnot. But what is your wisdom with respect to business? That is far more important. I always tell the students that our neighborhood grocer, though he may be semi-literate or illiterate person, but he is able to do business much better than a qualified MBA. I do not mean to undermine MBA, but that is what the experience matters. So with this wisdom, if you take a formal training, formal education with respect to business, definitely you can do wonders, right? Couple of other things also you have very nicely put up, that emerging economy, significance of emerging economy. And I'm very glad that you have praised the policy of central bank of the emerging economies, So these are some of the very good takeaway for our students. Yeah. And we always love to interact with you. In future, whenever you have time, we can have little more interaction. And if possible, you can visit our campus physically. Now, of course, it's not possible because of various travel restrictions and pandemic. But certainly, we would like to invite you at our campus. So thank you very much, sir, for sharing your wisdom. And thank you very much, Mr. Nikunj, for asking very good questions to sir. Nikunj, thank you very much. The most important thing which Nikunj has said, that you sell something, you build something. If you want to success, if you want to have a success, you have to sell something, you have to build something. And in that, Marc sir has added, you have to innovate something, So this is something which is very good. And once again, thank you, student team, and Mr. Marc, as well as Nikunj, ET, everyone. Thanks a lot.
Well, I thank you very much for having me. And of course, I wish the very best to everyone.
Thank you, sir. Thank you for your wishes, sir. Thank you.
Thank you, Marc, sir, for your excellent views on the investing opportunities and your words of wisdom, especially learning history. And thank you, sir, for the vote of thanks. I'm now pleased to introduce our guest for the one-on-one discussion, Mr. Vikram Kotak, the co-founder and managing partner of East Lansdowne Investment Services. East Lansdowne Investment Services is co-promoted by East Partners and Lansdowne Partners, one of the largest European hedge funds, to start an alternate investment fund, offshore funds, and asset management business in India. Sir is a qualified chartered accountant and has also completed the senior management program from Wharton Public School. Sir has over 25 years of experience in financial markets across segments that includes fund management, fixed income trading, and corporate finance. Sir has successfully set up businesses and teams in equity and fixed income segments. To host the session, I'm pleased to introduce Mr. Pankaj Poddar, a seasoned anchor on business media. He heads the research team at ET Now and has been a part of the business research for over 12 years now. I request you to please proceed to the discussion.
Hi, Vikram, can you hear me? This is Pankaj.
Pankaj, first of all, thank you to Somaiya College and Dr. Trivedi, Dr. Punjabi, everyone at the college. Thank you so much for inviting me. Thank you.
Right, so let's start this interesting discussion with Vikram Kotak. Vikram, you've been looking at the global macros for years now. Can you just talk to us about what's really happening in the global markets? Because, at one side, inflation expectations are going up. It's not good for a lot of asset classes. But on the other hand, you have all the asset classes going up. What does that essentially try to indicate to investors now? This time it's different. I mean, always it's different, but this time what's different?
Pankaj, that's a very matured and interesting question you asked to start with, and let me tell you, it's not in the hand of any economist to really predict the way things are going. We are living in an expansionary world. Every global major is sitting on the huge pile of debt. So 25 of the large countries in the world are sitting on 300% of debt to GDP ratio. Now, who will move the, who will have the first bugle? Who will move the needle? Nobody wants to move the needle. That's why interest rates are lying where it is. The bigger question is that inflation is transitory or it's a structural. And I think Marc sir rightly said that lower the real interest rate, you will see more and more inflation coming into your way. Also, very interesting anecdotal, Pankaj, I want to mention here is if you look at pre-COVID 2020 January, just 2 years back from today, US 10-year was trading at 1.75. Today, US 10-year is trading at 1.75. So there is no change in the yield after 2 years. But look at the CPI of US, which was 2.5 in January 2020. Today it's 7%. So is it a parallel or is it a huge divergence of interest rates versus inflation? The answer is yes, because everyone is sitting on debt, everyone is printing the money. US has printed almost $4 trillion in the pandemic, and they're going to print another $2 trillion over the next 5 to 10 years in the Biden era. So I think it's a very, very interesting time, and this is going to keep on pushing up the commodity prices high with the lower interest rates. You will see oil going up further from here in a big way. All the metal, all the short commodities are going to really see a much more bounce, and which is not good for any asset class in my view. So it's going to be very interesting trivia, interesting time going forward in 2022 for the world market.
Right. When we just look at really what's happening in India, India has clearly outperformed the world. What does that essentially indicate? Emerging market is where they're coming, it's coming in. What the market's trying to tell you? Our next 5 years, something which belongs to Indian economies?
I think next 10 years belongs to Indian economy, no question about it. India will be the, one of the fastest growing economy, and it will outperform the most emerging market and many of the developed market over a period of time. So it's a time for India, no question about it. Mainly from the structural ground where you say demography is on your side, or a per capita is such a low that it cannot go down, it will go up. Look at the financial saving coming to the equity market, the household saving now moving towards equity market. So there are structural wickets where we are strong. I think the last 5 years of government has been very strong. They have taken a very, very good measures on many areas, whether it's GST or corporate tax cut or the PLI. I think they are doing a fantastic job on their side. So I think we are on a very, very solid structural wicket. Now, what can happen? So you have a short-term accident, you have a short-term roller coaster ride because of the global something happening, or somewhere in the world, some asset classes defunct or something. So I think you will see some kind of volatility in Indian market, but I think the overall time is very, very good for India. I must say that with the full confidence that we'll keep outperforming the world market like we did for last 2 years, and India have a great future going forward.
Yeah, every time, the argument comes that Indian markets are expensive now versus what it was earlier. This stock is expensive versus, this sector valuation earlier. What do you think? There is a valuation reshift that has happened across asset classes?
Exactly. The liquidity always, when you have excess liquidity everywhere, you always see valuations are move upward. We have seen in the pre-Lehman crisis also, and most of the time. Only you have to be very careful and very, watchful of where are the bubbles really playing out. You look at some of the recent IPOs which has happened. We can see clearly sign of bubble in some of the IPOs, not everywhere. But I'm saying you have to be very watchful there. Having said that, the opportunity is huge in front of us. Valuations are always going to be premium in India because of you pick up any sector, you'll always find 4 or 5 companies. You pick up tire or paint or even in the adhesives. So you'll find the 3 or 4 large companies, and that's why you are seeing very few stocks. Is a shortage of ideas, shortage of stocks, and that's why you are seeing more and more expensive valuation in India. I was recently doing some work on a Nifty 50, on the construction of Nifty 50, and 30% of Nifty 50 stock, Pankaj, is actually trading at 60% higher than the Nifty valuation. So if we say Nifty is at 21 times, this stock 30% is trading at more than 60% valuation of 21 times. 50% of Nifty is trading at a below historical average. About last 10 years. So it's a very, very dichotomy within the Nifty. But wherever you will find a huge growth, wherever you find a penetration opportunity in such a large populated country, you're going to see the valuations are going to remain very, very elevated.
Right. So, when I just look at really what's happening as far as, the markets is concerned, the sector re-rating is concerned, across board, new listings happening. So, all of these students who are now listening to us, they would be very, keen about what's happening with Zomato, what's happening with Nykaa, what's happening with various other companies, that are coming up with IPOs. They are making losses, they don't have free cash flow, but still valuations are like, something which, good cash flow manufacturing companies have not been able to, create so far. So why this sort of a divergence between a new age company which doesn't have free cash flows and an old economy company which has free cash flow and assets, which is built over last 50 years?
I think difference is happening because of 2 very, very strong fundamental reasons. One, people are chasing growth clearly. So wherever they're finding the QOQ or month or YY growth, they want to chase that. There you'll find a lot of accident, which I recently mentioned, that we've seen few IPOs bombing very badly recently, which will actually make even the promoters more rational and also investors more rational to buy at what price, reject the IPO if it's very expensive, don't have to chase the IPO. Second very important thing, the replacement theory. The replacement theory is like that people are saying now thermal coal will be the past and alternate fuel will be the future. Or you say, Xerox machine was the past, digital economy is the future. So it's a shift, or EV is the future and the regular automobile, which is a diesel driven or petrol driven, will be the past. So I think this is a shift which people are trying to identify, trying to kind of get there very quickly to get the early benefit, but that also has accident, because what happened that you might pick up a wrong company, you might pick up a wrong management. So I think the chase is there. We have seen this happening in the IT bubble. We have seen this happening in the 2007 pre-Lehman. So there are a word of caution clearly that you have to be very, very careful. Money making is not so easy. We have seen 25, 26 years in the market. Last 2 years has been exceptional. And whenever you have exceptional years, things can start, you have to be very, very watchful going forward, that what are you buying? You need to do your own, I can say, worship towards market or own sadhana towards market to really be successful in the market.
Right. But over the next 5 years, you think there will be a lot of interesting e-commerce listing and a lot of them will provide opportunity over the next 10 years? I mean, if you want to own something for 10, 15 years, these are businesses after 10 years, you will say that, oh, ye kya tha aur ab kya ho gaya. So, you think that opportunity will definitely come over next 5 years?
Huge opportunity. Pankaj, you rightly said, it's a very great opportunity. Look at 2021, just go a little bit in backdrop. $16 billion worth of IPO supply, with only government supplying $2 billion of that. Otherwise, we have seen normally in a year of IPO, we see more government IPO coming in, public IPOs or private IPOs. $16 billion IPO, 64 companies raising money, retail participation going up by 5 times in 5 years in the IPO. Also, a lot of new age companies, whether it's delivery or whether it's the cosmetic online company or whether it's a new payment bank or FinBank or whatever. We've seen variety. The most diverse IPO market I'd ever seen in my career is last year, where you've seen all kind of companies that come and participated. We've seen unicorns coming in, raising money. We've seen a new age company, like you rightly mentioned, e-commerce companies. So I think it's an opportunity for all of us. Next year, again, Pankaj, will be more exciting because you have 2022 where it'll be a bigger year of IPO. Because you have almost $20 billion of LIC, you'll have NSC coming in, and you'll have another $15 or $17 billion of regular IPO. So you'll have a $35 billion IPO market here if all goes through right. So it's going to be a very, very exciting IPO year. And I completely agree with you that e-commerce or new age fintech companies or new age gaming companies or any sector you pick it up, or a process technology company, you'll find a lot of supply, demand, a lot of demand also for that kind of IPO. And we are seeing the listing in many cases are really showing that hungry appetite for the IPO market. Also, one more interesting anecdotal point, Pankaj, FIIs, who has been regularly investing in India, almost $15 billion annual average for last 1.5 decades. Last year, they sold net $4 billion in the secondary market. And they bought $7 billion, they bought $11 billion of, they sold $7 billion of secondary market. They bought $11 billion of IPO. So net figure, when you do it, it's a $4 billion inflow. But if you bifurcate further, they actually went and sold, the secondary market, and they bought a lot of IPO. So IPO is into exciting mode, exciting journey. A lot of new age companies are really going to do well.
Last time around when you were in building, you always told me one thing, that whenever we do investments, we look at our daily life changes, how things are changing now, what are we using now versus what we used to do earlier. Where does the digital space fit in that? I mean, I'm sure you're doing more GPay, more Swiggy, more Zomato versus what you used to do 10 years back.
Yeah, exactly. I think when I passed out my CA, and I remember using Maruti car or using Asian paint or Gillette blade, we used to go and invest into that companies, and has been very successful. Now I look at my kids, what they do, because I'm not a Swiggy fan, and I can't go to Zomato and online and order. So I look at what they do, and actually that really gives me a new insight that the young age, the age below 21 or 24 are really the people to watch, and what are they doing, and a lot to learn from them on one side. Of course, they have less of experience, we have more of experience, but we become more conservative when we have more experience. So it's a very, very big opportunity.
So what will be your message to all these students, who are looking to make their careers in investments, who are looking to invest their surplus income as soon as they start? How approach with taking this consumption to
So as I mentioned, Pankaj, next 10-year, 20-year.
Can you hear me?
I can hear you. I got your question. I think, Pankaj, your net looks bad. Yeah. Now, you want to repeat the question for the benefit of others?
So
I think your Wi-Fi looks bad. Himanshu, you want to help him out, or Anant or someone?
Yes, sir. Yes, sir.
It looks like a marriage photo. And eyes are shut. Photograph. You take a photograph so quickly, so eyes look shut.
Most likely he got disconnected because, yeah, that's what I thought.
You want to wait for 1 minute to him to
Yes,
come
sir.
back?
I think he's back. He's back, sir.
Oh,
yeah.
super.
Yeah, Vikram, sorry for that.
No worries, Pankaj.
Problems are working from home. So I'm just saying that, when we just look at these, audience who are listening to us, they would be between the age of, say, 20 to 25, and, they'll start their earning pretty soon. How should they look at investments, the way you looked at Asian Paints or Gillette or any of these companies? How should they look at these consumption trends that they have seen changing between their earlier generations and now?
It's not a very straightforward answer, Pankaj, to this, because ultimately I believe the books of investment guide, which is built by many big guys over a period of time, is ultimately going to survive in long term. So when I say that, it means cash flow. It's going to mean a dividend yield. It's going to mean the core fundamentals of company, whether it's a management quality or corporate governance standards or financial ratios. I think we cannot miss that. You may want to chase a momentum for a particular time or high growth stories, but your balanced portfolio has to be balanced. So my first simple advice to everyone is do your asset allocation right. So I'm a firm believer of buying equities, buying real estate, buying gold, and buying, some have liquidity in a fixed deposit. I'm very, very strong discipline asset allocator for years and years. And I believe that's the right theory. I may lose some return, but I'm okay with that because I have a very peaceful sleep at the night. So I think that's the first message. Second message is do your homework right. I think it's very important to do your homework right. Chasing the crowd is ultimately somewhere is going to hurt you. Somewhere you might be disappointed. So do your homework right. Markets is worship. I think Pankaj agree with that, or many speakers will agree that people spend 25, 30, 40 years in the market, and then they believe they're learning. And I believe the same, that we are still learning. And worship the market, do the right work, follow the base principles of what I mentioned, the cardinal rules of the investment. You cannot go wrong on that. You can ultimately do well. Whether IPO, which is growing at 100%, but it's a profitable, I will put my money there. If IPO is growing at 200%, non-profitable, I'll stay away from that. So, and that's what market will differentiate in long term. It may not happen in short term, but ultimately, when we are looking at long term, this is a very, very important area. Third, I think the future is ours very clearly. Next 20 years belong to India. I think the corporate governance standards of the companies are improving. Country is improving. So overall, I think we are in a very, very right wicket. Plus, best of the talent in this country across the world, large size population, English speaking population. I think every fundamental checkbox which you want to tick about India, I think 8 of 10 getting corrected just as a right. So I think one of the best economy possibly to survive in next 20 years, and opportunity is huge in front of you. Whatever you do right will ultimately benefit you. So I think follow your cardinal principle, do your homework correctly, follow asset allocation principle. I think these are the three broad guidelines from me for every young kid or every investor.
Right. You mentioned all this about, and what all this will do is lead to higher per capita consumption. When the per capita consumption increases after a point of time, how does it actually explode? We've seen example in China, we've seen example in the US. What does this mean? What does this mean for consumer discretionary auto companies?
It means that people will ultimately upgrade their preference. So, for example, as I told you, when I was a CA pass out, I was driving Maruti. I moved to Jaguar or BMW or Range Rover at the current stage. So I think it will ultimately upgrade people. People will look at alternate. Why we are seeing so many unicorns and alternate asset class. And Marc talked about art also is one of the very interesting asset class. I think that's a big opportunity. So I think ultimately with per capita income going up, people change their lifestyle, people change their way of living, the people spend more, and which ultimately expands the economy. So I think you rightly hit the nail that per capita going up is going to be very, very important for this country. And you'll see more and more advanced brands. Like today, Louis Vuitton owner is one of the richest men in the world. Now, who will think in pandemic, right? A brand company which is selling in the mall will become the richest, individual in the world in top 5. So I think that is what is showing the brand power. People will move towards the brand. People will move towards the asset classes. Like I'll give you example of art. I'm a recent fan of art. I'm like last 2 years, I'm spending a lot of time on art. $100 billion market globally. 50% US, 22% China, 20% UK. India, 0.02%. So I think that's the opportunity which is going to come in the times to come. So I think there is going to be enough, area will open for the Indian investors. Brand upgradation, lifestyle upgradation is going to take place. You will see people moving from one cadre to second cadre. And I think net, the consumption is going to explode in this country going forward.
Right. Let's just talk about financials as a space. So from 2009 to 2019, fantastic returns in some of the private companies, NBFCs. Last 1.5 years have been a little bit of struggle in terms of returns. But I was looking at balance sheet of some of the private banks and even NBFCs, some of the large ones. They've really created a lot of provisions. Everything is happening digitally. It's happening via a system. And if, all the points that you mentioned, where do you see retail finance in India going?
So retail finance is a big opportunity. You have started with a 36% interest rate in a Saraf system to now a Bajaj Finance kind of company lending at 8% to a normal retail credit guys. Huge transformation happened. Tech is helping them a lot. And you rightly mentioned the balance sheets have kind of improved dramatically last 7 to 8 years. So I think from here on the private banks, I'm not a big fan of NBFC, particularly those who are non-fintech. I'm a big fan of the private banks because of the reason of clearly they have the strong CASA deposit. The corporate NPA cycle is over in my view. And now we are starting a rising interest cycle. So what will happen there? You need a CASA kind of base very importantly. You need a low rate of borrowing very importantly, a good balance of portfolio, good ALM, asset liability management, risk management. So I think there where some of the good private banks will do very well. Having said that, a couple of top NBFCs have done remarkable job in creating their franchisee. They manage this very well. But I think this space in a rising interest scenario will look very, very good. I'm only worried about the NBFC which are, clear focus. They expanded their balance sheet beyond their size. I see there is some worry in the rising interest because they'll be difficult to survive or they'll create a more NPA going forward. So I'm more big fan of private banks than NBFC, barring a couple of top quality ones.
Right. In terms of really what change Bajaj Finance has done to the financial space, you think that is the power of an NBFC or a large bank if they do things well? they can really force other large players to also do well, and that's where wealth creation will happen. Is that what one has to look at?
Absolutely, absolutely. Because see, the more deeper you penetrate in the financing world or any world, you get a more margins. You go into the more insight of cross-selling. You get into more deep into the consumer where nobody is going to reach. So, for example, if a washing machine buyer gets a loan from X NBFC versus PSU bank or private bank, I think the customer will be happy to do more things with him NBFC. So I think that's what I think some of the top companies have done. Plus, they were enabled with the technology, they were enabled with the risk management. They have done very, very good job in their second inning. So I think you're right. Absolutely, they are winning the consumer confidence. And look at the penetration of retail, penetration of credit in the country is expanded dramatically in last 5 to 7 years.
Right. At the end of December, I was looking at which sectors have given maximum returns in India. We spoke so much about IPOs, digital, how things will happen, but in the end, it came down to metal and cement. So, the most traditional business, the business that, have been going in for years. I mean, Tata Steel has been there now for decades. So you think that, asset value, which is being created by some of the manufacturing companies, that cannot be ignored, how much ever the noise is around digital?
So if Britannia or I'm just taking name for sake of example, or Britannia or Lever don't supply to Amazon or Nykaa, will Nykaa survive? That's a question. So I think ultimately the power of manufacturers will remain always there. It's the only time where transition happen where they lose their pricing power. But once they see the permanent channel which is established over a period of time, they get their pricing power back. So I'm personally of the opinion that manufacturer power will remain here. Traditional economies will not go away. You'll always have some larger companies will come and really take forward the process innovation, process changing the way doing business. Will benefit a lot. But having said that, you need a manufacturers at the background for sure.
So, one change within these companies has been that they were always known to have a lot of debt. And, they used to be hesitant to pay back debt as well. I mean, they used to keep a certain amount of leverage within that. But what happened in March 2020 was everybody got scared about their businesses. And they really decided to pay a lot of debt back, which they are continuing or which they are still, going into their target. So are you comfortable as an investor when the company is not using financial leverage? What does that mean for valuation?
I think sectors which you mentioned like metal or cement, if they are cash rich, I think it's a best place to invest because they are available at low valuation. They are part of the global cycle. If the demand shortage, supply shortage is going to prevail, which I feel in commodity basket will going to prevail because what happened, the demand has come back very strongly. But last 5 to 10 years, people have not invested enough into commodities because of green or because of social, the climate change and all that. And also look at, I'll just give one more example. Of
Would you include power and crude in this?
Yeah, I was coming to crude. So US oil rigs is 50% of what it was in 2019. ExxonMobil, which is plan a $40 billion expansion, they're delayed because of COVID and demand issue and also worry about the alternate fuel. So, I think people have underinvested, people have underestimated the power of the commodities. And I believe going forward, the commodities are going to be very, very important play because even you have the, lithium battery, you ultimately need aluminum and copper in that. So I think summary is that you need to have this commodity. So I think it's a boom. And you rightly said the Indian metal companies have dealt with it a lot in last 2 years. They've been very, very good in balance sheet management. And as I told you, it's an underinvested world. Also, this brings me to the Pankaj, one more point of the capex cycle, because what happened that today, most companies in the country has been averse to the capex cycle because of the people are worried about the stability and all that. But today, the government has done a beautiful job in 2 ways. One, corporate tax cut, and second, the PLI. I think today I'm seeing whether sectors like textiles or chemical or pharma intermediate or OMCs or steel, like you rightly said, are looking for a large capacity expansion. I think that will also drive electronics. If I don't miss that, you'll see a huge recovery in a private capex cycle, which was a worry for last decade or so.
Right. Just the last question before we want to end. So we've covered what global markets are doing in. We've covered why you're bullish on the traditional financials and metal pack. But you used to meet companies 10 years back. You meet companies now, to try and find out whether it's a good investment idea or not. Have you seen a change in the corporate shift? Are people realizing the fact that maintaining capital allocation, talking to investors, giving out as much as disclosure as possible, improving the level of ESG score, corporate governance is really one of the key things to attain market cap?
100%, no question about it. And I think I see, I don't want to use a paradigm shift, but I can say a large shift in the mindset of the promoters in India. We have seen the way investor presentation 10 years back, disclosure, and today, Pankaj, you also track, has seen a sea change. People go in bifurcation. I really amazed by some of the IT companies' presentation, which even I don't see in a global companies. So I think the corporate governance standards or the investor presentation or minority approach towards minority shareholder has improved to a larger extent. I can't say it's
no, even promoters have realized the fact that if they actually do all this, their wealth will be creation will be much higher.
Right. But it should not be a chase driven market cap driven chase. It should be a other way around, and then market cap should follow. But I'm seeing that is also happening in our market, that a lot of people are doing because of market cap the better presentation. But it should be other way around. The business should be good, structure should be good, presentation should be good, and that will be followed by the market cap, not the other way around. Sorry. So that's the one thing. And second, you actually hit a very good question on the ESG. I think ESG is going to be the future, no question about it. The whole world is committed towards the ESG. Asia has been behind the curve, in my view, but Indian companies are making good progress. They are realizing that it's a time where we cannot now remain behind. And a lot of global investors, including our global fund, looks at ESG as a very, very important criteria. That's one. Second, you look at the Western world. If you are ESG compliant company, your borrowing rates are much lower than the regular companies. So I think that practice is also banks should bring in this country, where a ESG compliant company should have a much more concession versus the non-compliant. So that will actually further boost this momentum of ESG across the basket. Today we are seeing is more towards large cap and large mid cap, but it should actually go into the complete basket. And within the ESG, the social is very important, because I'm really worried about the social part of it, where is inclusion or the safety standards or health standards. I think that's where a lot of corporates need to focus a lot on S, not the E and G. E is given in the world. Everyone talks about E. S is a very area which I think a lot of corporates should, voluntarily include, whether it's a social inclusion or the safety standards, health standards of the employees.
Right. Just knowing you, we are in the midst of the festival season, Vikram, and knowing you for so many years, I know that, 14th and 15th are 2 days where you always want to do kite flying. So thank you so much for taking out time for us. Are you getting old that you're not going to kite flying this time around?
It's a COVID which is telling us not to go. So last 2 years I've been away, 3 years in fact I can say. Normally I plan my kite flying and Vibrant Gujarat together. I normally attend that function. I like that area. I'm Gujarati, so I'm proud to go to Gujarat all the time, and I love kite flying because we're born in that culture. But yeah, let's see next year we can actually go.
My dad still flies kite and he's very fond of it, so I'm sure that you're not.
We did yesterday on our terrace actually. So we do every year on our terrace till when we are not going to Ahmedabad. But we did it in a solo way. We are the only 2 kites of the same family in the but we have done that. Yeah. Thank you.
With that, it's back to the speaker, and thank you so much, Vikram, for telling me. I myself learned a lot. I hope students also.
Thank you.
So now we'd like to open the platform for questions. If you have any question, please raise your hand. Yeah, Gaurav, go ahead.
Yes, sir. So thanks a lot for the session. It was really insightful. We had some really good conversations on inflation in the world market. So continuing the question on inflation, there have been talks of taper tantrum 2.0. Last time it happened, it was in 2013 actually. So I want to ask, basically for 2 economies, one for India and one for Turkey. So how will it affect, India as well as Turkey?
Okay, no, that's a very good question you asked. But Turkey, I don't track, so I'll be, honestly, I'll not be able to answer Turkey much because I'm not not tracking that economy as well. But let me talk about India, and that's a very, very good question, because 2013, I remember when the Fed just had a sneeze of tapering, and we have seen the big problem in Indian market, whether it's a currency, whether it's a debt market, whether it's an equity market. The reason was very simple, because India was over-dependent on foreign flows, whether it's the FPI or FDI, and also we had a huge current account deficit of almost 5%. So we were running short on dollar at that point of time. But I think, of course, that time government has done a brilliant job. Raghuram Rajan has done a very, very quickly covered everything. But 2022, if the Fed tapering happens, we may see a knee jerk in a global market, because Fed is ultimately a bacha of the currency world. 2/3 of the currency lies with them. So that's definitely going to be a tremor roller coaster ride, or you can say a sneeze for some time. But that's not going to impact India in a severe manner because of three reasons. One, we are much better in the current account side. Second, we have much stronger domestic flows, which is playing around. And third, our forex reserves are very, very high. And I think the RBI and the government is on the top of the things. And I believe that they've done a good job. And I think I'm not going to see that serious situation which we have seen at that point. You always have a sneeze and knee jerk because that's going to happen to every part of the world. It will happen to US as well. So it's not going to be so dangerous as what it was in 2013. And it's a known devil now, yeah, right? So once you have COVID, you know, next time COVID is not as bad as first time, right?
So sir, I took example of Turkey because in 2013 India and Turkey were at similar levels. They both were affected really well. But this time India is well prepared. I mean, India is in a better situation right now. So any other country, maybe not Turkey, which is not in a good condition right now and might be affected by this?
I'll rather say countries of the African side may have huge impact. The Argentina typical ones or the African countries have a huge challenges. Otherwise, I think some of the Asian countries have done very well in terms of managing the balance sheet, whether it's Vietnam or Philippines or Thailand or Indonesia. But I think you always have a tremor coming there, yeah. But India becoming now sizable country. 2000 to 2022, a big shift in terms of size of GDP, size of the flows, size of the domestic market, size of the forex reserves. Everything is gone through a sea change. Good question. Thank you.
Thank you, sir. And thank you, Gaurav, for your question. We currently don't have any more time to take further questions. It's unfortunate. But we really thank you, sir, for your wonderful session. It was really enlightening to talk to you and hear from you. And now I'd like to request Professor Hitesh Punjabi sir to propose a vote of thanks.
Good morning, everyone. I consider it as a great privilege to propose vote of thanks on the behalf of the Institute. Vikram sir, thank you very much for being a part of our event at a very short notice. It has been great session. I mean, I learned a lot of new concepts, and the way you analyzed it across the markets, macro parameters, micro parameters, across the sectors, you linked it. It was, it was amazing that you were at a tip that how do you correlated all the check boxes simultaneously and give your view for pre-COVID and post-COVID. What is the outlook? And you clearly stated that India is shining. India will shine going ahead for next decade. It was the best thing, what is heartening for all our students also and for everyone. Sir, I would also like to thank Mr. Pankaj Poddar from ET Now for anchoring the session very well. Thank you, sir, again. We're looking forward to interact you going forward soon.
Thank you, Professor Punjabi and everyone at the Somaiya College. Thank you so much. It's my privilege. Thank you.
Thank you, sir. Thank you.
Thank you very much, sir. Substantiating numbers with facts and policies, everything put together very well in the discussion. We were really enlightened to hear from sir. From here, we can move forward with the session. And as we know that in financial year 21, a total of 1.43 crore investors were added up to NSDL and CDSL. If that wasn't enough, over 8 lakh new investors were added to the previous tally by the first half of financial year 22, taking the new entrants to 1.51 crore. This influx of new investors has engineered this recent rise in the market. With new investors come many unknown factors to consider while investing in equities. And as we move ahead, we have the panel discussion lined ahead. So we are excited to now present the first panel discussion for the day and shedding light on equities investment. I am honored to introduce our guests of great eminence from the industry. Mr. Nilesh Shah, the Managing Director of Kotak Mahindra Asset Management. Sir has over 25 years of experience in capital markets, managing equity, fixed income securities, and real estate for local and global investors. Sir has held leadership roles with Axis Capital, ICICI Prudential Asset Management, Franklin Templeton, and ICICI Securities. Sir is a part of the member of Economic Advisory Council to the Prime Minister. Sir was a part of the team that has received the Best Fund House of the Year award at all mutual funds he has worked for. Mr. Sampath Reddy is the Chief Investment Officer at Bajaj Allianz Life Insurance. Sir has been with Bajaj Allianz since 2007 and has been instrumental in company's substantial investment performance. Sir currently oversees 11 billion US dollar assets across classes in both equity and in fixed income. Prior to Bajaj Allianz, he has worked for 10 years as a fund manager with PNB Asset Management, hedge fund Voyager, HSBC Securities and Capital Markets, and ABN AMRO Asia Equities. Mr. Prashant Khemka, the founder of White Oak Capital Group of Companies, a boutique investment advisory firm. Sir launched the firm in June 2017 simultaneously in India, Singapore, Mauritius, and has geographically expanded it to London and Switzerland over the years. Before setting up his firm, Sir has spent 17 years at Goldman Sachs Asset Management, most recently as the CIO and lead PM of Global Emerging Markets, Equity and India Equity Strategies. To moderate this session for us, we'll be having Ms. Nayantara Rai from ET Now. She is the news anchor and chief of Delhi Bureau at ET Now. An alumnus of Lady Shri Ram College of Women, she has over a decade's experience in media industry. We extend a warm welcome to all our guests and look forward to having a very informative session with our guests.
Thank you. Thank you very much for the warm introduction. Thank you, KJ Somaiya College, for having me here.
Welcome, sir. Welcome to Investrix 2022. Just wait for Nayantara ma'am to take over for the discussion.
And sir, if you could please share some words of wisdom with us while we wait for Nayantara ma'am, that would be great for us.
Sampath, go ahead. No, it's a pleasure to be here, and I am looking forward to share our experience and learning in the field of investment management. Investing is something where one should start early, and there are quite a few. As a student, you learn essentially the basics of finance. But as you go into the real life managing of the investment assets, it will be a totally great deal of learning that you will go through over the period of time. I just don't know where to start, but I keep telling these some of the to my team, and as well as wherever I've interacted with young people like you. We all study the same financials analysis and the balance sheet analysis and the ratio analysis and valuation concepts. But when you go to the investing, there's a whole lot of new things that we will learn in the industry. A lot of times people ask me, how do you look at companies and how do you value the assets? Why share prices keep changing every now and then? Sometimes they are up and down 5-10% in a day. What is it that causes that kind of volatility? As I say, for a simple asset like a car, which is in front of you, if I were to sell my car, all of you would bid a different price. Imagine a company which is manufacturing that car, where it is buying parts from thousands of suppliers and selling it all over the country. And if you need to put a value to that firm which makes this the cars and sales every year, how complex it would be in terms of valuing the equity prices. So because there are so many assumptions, so many underlying variables which are there assigning a value to the business, and also it changes based on what kind of expectation that you have from the asset class. All of these things will have a huge impact in terms of valuing your firm. There are a whole host of investors participating in the market. Somebody who is looking for returns of 10%, somebody whose cost of capital is even higher. For them, each different investors, the value of the firm comes to significantly different. So that's why it's quite a complex thing. As you practice, you will understand what all things that will have an impact.
Great to hear from you, sir. We also have Prashant sir with us now. I request you, sir, to join the discussion. We'd be happy to know how you developed your interest in finance, all of you, sir, because we are young students pursuing MBA and budding interests into various sectors. So your college days, your interest going towards finance. We have Nayantara ma'am also with us. Welcome, ma'am. You're on mute, ma'am.
Thank you for inviting me. It's great to see kids and college kids, MBA kids being interested. I wish in my time we had events like this, and maybe I would have been wealthier because of compounding, rule of 72, and all of that.
Over to you, ma'am. You can take up the discussion. We were just asking about how our panelists developed their interest into finance and their college days. How did this go about? So,
yeah, I was thinking a lot today, Nilesh, and I wanted to come with you on this one. When I was, 20 something, and whether it was my pocket money from college and after that, my first job, I think all my money went into what? Socializing and entertainment. I think COVID made sure that that is not going to happen, and we should have higher savings, right? And with markets at all-time highs, I think the first thing I want to ask you is that never, one way to look at it is that अगर आज equities में नहीं होगे तो कब होगे? But there'll be another camp who will say, नहीं, अभी तो market इतना ऊंचा है, we have to wait for it to fall. What will be your first thing that you will tell all the students here? Because these students want to, manage maybe other people's money, work in companies, but they need to manage their own affairs first, right?
So Warren Buffett started investing in stock market when he was 12 or 13 years old. And he is one of the richest person in the world. His only regret in life probably is that I started late. I should have started early. So learn from Warren Buffett. After being the richest person in the world, his regret is that I started late. I should have started early. Yeah. Now, all the students on this panel will be about 12 years age. So as per Warren Buffett standard, anyway, you have missed the bus. But in stock market or investing career, it's never late to start. If you invest today, Murphy's law will certainly apply. There will be down days. You'll have to live with it. When you were a kid and you went to a seashore Jung Chopati, were you afraid of going into the water? Answer is no. Waves were coming and waves were going, but you were enjoying this. The same thing is market. It will go up, it will go down like the waves. You have to enjoy it. And all of you have one big advantage, which neither me, Prashant or Sampath has, the age. We can't invent time travel and go back and start investing. You are starting early. Take advantage of this great India growth story. You heard Vikram speaking about how India is. You are born in a very, very good era. India will do well, markets will do well, and take advantage of that.
And Prashant, if I can come to you, why do you think if somebody has to start investing today, or even when they plan, is equities really the best asset class?
Certainly. So obviously and hello, first of all, Nayantara. Hello, Nilesh bhai. Hello, Sampath. Thanks for inviting me on this panel. And sorry if I was late because it was on my calendar as a start for 2:50. And I assume that generally when it's a start for 2:50, it's because the organizer wants you to log in 10 minutes early and just sit there waiting for everyone. So I'm like, okay, we'll join at 3. Then I got a message, or 5 minutes before 3, and then got a message at 2:45. You're already waiting for you. So I don't know where there was the slip, but apologies for that. And the other question was on whether equity. So I'm biased and conflicted is what I was saying, because that's the only investment by and large that I've done in my whole life. And starting way back in 1985, when markets were up 100% in a year, when Rajiv Gandhi became PM, that's still the best year that Sensex has seen. So just like right now, many retail investors are getting sucked into the market because market is up more than 100% over the last 18 months or so. I got sucked in as a retail investor. Fortunately, never left the market, as unfortunately many of the retail investors would do as and when the markets pull back. So one, I would say the bias has been because over the last 36 years have obviously compounded. While at that time in 85, as a teenager, I thought in my early teens, it's easy to double your money every year and become crorepati with the 5,000 rupees that I had in my piggy bank within 11 years or so. वो दिवाली मिलती थी.
Last 2 years they could have doubled it. 40% up the market. So last 2 years they could have.
Last year में हुआ है. Last year में हुआ है.
Last 2 years देखे तो हाँ.
Absolutely. So what that does is that lulls people into believing it can be done. At that time, it lulled me into believing every year, and now it would lull many people into believing it can be done every year or 2 years. So that's not going to be the case, but still, it presents the opportunity to earn the best return, particularly inflation-adjusted return when you look at fixed income. And Nilesh Bhai has a long track record in fixed income, so I have to be careful on what I say. Let me say, if you invest in fixed deposit, and I've calculated this because some of my neighbors had so much money, unlike me, that they only deposited their money in fixed deposit. And SBI fixed deposit safe and उसकी interest पे घर चलता था, savings होती थी, which they reinvest in SBI. If you had invested in fixed deposit over the last 36 years from 85, after tax, 1 crore of investment or 1 lakh, you can take it because it's a student community. Maybe start with 1 lakh, though not fair to be presumptuous. But 1 lakh would have become 1 crore and 1 lakh would have become 8 lakhs today. Only 8x over this time frame, right? So that's worse than inflation. Inflation itself would have been 13, 14 lakhs. And anyone who was, there in 85, I assume Nilesh Bhai would agree that, and Sampath as well, seems like, was mature enough at the time, so grown up enough at the time to realize that today 8 lakhs is not worth as much as 1 lakh back then. So there's been real loss of wealth in fixed income, whereas equities would have become, just in Sensex, if you had invested, 1 lakh would have become 1 crore 50 lakhs. So 1 crore 50 lakhs certainly is appreciation in real terms as well. So I call fixed income or fixed deposit as guaranteed loss of real wealth. Whereas equities are uncertain but compounding gains. That's what has been the experience globally, that equity markets over a prolonged period of time deliver returns in line with nominal GDP growth plus the dividend yield, and which globally has been in US, Western Europe and all about mid to high single digits in dollar terms. In India, it's been in low double digits in rupee terms, and if you convert into dollar terms, that's mid to high single digits. But that's what the market gives. If you do it right, you can earn twice as much. There are many people who earn more than twice as much, but if you really follow it very diligently and do your work, you can earn twice as much, and that's a very, very highly respectable number, particularly if you compound it over many decades. And if you apply the rule of 72 Nayantara, as you were saying, you'll figure out that would lead you to the riches that some of the biggest investors have accumulated over time.
Sampath, we had Nilesh opening the panel by saying that our audience community, who are all in their 20s, are probably already 10, 12 years too late. Can I begin by first asking you how old you were when you entered the equity market, just so that people can learn from experience? I'm going to ask all three of you this question.
Right. I started somewhere around 91, maybe 92, started investing in equity market. During those times, while I was studying in my engineering, I used to often go to our MBA college, the library, and sit there and read the Economic Times and other business magazines there. And that's how, I was showing my interest towards investing since my engineering college days in
Do you remember your first stock? Do you remember the first stock you invested in?
I used to invest in mostly the IPOs then. I never bought anything in the secondary market. During those days, it was 1,000 rupees per application. So later it was reduced to even actually you can pay only half at the time of application, and remaining only an allotment. So 500 rupees was essentially was needed for you to apply to become an investor then. And
which is your first allotment? Do you remember that allotment immediately? Was there a craziness at that time?
I do not remember, but I think I remember investing in Satyam Computers IPO. That was then one of the big good investments in the hindsight. And coincidentally, during those days, in fact, when I started investing, I used to invest in the company's IPOs if the registrar was the Karvi, because during those days there was no demat account, and when I was a little bit fearful, what if if money gets stuck, how will you go and ask them? Registrar was Karvi, which is there in Hyderabad, so I was living there. At least if something goes wrong, I had a feeling that I can go to them and ask them where is my money or the share application. That's how it was. But since then to now, the markets have evolved tremendously, and the equity infrastructure, the stock exchanges, and the application process have all improved tremendously, where at just a click of a button you can participate and make your investment, and the liquidity and even the time taken for the allotment as well as come down tremendously. So overall, the markets have improved a lot. I've seen the equity markets growing in India and markets becoming a lot more efficient in the sense, the regulatory environment or operational environment, the way the technology is being used in the equity capital markets overall is tremendously improved. It's a lot more easy to participate in our capital markets.
Oh yes, absolutely. And with that, Nilesh, I'll come to you because you talk a lot about penetration of the market. You're trying to do a lot to educate people also for investing and like I said, compounding wealth, securing the future. I'm sure you get asked this question a lot. Now, why does somebody also want to put their money in SIPs, mutual funds, do the research and do equities when they can put money in Ethereum, they can put money in cryptos, earn a quick buck overnight, because that, today's kids also seem to be far more impatient. What do you tell them?
So on crypto today, how do you value a crypto? This is $1 million question. There are 9,000 odd cryptos. Some have gone up since launch. Some have shut down. They have crashed 100% in a day. What we hear is the success story. What we don't hear is the failure story. Now, if you give us a company based on their balance sheet, we can make some judgment about their fair value. Whether we'll be right or wrong, time will tell. But at least we will be able to make a judgment based on some data, some analysis. On crypto, essentially, you are taking a call that tomorrow someone else is going to buy this at a higher price from me, and hence I should invest. Now, Nayantara, do you know that 30% of Bitcoins are now not accounted for because it has gone into those accounts where either hard drive has crashed or the key has been lost or the owners has forgotten the password. Now, these are all the risks in crypto. So our recommendation is that if you want to invest in crypto, please go ahead and invest. Know that it is high risk, high return gamble. Don't confuse it with investments. You only invest that much money which you can afford to lose without creating any pain, without creating any discomfort to you. On the other end, equities investment, it is not gamble, it is not short term. Think equity as a partnership. Now, suppose if I go to a student and say that, do you want to partner with Mr. Ratan Tata, Mr. Mukesh Ambani, Mr. Uday Kotak? Most people will say, yes, why not? They are the best and the brightest entrepreneurs of India. Now, how do I become partner of Ratan Tata? Well, when I go and buy shares of Tata Group companies, I'm a minority partner of Mr. Ratan Tata. How do I make Ratan Tata, Mukesh Ambani, and Uday Kotak work from me? I can do that only by buying their shares. So think crypto as a high risk, high return gamble. Think equity as a partnership with the best and the brightest entrepreneurs of India. That's how you should be looking at it.
So that's your take as far as cryptos go. Prashant, do you have anything? Because I thought it was good to ask this question because there are a lot of youngsters who are today saying, right, that why should I be patient, wait for years for my money to grow? इसने अपना पैसा triple कर दिया, उसका 5 गुना बढ़ गया.
Certainly, certainly. So I think Nilesh Bhai covered it quite well. Not a whole lot to add. It is the distinction between a gamble and an investment is a gamble is a zero-sum game. Ultimately, somebody else has to lose for you to make money. If you go in casino, there the house wins, so everyone is bound to over a long period of time lose. But even if you play amongst friends and all, someone has to lose for other to make money. Whereas in an investment, there is a value creation happening in the economy, in the corporate world, and you become part of that value creation. So you start with a double-digit advantage in a way. Well, if you assume, as I was saying earlier, the value creation tends to be in line with nominal GDP growth plus the dividend yield as market as a whole, you're starting with a double-digit advantage. You have to go out of your way to lose money, which many people do, by the way. But you start with a 10% return kind of now, which is very healthy. Now, when you try to double or triple money in short period of time, you have to basically either lever up, which ultimately results in bankruptcy in equity markets. If you have any material level of bankruptcy, so make sure your father can bail you out. Or you try these kind of asset classes like, crypto or others. So I would have, by the way, 5 years ago also, I would have said crypto is it's like a tulip mania and would have a very risky end. Sooner rather than later, you'll lose all your money. So I've been wrong. 5 years ago, I didn't understand cryptocurrencies. I understand blockchain and all that, but didn't understand cryptocurrency. I asked few people at my prior firm and all, attended sessions which talked about blockchain and the whole ecosystem, but nobody could explain to me, or maybe it is my shortcoming, but I haven't been able to understand how the Bitcoin can be a form of currency like US dollar is, or even gold is a form of currency. So until I don't understand, it's very difficult for me to value it. And if you can't value it, it's not sensible to invest in it. So as long as students here, if they believe they can fully understand and value it, then it may make sense to invest. At least I haven't had the time, and whatever little time I've given to understanding crypto, I haven't so far understood enough to value it. But if you can't understand the value of it, then it does not make any sense to invest in something that you don't understand the value of.
Fair point. And Sampath, you started your investment journey by researching and doing IPOs. We are in the era of IPOs. 60 plus listings is what we saw in 2021. And, the year which will be marked by new age companies coming to the large street. And we've all read those statistics. And I'm sure the students here have how the millennials, the Gen Zs, they took to brands that were going to the large street, from a Zomato to a Nykaa. But you also had, for example, a Paytm, right? In this year also, you're going to have many of these new age companies that are coming in for IPOs. How do you look at this new age space? Because, you all are also saying you should be able to understand value, you should be able to understand counting, but if you look at the balance sheet, they're not making profits. You don't know where they will be 10 years from now. It seems difficult to believe a Paytm will not be here 10 years from now, but look what happened to its IPO.
I think in the previous session, Prashant summarized quite well, regarding the the bitcoins, etc. Anything that you cannot understand, you should not invest in that. Similarly, same thing holds true for equities also. There will be some businesses which are a little bit forward looking. There are businesses which are somewhat more into the futuristic. Maybe some of the new age businesses, new age companies which are there today, they are trying to disrupt the way the current businesses are being done. That they're trying to bring in the new ways of or new technologies to the market. Some of them could be successful, some of them may not be able to successful. But that doesn't mean that they do not have a value or a value proposition, etc. You have to understand what the eventually profits are going to be, eventually what the cash flows are going to be, and then go ahead and investing in companies. there have been some good examples also in the past. The new age companies didn't have any cash flows for quite a long period of time, but eventually, even after a decade, even for a decade, they didn't have a cash flows, but eventually they, had a good set of cash flows. So it is a question of, how long you wanted to, wait and, have time frame that you have, and based on that, you have to take a call. For example, the Tesla, for instance, I'm not saying that, EVs are a good bias or a bad bias, etc. At this time, just about 2 years back, it was, less than $100 billion market cap. At that point of time, not many people were believing that, it was, it would make money, or, it would, how to value at that point of time. $100 billion was a crazily high market cap even at that point of time. Today it's $1 trillion. But if you go back and see, when the profits are also coming now. So like this year, it's likely to, 22 is likely to make a profit of $10 billion. So in that backdrop, even at $1 trillion and a $10 billion profit may be expensive, but if you had bought it at 2 years back, it was a great investment. So always, growth companies which are, into the futuristic kind of businesses, they always appear very, very expensive. Of course, there are some risk of failures as well. You have to budget for that. Even take, for example, in India, some of the, companies which have got listed and traded at expensive valuations in the beginning, even for instance, Avenue, IPO came at 300 rupees and, got listed at 500, 600. Even IPO price, it appeared expensive. Listing price also appeared way expensive. Today it trades, I think more than 4,000 rupees. I mean, today also it's expensive in terms of kind of multiple. Let's assume that, today it's trading, expensive, maybe at 40, 50 times, which is half the price. It could be okay, right? Even at the half the price, if you had bought it at the IPO or even at the listing, it still made a lot of money for you. So some of these companies which are into the, into the new age businesses, which have a high growth potential, they appear tremendously expensive. Sometimes it appears to be ridiculous at times. But not all the time. You will be successful. But to spot those good businesses which do well and which will become successful, and then you will make a lot of money on that.
And Nilesh, isn't this the future of the Sensex and the Nifty? Because that's what everyone says, right? In a couple of years from now, if you don't invest in these companies today, you're losing out on what the Sensex and the Nifty is going to look like in a couple of years from now. Because the composition will completely change.
So
Is this the next alpha? This is the next alpha I'm trying to basically get at.
See, change is inevitable. The only constant is change. When we were studying in schools, colleges, who would have thought that today's India will be like this? Today, you are seeing one India. Tomorrow, you will see completely different India. In our time, to get a telephone line, you had to wait for 10, 15 years. In the locality, the guy who had a telephone was the boss. You can't offend him. He will always get the first betting and first bowling. He will never feel, because you were dependent upon his or her house for your telephone. On visiting cards, care of number was a normal thing. Care of meant that, it is someone else's phone and they will call me. When we wanted to book a telephone, we had something called PP call, lightning call. I still remember standing outside, and I'm sure both Prashant Bhai and Sampath Bhai also would have stood out at 10 o'clock for making a phone call on STD, because it was so expensive. Now imagine today's students, if we say that this was the thing which was existing, they will look like, what are you talking about? I'm getting phone in instant. There's nothing called care of. We don't care in the locality who has a phone, because everyone has a phone. So change will always happen. And the change which is happening in society and economy will eventually get reflected into the Sensex and Nifty. Economy will grow, companies will grow, and companies which are growing better than others will be leaders and hence will be part of Sensex and Nifty. So as a student, you are not necessarily investing in index. You are essentially investing in companies which will grow faster than others and which will reward their shareholders. The other thing which today's students need to realize, that many a times businesses do well, But if the promoter keeps that good business with himself and does not share with other shareholders, then you don't benefit. So it's not only business, but also the management and governance practices, which is important. So my request, my recommendation to students will be start, with a small amount, make mistakes, don't repeat those mistakes, learn by reading, learn by talking to others, learn by listening to others, and then build your own formula which will allow you to make investments which will give you better return than inflation.
What is your philosophy then? Nilesh, to beat inflation. Share it with the children. Share it with the students.
So my philosophy is very simple, and it is coming from common sense. The first is that little drops of water make an ocean. So I continue to invest every month into equities, equity mutual funds. The second thing is that you don't put all eggs in one basket. So I have investments in equities, mutual funds, real estate, gold, fixed income, offshore investments. I always try to ensure that this portfolio on a yearly basis is delivering me real return, which is better than inflation. Number 3 is that you invest for long term, because you can't expect a mango in less than 12 years. When you plant a mango seed, you have to wait for 12 years to get good mango. The same thing is true in investment. Just because I have invested today, that doesn't mean that it will start delivering return tomorrow. So these 3 simple principles: be a regular investor, be a long-term investor, and diversify your risk has been good enough for me. It has delivered better return than inflation. My wealth has increased in real sense year after year.
And Prashant sir, you want to share with us your investment philosophy? And I'm also asking this because, given the technology, the explosion of fintech, the kind of information that's out there, everybody today thinks that I on my own can be in the market, make a lot of money, and we got a sense of realization with what, I don't know if everybody read it, what Nitin Kamath of Zerodha said, right? He tweeted, and he actually said that everybody wants to be a day trader, but less than 1% are actually beating fixed deposit rates.
Certainly. And then I like the analogy of mango that Nilesh but Nilesh is a teetotaler. That's why I guess I always give the example, because I do indulge myself once in a while. I always give, if you want a good whiskey, you age 12 years. So you can't rush that process. And if you rush the process, the outcome would not be desirable. And same is true for those who want to double their money every year or other year. The outcome would not be desirable if you take the risks associated with that, and you must make sure your father can bail you out, because you would be there if you take such risks. And I'm talking with experience here. Better to learn from experience than to commit the same mistakes yourself. And on the, I think Sampath also very well captured how to, when we say value, it did not mean price to earnings multiple. In fact, we don't look at price to earnings multiple at our firm at all, or any EV/EBITDA multiple or anything. Because many of these businesses may not have any earnings or even cash flow right now. But value, we all learn in school, and it's fundamental 101, business 101, finance 101, valuation 101, that value of any project or company is present value of future cash flows. Assume all your students would have learned in that. Once they start practicing, either on their own or in future in companies, they just go with what the flow is and start talking about, all these thumb rule metrics and all that. Sasta hai, P multiple single digit hai, ya jo bhi hai, to wo le lo, ya. So the valuation approach has to be right, as Sampath very well outlined. The thing with Bitcoin is there's no cash flows to talk about. So how do you value that? As Nilesh pointed out, you're just buying with the hope that someone else is going to pay more for it. There's not cash flow associated with it. The The thing I would add is right now, while we are all talking about investing, a lot of the students probably are in a phase of not having accumulated wealth. Expenses हो जाते हैं. So at this early age, it's very crucial when you don't have money to invest, very crucial to save to be able to invest. In the very early stages of your career in life, saving would be your earning, if you will. At some point, if you invest that saving appropriately, then your wealth would work for you, right? But initially, you will have to work to accumulate that wealth. As one example, I'll give you. When I was in college doing my MBA in the US, Vanderbilt University, I was on a full scholarship, so I didn't have to pay tuition fees. I was on fellowships. I was getting paid to do research for the professors, which would give barely enough money to earn a livelihood. But I would not buy I loved cappuccino. Back then, I had the stomach to drink it as well, though now I don't. But back then, cappuccino would cost close to $3. As a plain coffee would be $1, right? So I'll say $2 extra. And I always had in mind that chalo double har saal nahi kar sakte, but in 3 years you can double. So 10 saal mein, if you double in 3 years, 10 saal mein paisa 10 guna ho jata hai. 20 साल में, sorry, I'm reverting in Hindi, but in 10 years you multiply money 10 times if you double every 3 years, 25-26%, right? And I always felt confident utna to will be able to expect. 10 years में 10 times, 20 years में 100 times, 30 years में 1,000 times, and 40 years में 10,000 times. So I would say right now I'm giving $2 extra. That is like going to equivalent of $20,000 40 years from now. And then I would cut inflation and I'll see kitna 40 years mein samjho money, inflation would quadruple at 3% dollar return. So today you are paying $10,000. I don't need that expensive a coffee. Now that may not be. When I tell that example to my kids, they start laughing. They say, let us enjoy our life, and that which may be true for them. Because as someone said, I'm my father's kid, they are my kids, right? But even if not to that extent, you have to think of when you're spending, whether you'll get more joy, and at least to, I think all of us here on the panel, the joy of saving that money and investing was more than the joy of drinking that cappuccino versus the black coffee. And so when you don't have money, and I think a lot of students that I see today, their spending patterns are quite, by our standards of the 80s and 90s, quite profligate, I would say. And if to make money, rather than doubling or tripling every year, the focus should be to start saving and earn a real return. And then you see how you can maximize that return. Obviously, Nilesh Bhai spoke about having a very well diversified portfolio. Also, your comfort factor and the age and responsibilities also plays a role in that. For most of the students, most of their net worth lies ahead of them, their earnings and whatnot. For many on the panel, we are 30, 40 years into the game, so we can't take as much risk as what some of the students here can take. But the risk has to be prudently taken. Just because you can take risk does not mean you keep going down to, not the right idea to keep going down to zero. For taking risks that can take you down to zero. Because once you go to zero, there's no mean reversion.
It's absolutely right about saving as well. Like, in my time, there weren't many options to save. I mean, to spend money, right? So there was one clothes brand, Benetton, or there was very few restaurants, this, that. Nowadays, we are being chased by so many people, so many brands, so many fintechs who are saying, buy now, pay later. There's so much that is being said about consumption as well. So Sampath, you want to come in there for your investment philosophy, how to start? Like how much should you save in a month? What percentage? And of course, everyone's experience will be different because everyone's circumstances are different.
Right. And of course,
what would be a good way to start? What would be a good way to start?
Right.
Basically,
when as a student, when you get into the career, once you take up the job from the college, one first thing is that one should learn to live within one's own means. Whatever the salary that you are, when you should be spending a lot less than that what you're earning, and save substantial amount of that money. And given that you have a long earnings profile ahead, earnings, several years of salary and of course growth of the salaries and bonuses will be there. You have a lot more ability to take risk because you have a lot more working career ahead. So you should put substantial amount of money towards, I would say, high return oriented, assets like equities. And a lot of times, what people worry about is that, whenever we go and see and talk to the investors, is it a good time to, get into the investing? I think there is nothing like a good time to getting into investing. It is, as soon as you have your savings, as soon as your income, you must save and, you must begin to invest in that. One should not worry about where is the market. Today people are worried about, markets are rallied in the last 2 years. Is it a good time to buy? That kind of, thing one should not get into it. In a long period of time, even if you're bought it, go back and see, even if you're bought in the previous peaks, where also one would have made a substantial amount of returns. As Peter Lynch says, a lot of money has been lost in waiting for the correction than in the correction itself. What it means is that, you think that markets are expensive today, and you are not investing and staying in the cash for some more time, thinking that you will, wait, you will buy in the corrections. But actually, in the reality, markets will, stay at higher levels of valuation for substantial amount of period of time and may correct for some period of time, and you would eventually miss a larger bus to compound your return. So that's a very important thing. Do not worry about the current level of valuation. As soon as you get into the the earnings mode, you should save and begin to invest.
So they say that don't time the market. That's what they say. Do not time the market. Nilesh, do you remember your first investment? What was the first stock you bought? You remember it?
My first investment was in UTI Mastershare. It came out in 1987. And even today, I am proud owner of that. It has, what amount I had invested in 87, today it delivers me much more than that by way of dividend. And I'm still continuing to own it. At the same time, like Sampath in 1991, thanks to bull run in market, I also got lured into secondary market, primary market. And majority of my investments made during that time period, I have lost 100% of capital. I was lucky with UTI Mastershare because I was riding a professional. I didn't invest on my own knowledge. But then, the greed of doubling money quickly take over. And I started investing based on tips, which you were getting dime a dozen in those days. It was a complete Wild West in stock market. And in my first probably 5-10 investments, I lost 100% of capital. So there is, always a good and a bad start. The good part was that I lost 100% of my money on very small amount, and it gave me a lifelong experience. So it was price worth paying.
You learned early on, not to ride on tips. I think that's the other thing all the youngsters need to learn. Tip de do, the tips come. The tips were so good that everybody would act on it. How will you make the money, right?
So please remember that other than your mother, father, no one is interested in your well-being, especially the guy who is giving the tip. He has no interest in making you rich.
And Prashant sir, do you remember the first stock that you invested in, and do you still own it?
So see, the investment journey started in July 1985 when my great-grandmother passed away. And as was ritual, at that time quite closely followed, extended family would gather at home for 12 days. And there are like 40, 50 people. And all the gents in the family, all that they would talk about how they're making a killing in the market. This stock quadruple and that stock tenfold. Obviously, the names were different. Tata Steel was called Ordinary. Tata Motors was called Locomotive, and so on and so on. And some of the names then there were blue chips no longer exist today, like Baroda Rayon, or they exist in very tiny form, like Baroda Rayon and many others. So at that time, I was very fascinated. So we were brought up in a middle class, upper middle class family. As Nilesh Bhai said, we were the ones who didn't have a phone, whereas the neighbors had the phone. So So I always wanted to figure out how to, they all had factories and all that. So until then, in my mind, it was that to make money, you have to build a factory of some sort or the other. At that time, I felt like this is a legal, ethical, honest way of, as I was saying, doubling your money every year. So I got super excited and started working on this. I was 13 years at the time. So my father was very much against. Father thought that stock market was for the uneducated or college dropouts like himself. Like you study and become an engineer and start a factory or something. So, but I was super excited. My grandpa very much encouraged that. We had a portfolio, as Sampath was saying, we always would invest in IPOs. So we had a portfolio of over 150 companies. So my grandpa would encourage me to read the reports and tell him and summarize and all those. So that's how I started driving the family portfolio, because I became more knowledgeable than father and grandfather, who didn't pay much attention to what they're buying. And then would tell them. So the first memory is the memory of getting something sold from the family portfolio, which I never heard the end of from my father, because that then stock went up and 10-fold, 20-fold and all, which was Century Bazaar, which still is around, by the way. But I was like, Century Bazaar is hitting all-time high, 800 bucks or something, or kitna uppar jayega, let's sell it and buy something which is 12-month low or something. That was the mindset of value at the time, and very naive. That was that. My father didn't allow me till I was 18. He said, until you are an adult, you can't invest personal money in your account. So he allowed me to piggy bank his name till I turned 18. But when I turned 18, and even along the way, did the same thing as Sampath did, applying a lot of IPOs in the family names. Some of the IPOs would apply 50 on 50 names in a family of extended family of 10, 12, because Rajendra was dad's name. So Rajendra Khemka, Rajendra Kumar Khemka, Rajendra Shubkaran Khemka. As many bank accounts you have, you can make the 500 rupee applications, as Sampath said, because making 500 applications increase your odds of allocation. If you make one 5,000 rupee allocation, you will get maybe 50 shares or something. If you make 10 500 rupee allocations, you might get 100, 200 shares. So that's how started. My personally, when I was allowed, I remember Vinyl Chemicals as one of the first IPOs that I applied with, and Bliss Chemicals and Digital Equipment. Digital Equipment got acquired by, I think, Aegis Software or someone later on. But Bliss Chemicals, Digital Equipment, and Cochin Refineries were amongst the earliest stock that I bought from the money that my dad gave, because I scored well in my high school. He gave me Tata Chemicals ka shares, which I immediately sold for 12,000 bucks and rolled that money into name of my companies of my choice. It's a long answer, but that
no, but very insightful, right? No, I think, all of you also pointed out that you put it very politely. I'll say it more crudely. Only fools don't learn from their mistakes and other people's mistakes, right? So let's talk about mistakes too. Sampath, I'll start with you. We started with you about how you started the investment journey. What was the worst mistake that you've ever made in your investment journey?
I mean, there would have been stocks which have gone down, almost like 70-80%. That I would not call that as a really mistake, because that I don't think overall as a portfolio level hasn't had much of impact. But what I felt and learned is that never exit or sell out of the equities in full just because the markets are overvalued. Overall broad market is overvalued, or even if markets are in a bubble situation. There are always, even in the extremely overvalued, across the board, kind of a market which is overheated, there will be pockets, very, very, very few pockets which will still be, of deep value. So, don't change your asset allocation just because, the market appears to be very extremely overvalued or in a bubble zone. I mean, you may change or tweak a little bit, but no need to exit, fully. And find the small pockets where still the valuations are attractive. Go back and see that during the technology bubble, there was whole host of old economy stocks were quite cheap. Or during the 2007-8, the highs where most of the infrastructure real estate companies are trading at high valuations. There were small pockets where valuations were attractive. Even today, even if you feel that markets are relatively overvalued as compared to what they've been trading, there would still be pockets where the valuations are attractive. So do not, exit the market because, you're somewhere in a market, over a period of 20, 25 years, you would have seen the markets, getting into the, sort of a bubble zone kind of thing, or, excessive valuation zone. And of course, there will be periods where markets are in a terrible bear market. So do not, exit the market, or change the asset allocation so drastically just because the valuations are so high. Because you find for an opportunities where the values are good.
In fact, this is such a timely conversation to have because, all of those who are tuning in right now will also be like, yeah, market's 40% बढ़ गया पिछले 2 साल में. Now everybody's saying temper your expectations. 2022 cannot give you like what 2020 and 2021 did. We started the year and, I would urge all the students here to subscribe to the Howard Marks, blogs, etc. He's written just yesterday a memo when it comes to booking profit. So Nilesh bhai, this is very topical, right? What Sampath is also saying, because now anybody who's getting in will also be reading that valuations are overstretched. There's going to be PE compression. We will have interest rate hikes in the US. The liquidity is going to go away. That bull run is going to go away. So this is a very timely conversation to have also right now that, should you stay away from the market? Should you sell? Should you enter?
So when I was doing my articleship, my office was next to a broker's office. And, in those days, it was physical ring. You had to go into the ring and come back. So at 3:30, the sub-brokers will come and then the clients will call them. So there was this one particular broker who had written down, on one piece of paper, why markets have gone up. So he'll have his own, points. And on the backside, he had written why markets had gone down. And every day, depending upon whether market has gone up or down, he will repeat those points. By and large, those points are valid even today. Oil prices goes up, market will come down. Oil prices comes down, market will go up. That was true in 91. It is true in 2021. At the end of the day, there is only one cardinal truth. If there are more aggressive buyers, prices rise. If there are more aggressive sellers, prices fall. But at the end of the day, there are equal buyers and sellers. Number two, many a times, risks are discounted by the market. Sometimes you see a company declares huge loss and the share price actually went up because markets had discounted even bigger loss. So they are surprised positively by lower losses. Many times company declare great result, huge profit, and the share price falls because market had discounted even higher profit. So ups and downs of markets will continue. There will be 20 factors which will come and hit you. In Jan 20, I had no idea COVID-19 will bring market down to 7,500 Nifty. At 7,500 Nifty, we advised people to be overweight equity, but had no idea that Nifty will be 18,000 in Jan 22. It's difficult to predict future. I haven't met anyone who can predict future. So stay invested with your disciplined asset allocation. Buy good companies, stay with them, back good managers, and you will get wonders on your portfolio. But you will have to take the volatility on your chin. Prices will go up as well as down. You will have to live with that.
Nilesh, this is not being televised. This is for students. And I want to say that for all of you, right? I just make that very clear. So you tell us, I'm a student, and I'm asking this on behalf of the students. A student of KJ Somaiya comes to you and says, Nilesh, here, I've borrowed from my parents. This is what I can afford. This is what I've saved. This is my pocket money, whatever. Here's 10,000 rupees. What should I do to start my journey?
So if you have borrowed money, I will tell him that please return the borrowing. You don't make investments on borrowed money. Second, I will tell him that this 10,000.
Also, let's assume this is MBA school. They all might have work experience and saved.
Yeah. So this 10,000 rupees cannot be your starting and end point together. This has to be starting point. You will continue to get surpluses in the future and you will be willing to invest into that. As Prashant mentioned, these are all very young people. They have a long career ahead. Their wealth creation journey is just starting. So they can afford to take huge risk on this portfolio. my recommendation will be that either you invest on your own research, do research and find out some good companies and invest into that. Doesn't matter even if you go wrong. Or you give it to a professional fund manager, put money into a small cap fund. It's high risk, high return fund, but you are investing for such a long period of time that will be appropriate. So either do your research, chart your own path, or give it to professional fund managers. And in my case, I just gave an example. I invested in UTI Master Share. It was on some professionals, confidence. It has worked well. All my first 10 investments, I have lost complete principal.
For Prashanta, you've already told us that you were a rebel in the family and how your journey started, right? So let me ask you the same question. Now, everybody's not going to be a rebel like you in the audience.
I think, as Nilesh bhai just said, see, those who want to pursue this as a career or as a hobby and a keen interest and spend a lot of time in future, they can do their own research, they'll learn and make mistakes and lose. But if there is a time to lose money, then this may be the time, but not borrowed money. Again, I would say borrowing would not pay off dividends. But if this is not something that you're going to do full time or have a passion towards, it's better rather than taking undue risk, to let an expert, a professional manage it. Yes, there is a fee associated with it, but it is just like, when you run into legal trouble, you hire a lawyer. When you have a health problem, you hire a doctor, you pay them all. And with finance, you have to hire and to manage your money, you have to hire an expert. Unless you yourself, in case of finance or in case of investing, if you yourself want to pursue this over time, then it's a very exciting field to do the research, and maybe you can do a mix and match of both, learn from what the experts are doing and yourself learn on your own as well.
And there was last year, there was this book, and I would urge everyone again to read it if they haven't. It's called Psychology of Money by Morgan Housel, because it also goes into the fact how everybody's touch point with money and everybody's experience with money is different. And it also determines which asset class, how to do about it, and how the advice you may get from your parents will be based on their own insecurities. It could be based on the fact that they didn't have a house and they had to worry all their lives about ab kahan jayenge families ke saath. So they will advise the children, the first thing you do is you save up to buy a house. So once again, Sampath, coming to this point, now since everybody's touch point with money is different, everybody's needs are different, everybody also what they want to do with money is very different. What's the best way of starting? Let's say if I come to you with that same 10,000 or 1 lakh or whatever it is.
Right. I will come to that. But just I wanted to share my experience. As how I started in the professional research. When I was working with in my initial days as a sell-side research analyst. After being an associate for a few years, my boss asked me to write a research report on the Carrier Aircon. That time it was listed company, and this was an air conditioning making company. So what I first did is that I felt it's a great opportunity for me, and I must do a good job. And I went and bought my book, which is which we studied in the mechanical engineering, about refrigeration and air conditioning. So everyone in my team was pretty much almost like laughing. What am I doing? That was not what I was supposed to buy. I was supposed to go and check the annual reports and read about the company and financials. Not about how to what the technology behind the obviously the air conditioning. So it's important to focus on reading about the company's businesses, company's financials, and go through and read the annual reports of as many companies as you can. Observe where the demand is growing, where the I remember some of the quote of one of the E&Y chairman said, we follow the money. Wherever the money goes, they go in terms of as a consultant, as a business people. So you should also observe what's happening in the economy, where the whenever let's say the budget is coming, where the government is likely to to spend more money and try and understand about more and more about those sectors, and think about listen and follow the big business leaders, big corporate houses, and see what they are speaking, where they are trying to expand into the new businesses. These are the places where the new investment opportunities will be there, and try and read through their financials and understand about the businesses better and better. That will give you the more insights into how to go about choosing which company to invest in, all that. So today, if you are given, and what I will do is that as a student, I will keep reading business newspapers, keep reading business journals, understand where the money is going, where the investments are happening, and pick out some of the companies where you like, and read their annual report, read the financials, and try to get a have an estimate of value, and develop that technique. That's a good thing to go about it. What makes a good analyst or a good fund manager versus the rest is that to eventually to have a fine judgment of the value for the business. I mean, everybody knows how to value the company, whether it is DCF or a whole host of multiples, but eventually you should develop a knack to assess the value of the business, value of the the overall how the eventually the the company shapes up, and you should go right on that. So develop those techniques and skills, and that would be a great thing to of use.
Okay.
Yeah.
I think we've covered a lot of ground, and I think Nilesh has also put it very well that nobody can predict the future. But as final comments, as we throw open to the audience, I think what I'll leave it with you, Nilesh, for final comments. Like you said in 2020, did you ever dream that Nifty would be at 18,000? You were at 7,500, saying that, boss, what is going on, right? But like you said, and you said that right up front, this is India's decade. So if this is also going to be India's decade, is it also going to be the decade of the Indian equity markets? And therefore, one should not worry about कि मैंने ये company खरीदा या वो company खरीदा. You should just bet on the index. Basically, I'm just trying to get an outlook of your markets and your philosophy right now.
So, Nayantara, the future is going to be in the hands of the students we are talking to.
Yeah.
And I'm talking on behalf of both Prashant and Sampath. In our generation, if our parents didn't give the capital, it was very difficult to start a business. All three of us are, for a bulk of, both me and Sampath are still employees. Prashant has now turned an entrepreneur, but that is after he has worked for a long period of time. But today's generation, including our kids, won't require our capital. If they have idea, they'll be able to raise capital in venture capital market, private equity market. This is the biggest change which has happened in India. Earlier, our IIT, IIM students will go abroad for better future. Now they are saying that we will create better future in India. Availability of capital to entrepreneurs is the biggest game changer. And these are the students who will create the future. I still remember a story of Mr. Uday Kotak. He was MBA student in Jamnalal Bajaj Institute, started a non-banking finance company in the 80s, and 1 lakh rupee invested then today has become 1,000 crore because the NBFC grew into bank and bank grew into even bigger bank. There will be so many Uday Kotaks in today's generation, and choice is yours whether you want to participate with them or not. Now, some next to Uday Kotak may create 1 lakh 200 crore, some may create 1 lakh to 10,000 crore, who knows? But the tide will be there, which will be rising because there is availability of capital, because entrepreneurs are being created. And compared to our generation, this generation will face lesser hurdles. It's not that they will not face hurdles. They will certainly face hurdles. Not everyone will be successful. Many will fail. But average success rate will be far higher than our generation. And it is up to you to participate in that growth story.
Yeah, I sometimes wish I was 20 and, this one, because, what I would have
Nayantara, you are 19. Who says you are more than that?
Yeah, but I wish I was there 8 today. And I'm telling you before this panel, I was telling my family, I'm sorry, my dog is barking. We're all doing work from home. But I also know that it's my dog has announced it's lunchtime. And anyway, I think it's time for the audience thing. So it's over to all of you for the questions and answers.
Thank you so much, ma'am. Thank you, everyone. We do have some questions from students and from the audience. So it's a common question for everyone on the panel. The first one I'd take is the ECLG scheme has created a financial cushion for the MSME sector, and now reports are coming up for this preventing assets of the bank slipping into NPAs. So what are your views on this, sir?
So the ECLG scheme came from Government of India, whereby they give guarantee to the banks so that they can extend loans to small and medium enterprises which were hurt by COVID pandemic. Now, this has given a breathing space. SBI CAP came out with a research which showed that more than 1.5 crore MSMEs benefited because of the ECLG scheme. But at the end of the day, money alone cannot solve the problems of MSME. Let me give you a small example of how MSMEs can prosper. So this is a story about a town called Morbi in Gujarat. It was completely devastated in the 80s by a dam burst on Machu River. The entire town was flattened. Now from that rubbles, Morbi entrepreneurs came out and they started making tiles. They started making tiles because mitti was available nearby in Than, and they started making tiles. But this entire business was more unorganized, more small scale, without any control on pollution. A majority of business was in black. One day, Gujarat High Court came and gave an order that you can't use coal anymore for firing your kilns. You have to use natural gas. With natural gas, which you cannot procure in black market like coal, the Morbi entrepreneurs had no option but to convert their entire business from black into white, because the government authorities were able to calculate based on natural gas supplied what calorific value was burned and what kind of tiles you can produce. Now suddenly there was need to come from darkness to the light. And Morbi entrepreneurs responded by focusing on quality, by increasing size, by focusing on exports markets. There was a time when we were worried that tiles imported from China will overtake Indian market. Today, Morbi tiles are exported for more than 7,000 crore, and they are giving competition to Chinese tiles in Middle Eastern market. The whole journey from being small scale to larger scale to get economies of scale, from being darkness to light by paying fair share of tax, by becoming responsible to society by controlling pollution, all these things has resulted into Morbi today becoming a grooming town. When you travel from Ahmedabad northwards, you see glitzing factories. They are there covering the entire highway with advertisement and so on and so forth. This is the future of MSMEs. You have to focus on productivity, economies of scale. You have to come together in light, in white economy. You can't operate in black economy. And you have to invest for social contribution. If you put all these things together, MSMEs will do well.
Definitely, sir. Thank you so much. Sampath sir, Prashant sir, would you want to add anything to this?
No, I think Nilesh Bhai covered it very well. Best position to cover on this topic from my perspective.
Sir. Thank you very much, sir. The next question that we have is, are SEBI's new regulation in the capital market practically playing out in the favor of small investors, which they are vying to protect? So, anybody on the panel? So it's an open question.
Defer to Nilesh Bhai on this one again.
So SEBI as a regulator has been doing a fantastic job. But please remember that they will always be accounted like a goalkeeper. A goalkeeper is always remembered for the goals which he allowed to score, not how many goals he has saved. I think if we do an independent analysis of SEBI, since its formation in the 90s, they have done a tremendous job. Both me, Sampath and Prashant has grown an era where Bandho, Patawat, Valan, payment crisis, these were all part and parcel of vocabulary. No matter what share you sold, it was always sold at the lowest price of the day. And no matter what share you bought, it was always bought at the highest price of the day. And the brokers were calling this as, Garo. That is the difference. And it was officially acknowledged. Newspapers were reporting company circle buying, company circle selling. Insider trading was officially acknowledged. From that wild west, SEBI has today brought it down to current market where payment crisis we have never heard about. Difference that does not exist anymore. We have world's largest volume in terms of number of shares traded, in terms of number of companies listed. Governance standards have improved. Obviously, there is still scope for improvement. But unlike SEC, which can record suspects' phones, they can wiretap phones. SEBI does not have that luxury. Overall, SEBI has made financial markets fairly safeguarded for the retail investors. We invested when we were starting our career. There was a IPO for 8,000 crore from Master Gang 1992. And it had so much of problems because of size in terms of refunds and investor complaints. You have recently seen Paytm IPO of 16,000 crore. In 7 days, the allotment happened and there's no investor complaint except for the price performance. So a lot of things have improved. A lot of things have improved for physical infrastructure of our markets. They are at par with the best in the world. There's still some scope of improvement in terms of implementing governance standards, improving insider trading rules and regulation. But then these are all work in progress. And one day, like SEC, SEBI will be equipped with powers to enforce insider trading rules and regulations by wiretapping and stuff like that.
Maybe I would just provide some backup numerical evidence to what Nilesh just said, that India ranks amongst the best when it comes to minority investor protection because of all the actions that SEBI and the regulators have taken over the last 25 odd years. India today ranks 13th best as per I believe this is World Bank Doing Business report. So while overall we rank at about 60th or so in terms of ease of doing business, when it comes to a subsegment which is minority investor protection rank, India ranks 13th, 1-3, which is well ahead of many of the developed nations, as was pointed out, and certainly ahead of most of the emerging market peers like Korea, China, Brazil. Brazil is like 61 compared to 13 of India, or certainly Russia, which is even down the line. So in that respect, the dramatic change over the last 25 years has been very impressive.
In fact, the recent move of moving the equity settlement towards from T+2 to T+1 and then T+0, there we are the ones who are proposing. India is the one which is proposing, and most of the resistance is actually coming from the FIIs who are present in the developed markets. That way, our infrastructure is extremely good. I mean, the kind of processes, from 3-4 months to now till just about 7 days of IPO completion, all of those things have improved tremendously. We rank one of the best globally.
Yes, it's one area where it seems like India and the regulators is not satisfied by being 13th best, and wants to keep driving towards being the number one, and that's the way I think every function or department, if we can have that kind of drive, then India overall as ease of doing business can also drive towards number one.
Definitely, sir. Thank you very much. Numbers and facts and understanding all put together very well. Thank you, sir. Hitesh, sir, next you can ask the question, sir, please.
Good afternoon, sir. One question which is there in my mind, which as a retail investor is very difficult for us to analyze it, which is very, very important key parameter for doing a fundamental research. Corporate governance. I mean, how do we judge the management? That's a very difficult task. We have seen a lot of instances have happened in past where we have gone wrong. So, I mean, if you all can highlight, how can we get a gauge of management, whether it's a good management or not? That is what, I mean, we would like to know.
Just on the lighter note, we feel that nowadays, we have lost our edge vis-a-vis most of the other people versus what it used to be when we started our career. I mean, during, about 25 years back, 20 years back, access to the companies was pretty much nil for if you're not from the from the investment management industry. And even companies used to report only once a year the numbers, and only if you're talking to the company regularly, you used to get some information. And there's not many websites used to be there. You have to physically go to the company's office and collect, or you have to from the magazines you have to take the data into the Excel sheets and all that. So data is not easily available during those times. Today, even the conference calls are also on the pretty much, I would say, on the CNBC. Transcripts are there on the website. Entire information access is pretty much uniformly available to the people who are in the investment management industry, and who are as well as common public. I think there today there's there's really, I would think that there's not much of difference. It's all you just need to make your own effort, and all the tools and the information and access is pretty much available. And as far as the governance is concerned, that is something which is comes with an experience. As you interact with the companies and what they say, what they do over a period of time, you understand the companies are doing the right thing or wrong. That's how or governance is something which is not available in a data format. It has to be learned and gathered through the experience of several data points and observations over a long period of time. It takes time. I think that is what is probably something is still having a is an edge with professional fund managers like us.
I would just add that while professional managers are by and large, let's say, have a advantage and better access still to some degree, but it's and the capabilities also. But it's not mere capabilities which are important. Equally important is the desire and focus to research on corporate governance, and whether you assign it the appropriate importance. And that is the reason why you see that professional money managers around the world make some very obvious mistakes with the benefit of hindsight when it comes to corporate governance. And as Sampath pointed out, right, compared to years past, the difference is vastly narrowed in terms of access to information. Is the desire and focus, and also to some degree training and capabilities, which I assume at college you are trained to identify some of the aspects, and then you have to do on the ground research, talk to people in the industry. And Sampath mentioned the conference call transcripts available. Google it up online. There are a lot of blogs and available information, and try and come to an informed decision thoughtfully. But nowadays, with the market the way they're going, people shoot first and then look to aim. But if you take the trouble to aim first, you'll be able to.
Yes. Thank you. Thank you.
Definitely, sir. So definitely this discussion has woken the investor within all our audience and all the students here. So thank you very much for the discussion. I request Hitesh sir to propose the vote of thanks for the session.
Yes. I mean, I am running out of words. What I have learned in last 1 hour, I would say we have hit learning-wise the upper circuit in markets today. I mean, to tell you frankly, I have been making notes and I have been running out of pages here. I mean, so much of information has been come across, which was not available to be the knowledge, the wisdom, what has been shared, I mean, is tremendous. But the few important key takeaways, I mean, I'll select only one or two, is be patient, stay in the market, stay invested, don't gamble, invest what you understand the most. That is what is a philosophy. And take your time, don't hurry, money will not triple. Understand the concept of compounding. That works excellent. That is what is a major takeaway from, I guess, from our panelists. I would sincerely thank Nilesh sir for taking out the time and being a part of our event. It is privilege, sir, to have you. Hope we would have enjoyed it to have you at our institute, but hopefully next year we'll try. Sampath sir, thank you very much for again being a part of our panelist. It's a great privilege to have you on the panel. Prashant sir, no doubt about it. Again, taking time out of a busy schedule and making it for an event. Thank you for sir for the same. I mean, I would say that today we have all the jewels lined up, and I mean, it is amazing for our students to get such kind of knowledge today from all the key experts or stalwarts, we would say, from the markets. I mean, thank you, sir, for all your support.
Thank you, Professor, and thank you, Nayantara,
thank you.
for coordinating.
Thank you.
Like thank you. Thank you, Nilesh.
Thank you. Bye, everyone.
Thank you, sir, for the wonderful vote of thanks. I'd now like to introduce our next panel. So, investment in assets is no longer limited to stocks and bonds. A wide range of investment classes, from art to cryptocurrencies, and the most recent fad of NFTs, and much more, has helped in diversifying one's portfolio, making the alternate asset classes extremely lucrative. But with the potential of high gains comes high risk. Let's find out what experts feel about it. We have an extremely intriguing panel discussion on alternate asset classes in the next segment. I take immense pride in introducing our guest panel for the distinguished experts from across the sector. Mr. Ashish Dave is the CEO of Mirai Asset Ventures Limited. So manages $1.5 billion in venture capital for Mirai Assets Group, a leading multinational financial group with over $450 billion of assets under management. Sir is a highly experienced investor and board member and has been in the VC ecosystem for over 14 years. Sir was earlier with Kalari Capital and Mumbai Angels Network. Mirai's portfolio includes many of India's famous unicorns and decacorns, including Ola Cabs, Big Basket, Zomato, Unacademy, ShareChat, and Byju's, among many others. Sir has been listed in Fortune's 40 Under 40. Being an angel investor, Sir spends a good amount of time with young entrepreneurs and guides them when they're starting up. We have Lakshmi Iyer, the CIO and Head of Products, Kotak Mahindra Asset Management Company Limited, which she joined in 1999 as fund manager and was responsible for credit research, deal execution, managing fund performance across all debt funds, and assisting sales in client interaction. In addition to that, she has been a portfolio specialist and managed product-related initiatives, such as product pricing and coordination with the fund management and sales team in that role. She broke the glass ceiling in the corporate world and is among India's top female leaders today. Mr. Prashant Thakur is the Senior Director and Head of Research, Anurag Property Consultants, a seasoned corporate strategy and management consulting professional with experience of over 18 years. Sir has worked with consulting majors like Deloitte and Ernst & Young before venturing into the startup ecosystem. Sir was instrumental in setting up the research and data operations verticals from scratch at companies like PropQuity, Cornflow.com, and QuickHomes.com. Mr. Siddharth Sogani, the founder and CEO of Krebaco Global, a research, intelligence, and rating company focused on blockchain and cryptocurrencies. Krebaco has been one of the largest comprehensive research databases in the industry, with over 2,500 projects globally. So as a double master's in international trade banking and finance, a specialist in foreign trade, and a certified Bitcoin professional. The central vision of his company is to eliminate scams and make blockchain and crypto ecosystems more regulated and organized. As a moderator for this session, we have Mr. Pankaj Poddar back with us. We extend a cordial welcome to all our guests and request Pankaj sir to begin the discussion.
As we wait for Lakshmi ma'am to join, So, sir, welcome you to Investrix 2022. And we have Pankaj sir back with us. So we could wait for Lakshmi ma'am to join, and also Ashish sir hasn't joined. So as they join, we can begin the discussion. By the time, sir, if you could share what alternative asset classes have for us as young investors or for the gentry that we have today, sir.
So, just as we have this time, let's go to the most hot topic, and that's Bitcoin. And I think Siddharth is the best person to talk about it. Siddharth, the global discussion in and around the world, whether it's Christopher Woods, the biggest strategist, or any other strategist, they're saying that Bitcoin has to replace gold in some format into your asset class. We'll, of course, touch upon more in the entire discussion, but could you just start with this? Can Bitcoin replace gold? The big talking global point.
Yes. Hi, everyone. Thanks for having me here. It looks like an amazing event has been going on. Yes, I think Bitcoin is definitely going to, overpass the, the market cap of gold, right? Because the way it is growing, see, gold is definitely scarce in supply, but Bitcoin has a fixed supply. It's just 21 million Bitcoins will be ever produced, out of which a few million have already been lost because of people lost their private keys and all, so they are not in circulation anymore. So definitely Bitcoin, and it's a deflationary asset. So overall, the price of Bitcoin, if you calculate, it will definitely go above the gold. I'm not saying it's there to replace gold, but it will be a better digital store value, which we are already seeing, in fact.
Right. Can we start the session? Lakshmi ma'am has joined. I can see her. So yeah, Ashish is also with us. So let's begin the session. And I want to start with Lakshmi ma'am. Lakshmi, the big global talking point has been that inflation is high, rates are low. Can this continue? Let's continue with that, and then we can go ahead.
Yeah, hi, very good afternoon, and Happy New Year to all of you. You started off with the most difficult question, and that googly has been bowled to me. So let me try to bat it to the best extent possible. I think we are in a world where there has been excesses which have got pumped into the system, and I'm talking about the global banking system, largely induced not by a banking crisis, but because of a health crisis, which still continues to haunt us even as we speak right now. Unfortunately, the perils of that associated are we are looking at inflation. If you start with the mother of all economies, we are looking at a 40-year high inflation. We are looking at supply chain bottlenecks. We are seeing constraints. So unlike monetary policy stimuluses, which tackle demand side constraints, these are being led by supply side constraints, but the nature of the beast remains that inflation worldwide is tending to be an issue. It is also equally in the same breath that given the massive vitamin M, I would say the slushing of liquidity in the system has started the chase of assets, and therefore the rate at which economies have been borrowing or the overall rate of interest have been reducing. There has to be some role reversal, but at the current juncture, it looks like this situation is going to continue because the word is gradual. I think no central banker is going to be in a dire straits to accelerate the pedal and try to push this situation off control, because it is better to be safe than sorry. So whether we like it or not, I think the situation is likely to continue. But yes, we are likely to see monetary reversal at an appropriate time, and this includes India as well.
So they always say that whatever markets know, they tend to tend to price in immediately. So Lakshmi, I just wanted to understand: is it similar to 2013, or economies are much stronger, and that's why if the gradual shocks come in, economies will be able to absorb it?
Absolutely, you nailed it. This is not very similar to 2013, where the difference is in the word tantrum. Last time in 2013, we had a taper tantrum. This time it is a taper, but a gradual one and an induced one. So this is something which the world economies, the banking system is aware, is getting prepared. If you look at, for example, the Fed fund futures, which is a good indicator of what is the likelihood of rate hikes, etc. Or in India, closer home, If you look at the derivatives market, which is the swap rates, the overnight index rates, all these are a good precursor on what is likely course of expectation over the next 3 to 4 quarters. In 2013, I think all of us were sleeping when this actually happened, and literally sleeping, because this happened completely off guard. So I think that's a significant difference, and therefore the reaction of the asset classes could be significantly different compared to what we saw in 2013.
Lakshmi, I'll come back to you with rates in India still being much higher than some of the other worlds and why they are attractive for global investors. But the point that you made, money has started chasing various assets. Let's go to Ashish for that. Ashish, you've been looking at venture capitalists, various companies, new age companies. You think that the funding over there is something which is telling that growth will be led by some of these new age companies going ahead?
So, you have to go back and first of all, hi everyone. I didn't get a chance to introduce myself, but so coming to the point, see, if you look at Dow Jones or S&P 500 in 2000, right, it was mainly dominated by industrials and traditional old economy. I think same is the state when it comes to Sensex or Nifty. If you look at Dow Jones and S&P 500 composition today, more than 50% of the market cap is coming from the tech companies. Okay, so tech is here to stay. Tech is not going to go anywhere. In fact, we are conducting this thing on Zoom. I don't think anybody knew what Zoom is before, pandemic, right? Of course, people who were more tech savvy were using Zoom, but I think mass population started knowing what Zoom is, what most of the other tech apps are, purely because of COVID, right? So tech is here to stay. I don't think it is going anywhere. So I think that rapid tech adoption will happen, and we will see large tech companies come and basically be part of, or create new market cap. And, why that will also happen is, see, you have to look at it, and this is something because I belong to that asset class, so I will have that view. In early 2000s, the Wipros and Infosys and, they created the IT services wave. I think now it's more the product wave that is coming where, you have Flipkarts and Zomatos and the likes of them who are basically, we have tech talent available who are trying to sort of, take it to the next level and create product. And it is easier to sell product digitally, right? I don't have to go and sell product in US, go to US and sell it. I can sell it over Zoom. I can sell it digitally. So it's a product-led growth that is also coming in. So, which means that you can create a company out of Chennai and sell global products, right? Which happened with, let's say, Freshworks or Zoho. Right. So that is also going to happen. So I think fundamentally what we believe is a large $1 trillion economy that can come purely of tech, because see, the biggest export that we have is a tech talent. I know we hear about, tech shortage, hai, talent nahi hai available, but still, you can run a poll, almost, 70% of your people who are doing your MBA will be engineers, right? You just run a poll. I think that's it used to be a joke that, mera beta engineer banega, beti engineer banega, but it's almost like, good amount of people are engineers, right? So we have that kind of population. We can skill them, upskill them, and they can really come up with new products. And most importantly, earlier, there was no risk capital available. The beauty of Silicon Valley is I will give $10,000, do whatever you want. We'll see. Okay. That kind of capital, which is you're willing to write off that capital, is available today. Of course, because of, too much of liquidity or whatever, or a lot of wealth that is created. You see so many ESOPs that have been created, so much of wealth that has been created in, Flipkarts and all these people, and they've got exits and, they're sitting on huge amount of capital. Where will that capital go? Of course, that'll go in equity, that'll go in debt, that'll go in mutual funds, but at the same time, some amount of it will also come back to venture capital. When it comes to venture capital.
Just taking it ahead, considering that China plus one is the big theme and India would likely benefit from that, talent is available. The age population is on our side and money is available. So what does all of that mean for the next 5 years for some of the startups or some of the companies who have proven themselves and now want growth capital?
See, it means there is huge amount of wealth to be created. Like, say, where can you create so many jobs? You can create jobs by entrepreneurship. You can create, I don't think, if most of the people over here, a good amount of placements that happened in the last 5 years, it happened in startups. That trend will continue. In the next 5 years, most of the placements or jobs that will be created by startups, because the implication of FDI, when FII money comes, it's just changing hands between investors.
Yeah.
FDI has a multiplier effect where a particular $100 million that goes into the company, it goes to set up infrastructure, warehouse, employ people over there, employ people. The kind of trickle effect it has on the economy is very high. It creates jobs, real jobs, right? So net, I think there are going to be a huge number of jobs that will be created. We will see, if you just look at, what is also happening is, see, valuations are a little going off, right? But, interest rates are low, valuations will go off, everybody wants to chase good deals. So you will see some out of this thing. But if you look at it, right, the earlier mean was over here, what we are trending is here, but the new mean probably when the reversal happens, it won't come here. It will at least be somewhere in between. Right. So we will, on a secular level, if you see it over a 5 to 10 year period, this will only continue to grow. We may see a little bit of blip, but on a long horizon, it will only directionally, secularly will grow. So Lakshmi, you can ask most of the CIOs, right? They look for 20% annual growth, right? I think these companies grow 20%. Some of them grow 20% weekly, 20% monthly, right? They grow so fast because I don't have to go and sell anything. People just download stuff.
Right. Prashant, let's start with the real estate as well. For the last 20 years, I think since 2009, except for real estate property prices, I think companies have gone through everything, taking massive debt, huge issues, change in regulation, GST coming in, available. Between residential, commercial was looking interesting.
I'm sorry, we lost you in between, so I couldn't get the question.
So, Prashant, I wanted to ask about real estate. That in the last 12 years, a lot has happened. A lot of builders have shut down. Companies have taken huge debt. Companies have come out and reduced their debt. They're focused on completion timeline. What does that mean now when the volumes have started to go up? What does this indicate? And then we can talk about residential and commercial separately.
Sure. I think, if we have to talk about one of the most transformational journey any industry that has covered in last 10 years, I think everybody on this panel would agree that it has been real estate. It was quite amazing to know that a sector that contributes close to 6 to 7% of the GDP and is the second largest employment generator was never regulated. And in fact, that led to a free run for anybody who could, just have some kind of political connection and a piece of land to become a developer. And that's where the trouble started mounting. And on the other hand, we keep on talking about urban housing shortage to the tune of 2 crores, 1.2 crores of houses that are ready, but unoccupied. So somewhere, there was a huge mismatch between what was in demand and what was being pushed by the sectors. And if you look at how the sector was going, it was primarily driven by I would say speculators, not investors as well. So while investors to a certain extent are good for any market, I think speculators are the ones who destroy the value, and that's why we saw everybody losing money except few developers. The people who bought homes were stuck with unsold inventory, under construction projects still stuck, developers kind of huge debt, banks and financial institutions lost money. And that's when this RERA was introduced, and slowly a measure of reforms were introduced in terms of GST, Benami, and then we could see the impact. Slowly the supply started to come down and all those shady developers started to consolidate. And then, while we're thinking that 2019 was the year where all the impact of these regulatory changes would have taken place because supply and absorption both came to a bottom. Unfortunately, this 2020, we kind of had this black swan event in form of COVID. And then we kind of almost dipped to, rock bottom. But what we saw post-COVID was really kind of, a remarkable journey. I would say, the real estate's corporatization journey has started post-COVID. And why do I say that? We have seen a huge supply side reforms in terms of the sector being regulated, the sector being cleansed up. If we talk about, somewhere around FY17, the total supply that was pushed into the market was controlled by 80 to 85% by the local developers. I would say tier 2, tier 3. And then, listed had only share of 6%. Today, that share has gone to almost 30% if you combine both listed and grade A developers. So the kind of supply that is being introduced in the market is now more or less by grade A developers. So regulatory environment is strong. A developer who has a strong balance sheet is now kind of taking control of the entire market. The customers have, kind of more evolved. And what I would also say is that this high liquidity environment has helped some good developers to bring down the cost of debt. Almost, I would say, if I look at the listed developer space, close to 30% of debt reduction has happened. So their balance sheet is clean, they have a strong pipeline. And the good part is affordability is a strong point right now with rock bottom interest rate. And one noticeable thing I would say that the developers have done this time is that they have maintained the pricing discipline. If you go back to the kind of recovery we saw after a global financial crisis, the prices were increased, and that's where the buyers retreated. So over here, in spite of huge input cost inflationary pressure, I think the pricing has been in the range of, so I think this is where, I strongly feel that we are entering, we are at the beginning of 5 to 10 years of upcycle for residential real estate.
Okay, right. How important is the point that Ashish made? You can take a house here, start something and sell it anywhere in the world. Has that made a lot more areas more lucrative now than what it used to be earlier?
See, we need to understand the basic genesis of this market. Now, I will try to draw a parallel between how insurance was sold initially in India. So insurance basically is a product that is meant to cover your risk. Right? It's not a pure investment product, right? But the way real estate, especially residential real estate, was pushed at the initial phase was, pure investment product. That kind of led to some kind of distortion. So today, this market is a pure end user driven market. So I would say that if you want to buy a house for end use, this is the right market. This is the right time. But again, if you want to buy it from a pure investment point of view, this space has evolved. For example, if you want to buy something and sell after a year or so, I would not recommend that it has to be residential real estate. It can be REITs. And then the way commercial space is also evolving in terms of fractional ownership. So I think what Ashish was telling is that the introduction of tech is also creating alternate monetization avenues and investment avenues within the real estate. Earlier, it was just buy land or just buy residential real estate and just wait for the price to shoot up and then you sell it. So we need to understand that unlike stock market, it is very difficult to find a real estate which is mispriced. So even when a developer launches a product, he prices it fully. And there is no pure price discovery mechanism in real estate. So I think we are evolving with the introduction of new products in terms of REITs, and then other technology that is bringing monetization to commercial space in terms of fractional ownership. So that's where we are evolving, and I would say it's too early. And let's not make the same mistake that were made in the past. It still remains predominantly an end user driven market. Residential real estate has to be a combination of 80% end user and 20% investor, because investors are required, they act as a market maker. So that's what I would like to highlight over here.
Right. Siddharth, now let's go to the topic of asset allocation, which of course is the topic that we are discussing. So should Bitcoins or any cryptocurrency be an important part of asset allocation when somebody is starting fresh?
Yes, absolutely. We cannot put all our eggs in one basket. That's what a lot of seasoned investors say. So, when you are building a portfolio, it is important to have stocks, bonds, and fixed assets and all those things. So it's important to put this new asset class because consider this as an insurance to your entire portfolio, because this is a non-correlated asset. It's not pegged to fundamentally to the geopolitical situation. So technically, if the market is facing trouble, since it's a non-correlated asset, is not run by any government, if there is a war-like situation or something like that, this will not get fundamentally impacted. Of course, a little price action will be there because of the panic. Like In 2020, I think February or March, when the world market collapsed because of COVID, Bitcoin and crypto market also fell by 40%, but it recovered in less than 10 days, whereas the global market took more than a few months, right? So, of course, whenever there is a panic, there will be some price movement which will impact this thing, but eventually this is a different asset class. So we have to see that instead of buying gold and holding digital gold, you are and trusting some third party to actually have that ownership, you actually own the asset on your portfolio as a private key. So this I mean you own it. There is no third party involved. The network guarantees that the owner of this private key owns that much of crypto, Bitcoin for this sake of argument. So it is definitely essential. I believe between 3 to 5% of the portfolio must be in crypto. A lot of fund managers and investors globally have, in fact, accepted that they have exposure to crypto in their portfolio.
Also, just wanted to, for our viewers and for our, of course, the audience over here, that, crypto is a new asset. It will get evolved. News law will be made. New hiccups will happen. New growth avenues will come. So one has to be ready that there will be a lot of volatile moves.
Yes, if you see the market size compared to the global market size of it's about 125 trillion, the world market, and crypto is just at 2 trillion. And there is still very limited institutional exposure in this asset class. So, and of course, this is not run by any regulator. I mean, there is no price capping, or there is if a market crashes, there is no there is no halt in trading, right? So all these things definitely makes this thing very volatile. And in the coming years, like what I mean, if you see since 2009 till now, the volatility in Bitcoin has reduced significantly. Previously, when like I started, Bitcoin used to go up and down by 20, 30% on a very normal, and it was a very normal thing. Now it is less than 4 to 5% on an average.
Right. So Lakshmi, let's come to you and talk about the traditional bond markets. India is at 6.5% 10-year yield. Fixed income companies or funds like you can give slightly higher than that. That for a global investor versus how the rates are globally, how that makes India very attractive.
So when you are contemplating investments in fixed income, one needs to be mindful that you have to track, apart from nominal rates, what the real rates are. And sorry, when I say real rates, I'm talking about nominal rates adjusted for inflation. So if that net number is positive, it suggests that India's or the economy's real rate is positive, and vice versa when the inflation is higher than the nominal rate. In most of the developed countries right now, and of course US is the torchbearer there, you are seeing massive negative real rates, whereas in a country like India, even right now, looking at where the inflation is, the headline CPI vis-a-vis where say if you look at the 10-year benchmark, the real rate is still positive. So I think that's one of the yardstick which investors do evaluate when they are taking investment decisions. But that's not the only thing. Given the fact that US rates are rising, and the fact that when foreign investors come to India, especially on the fixed income side, they do look at the currency volatility, because the return that they earn is in rupees, and adjusted for the currency depreciation, what is the net return they make? That is also equally critical. So there, if you see, the gap is not very substantial, which is why even in 2021 calendar year, foreign portfolio investors were net negative in terms of inflows in fixed income. Maybe in 2022, as we get more clarity on the index inclusion, and why I say that is an important catalyst, is that a lot of foreign investors just like to hug the benchmark, and Indian bonds are not part of any global indices. So I think that can act as a very strong catalyst, among other things remaining constant. And the fact that we've seen a reasonably stable to marginally appreciating currency, all that can act as, if I were to say, Sone pe Suhaga moments for FPIs to participate meaningfully in Indian bonds.
Right. about the credit risk funds and various other funds. Since 2018, there have been various issues, right? From corporate issues or, talking about what's happening with the Franklin issue that happened. So how stable are now some of these bond funds and what they have gone through in the last 3 years? Whoever have survived, what are they now, indicating, or what are the processes that changed?
There was a massive spread widening between so-called the haves and the have-nots, or maybe the higher rated ones vis-a-vis the not so high rated ones on the credit side. And that was a fallout of high-end paranoia. That was a fallout of one-size-fits-all blanket canvas painting, where you assume that if there is an issue with A, there is an issue from B to Z, everyone has the same issue. Those were the times as I tell students, or as I tell a lot of aspiring, financial market participants, sell whatever you can and buy to the asset class. So those were the times. Where are we today? That paranoia has given way and spreads have massively compressed. To give you a perspective, a AAA versus maybe a below AA asset was quoting at maybe 4 to 5% kind of a differential, which is now quoting at under 1% differential. So that's a massive outperformance on the credit side. Add to that, we are seeing a significant U-turn in the economic outlook, which means there is a higher probability that credit assets are likely to do better. So going forward, our take is that the spreads might not significantly compress, but given that there is lack of issuance in this category also, especially on the capital market side, we are likely to see the spreads sustain. But I think the peak of the paranoia in terms of credit fear or credit crisis, I think, is behind us. Small freak cases may be there, but I think by and large, we seem to have resolved for it.
Right. So, Lakshmi, talking about asset allocation, people generally believe that whenever you want to invest into credit funds, you should do a lump sum and not a SIP like you. Firstly, can you take away that myth and tell us that is it possible that credit risk funds also SIP should be done? And our audience is between say 20 to 20.
I have lost Pankaj. Pankaj, your last part, I heard the SIP part, but your last part, 20 to 25, lost it.
Yeah, so I'll just repeat it. So our audience is between 20 to 25 and soon they'll start their earning careers. So how they should essentially go ahead and make sure that bonds is also an important part of whenever they start to save.
So onto your first part, the thumb rule of typical investment via SIP versus lump sum, the thumb rule of the guiding factor should be how volatile an asset class is, so that you take advantage of the rupee cost averaging, which SIP very beautifully provides. Which is why equities are the first port of call when you want to do a systematic investment plan, so that it beats out the volatility and allows more units at lower price and vice versa. In case of fixed income funds, we don't see that kind of relative volatility, though between say high grade versus credit, there could be slightly more implied volatility. So lump sum in this kind of a market scenario does make more sense across fixed income strategies, including credit. That does not mean that if you are a regular income earner and swear by asset allocation and you're doing that for equities, you can't extrapolate that to fixed income. But as I said, the materiality of that is not very significant. So if you have monies in fixed income, please go ahead and do lump sum. On your second point, I started my investments, it would have been an insignificant amount, but I started my investments when I was 21. And at that point in time, probably I thought I was early, but at this juncture, I always think that the power of compounding can work in your favor. So A, keep that in mind, and B, most importantly, when you're asset allocating, please do the math on what kind of risk you can take. That is more of a qualitative aspect. And B, most important thing is, what is the longevity that you're allowing this money to work in your favor? So for for those audience in the band of typically 20 to 25, which I can extrapolate or interpolate my life 20 years back, there is the risk appetite is fairly high. you are earning, so you are at the growth stage. So the tendency to add on risk asset classes like equity is typically high. Of course, there are cases like aspiring home buyers, aspiring holiday goers, etc., which is why goal-linked planning does make a lot of sense. And there, digging in the services of an advisor or a distributor comes in handy. But yes, if you know it all, then DIY works. But most of them at that age and stage don't really know it all. So asset allocate, try to allocate more towards equities if your risk appetite permits, because keep in mind, there is a villain or a monster in real life which is eating into our returns. And in the financial asset classes space, that is within fixed income and equity, clearly equity is the Red Bull and fixed income is more like barley water.
I was expecting that you would say it's like a coffee shop, but it's okay. At least, let's...
Caffeine, no, Pankaj, so that is still on the equity side. So this is the caffeine-free coffee, if I were to say.
Right, so know it all. So Ashish, how would you look at the role of a professional advisor now for any planning in this industry?
I think you started with Ashish. What are you looking for? What do you?
I was looking at the role of a wealth advisor and how important has it become in the last 10 years because the industry has changed.
Yeah, so first of all, I have nothing to do with wealth advisors. My business is even more risky, which is alternative assets, angel investments, venture investments, which is illiquid, the highest risk kind of thing. And when I tell everybody that, when you're writing an angel investment, assume that check is write off. If anything you get, that's good. That's the intent with which you write. Coming to wealth advisors, see, you have to understand financial services. The biggest problem, you always have to understand, if someone is selling something, there is incentive. Understand people's incentive. They will have a commission. See if they are selling, mis-selling. Understand the asset that you're buying into. If you think that, you want a higher risk, then probably, add that higher risk, but understand that higher risk means, the money can go also out. If you're not willing to sort of take that risk. So first of all, do a proper self-assessment of your risk. When it comes to advisors, try and see what are the products that they are trying to sell. Go and speak to some other advisors also and independently see, if they are advising in the same lines or, what are they trying to sort of do. I know Siddharth did mention about crypto has to be there in the portfolio, whatever. I cannot comment probably on that. I'm just trying to sort of say any asset that you invest, please spend some amount of time reading about that asset class and how it really works. It is your hard-earned money. Because a particular person is telling you, you are investing, boss, he is going to make money. If you lose money, he will not come to bail you out. Same thing happens, when you're listening to some random people on Twitter, they're saying, hey, buy this stock, buy that stock, buy crypto, buy fixed income, or do angel investment. If this stock or anything goes down, they will not come to bail you out. So please do your own diligence. And this is something we keep telling everybody on each and every asset class. And I think you should make it a habit if you really want to do it, right? Because habit also compounds, right? If you do it now, then you will keep doing it for the rest of 10 years of your life, and then you will get better at it, right? And then probably an advisor will just advise you something, and you can also have some view on it. So do these things, understand incentives, understand your risk allocation, etc. There are definitely certain things which you should do as students, like make sure that you have some amount of money in your PPF, EPF. That is for sure, because you're starting right now. 10 years later, that corpus is going to be huge and big corpus, which you're like, hey, wow, I didn't know this is the kind of money that I ended up saving, right? So have that kind of thing. Then, you will be in a position to take a little bit more risk and like, okay, now I can do angel investments. I can write a little bit more risk. I can do crypto. I can do whatever, right? But create that kind of thing where you are geared to take that kind of risk. Have an advisor who can tell you on that rather than just say that, nahi, itna random allocation kar lo, because that's what they've been telling all the other people, because they will always give you a fixed package, right? They will never customize it that suits your tailor needs, right? Because they want to do it for all the other people. So the finer tuning will only come from you. So I would just say, look at these basic things when it comes to any advisor, when it comes to picking any asset classes, look at the incentives. There is it's unfortunate, but there is good amount of mis-selling that happens in the market. It's absolutely there, rampant, right? So please be very careful of it, right? And as students, keep learning.
Okay. Lakshmi, if somebody finds it difficult to do so much allocation, would it be correct to just try and find out a good balanced fund? Does that help the problem in the near term?
Most certainly. In fact, there is this fantastic category in the mutual fund industry called balanced advantage funds. These are essentially dynamic asset allocators, and they use, I would say, some sort of a quantamental. So they use the momentum and they use qualitative aspects and allocate monies across market cap and toggle between equities and fixed income, retaining a tax status of equity. So I think these are wonderful tools which one must explore. If you look at the industry numbers, the AUMs in this category have been consistently growing, and on an average, lower end of 25-30% to higher end of 65-70% has been the trend of equity allocations in the last I would say 3 to 4 years. So yes, it might not be the purest form of cocaine that you're looking out for if you're participating in equity markets, but it is certainly the next best.
8 years, the return difference between a large balanced fund and a large equity fund is very, very minuscule. Have you done any such research?
So the function, so if a fund which has 100% allocation to equities gives you say X or 10 bucks or 10% in a year, if you have a 30% allocation to equity, that's the kind of proportion you need to weigh. But over time, as I said, because these allocations are toggling and quite seamlessly between equity on the higher and lower side, the gaps have not been very substantive. And as I said, these are not pure equity asset classes. The risk levels in these funds are significantly lower than what you would actually assume in a pure play equity fund. So I think the risk reward metrics are significantly different, and therefore the returns will certainly vary.
Right. Prashant, let's talk about real estate. Everybody wants to, of course, buy their first home after they start earning, shift in a better place. But with REITs now being available, is there option to save in a smaller manner also into real estate? And how should, after one buys their first home, how should one look at real estate as an asset?
Yeah, I think it's a very good question for the audience that we have. Mostly, most of them would be starting to earn in a year or so. So what I would say is that at the start of the career, you need to be highly mobile and flexible. And that's the time, it's not advisable to invest in property. First of all, you not have that much of corpus. And then, you need to kind of, switch jobs and cities also. So the best thing to start, if you want to start investing in real estate, I would suggest you start with REITs. And, as and when you build your corpus, you kind of attain some kind of stability in your career, you're more clear that which city that you want to zero in. I think then that's the time to kind of, buy your first home. And it's kind of, in terms of investment for millennials, what we have seen, we recently, conducted a survey focused more on millennials post-COVID. So I think the need or the interest towards buying a home has kind of definitely increased. But again, the kind of asset class that these millennials understand in terms of cryptocurrency or let's say some kind of, we have seen how millennials have taken to stock trading and investing with such a zeal. So I would say that once you start your career, first 5 years, you should focus more on kind of building the corpus, understanding where you are going to settle for a long time, and then kind of make a purchase. When you buy a real estate, then other criteria comes in play. How do you select a developer? Now with RERA coming in the picture, you have all the details about a developer, about the project. So look for the execution quality of the developer, the delivery track record, and then the micro market that you're buying, in terms of if it is near to some kind of employment zone, a good social infrastructure, it has potential to kind of appreciate. But one thing everybody should keep in mind, what is the objective of buying a home? If you're buying it for your end use, your expectation from that investment changes. But if you're purely buying from an investment point of view, then your consideration would change. So I think these couple of points, all these young students should keep in mind. And yes, having a roof over your head, a physical asset, definitely helps. But it also is a kind of illiquid investment for, in certain micro markets if you're kind of stuck with.
Right. Siddharth, we've spoken enough about risk and how, bonds should be evaluated. Ashish earlier spoke about, what one should look at in angel investment, and it's highly risky. For a lot of the audience and a lot of people, who want to invest in crypto, they don't know how to evaluate crypto. Can you just tell us a few basic things that you would do, say, if a new coin is being launched today?
Yes. So crypto is a different asset class, like I told you earlier. And here, if you wanna, like how we evaluate the stocks, we see the P ratio, we see the performance, we see the order book, and then we come to a conclusion that this stock has a potential to go up. In crypto, it's a different way to look at it, right? You see the network effect. How many users are there? How many wallet addresses are there? What is the transaction fee? What is the transaction speed? How many nodes are there? How many validating nodes are there, right? So that highlights the network strength of that crypto, whether it's a token or it's a coin. That has to be considered, right? And whether it's now there are new things coming in. There is ZK, zero knowledge proofs, and what kind of proof of work are they using validation through proof of work or proof of stake or proof of history. There are different and many new things which are coming up. So I educate myself almost every day. I spend almost 15 to 20 minutes just reading about new projects so that I'm at least I can answer questions. But it is important to know the fundamentals of how that crypto is working and what problem it is trying to solve. That's one. You need to see so, in crypto, you can start a project by just having a smart contract and a website, right? You don't need to go and incorporate your company necessarily. But it is important that if you are making a larger investment, you see that the company has good founders, the team has good experience to run that kind of a thing. Just like how we see, like I'm sure Ashish was be doing it all the time. You see the founding team, whether they are capable of running that kind of a project. You see the legal and corporate structure, because crypto has a huge regulatory uncertainty worldwide, right? So how crypto companies are formed, that they're like the main company would be in Cayman Islands or a BVI or any other tax haven like that. Then there will be a layer 2, which is somewhat like a Singapore, and then another company. So you have to see whether the corporate structure is good enough. Is it direct or is it a layered corporate structure? You see the financials, as in here the financials would be related to token economics. That means that issued tokens, the number of locked tokens, how they are burned, how they are generated, and what is the total market supply and coins in circulation. That is really important. Because if I issue 1 billion coins of a coin of a project, say I start Siddharth token, and I issue 1 billion coins, and I just trade one coin with you, right, at a price of $1. My market cap is $1 billion because it is calculated as the coins in existence and the price. So we should not just see that, we should also see the liquidity. How deep is the order book? If you want to sell your coins, are there enough buyers to do that? That is very important. You see the financials. I just mentioned token economics, and you also see the legal, corporate structure, financials, and also you should see whether that coin has enough validators. That's really important. So there are a lot of new blockchains which are coming up. It's like competing, like everybody is trying to compete with Ethereum. There is Solana, there is Cardano. These are the new coins. But you need to make sure that there are enough validators, because validators add strength to the network. If I start a Siddharth blockchain and there are no validators, it doesn't make sense. It's just like running an enterprise blockchain. So these are some of the aspects. Of course, like we at Kribaco have developed a completely new rating matrix. We use 153 parameters and over 3,500 data points to evaluate all these aspects and provide this research and data to regulators and investors and HNIs and stuff like that. So you need to do a lot of research before you go ahead.
Right, Siddharth. Thanks so much for that, Prashant, Lakshmi, Ashish. Thank you so much. Hope our audience did learn about asset allocation and how one should choose and save their money. With that, it's back to the moderator.
Thank you very much, sir. Thank you, everyone. Can we have some questions for the audience? So if they have any, they can propose their questions. Or there's one question that was over and over coming from everybody. So it is regarding the regulations on cryptocurrency and Bitcoins. So anything regarding that, Siddharth, sir, you would want to say?
Yes, so globally, a lot of countries are moving for positive regulations. It is impossible to ban crypto. It's like internet. So people who are saying that this government will come and they'll ban it, it's impossible. China tried to do it. They banned crypto mining, holding, transactions, everything. But still, the Chinese are still using crypto, using P2P wallets, and it is happening, and the government can't do anything about it. So banning is not an option. Embracing it is the only way forward. The moment you embrace it, you start taxing it, you earn a lot of tax. So it is definitely a win-win for the government. And also crypto regulations would invite more startups to get started in India. And currently all the startups are going out of India, incorporating themselves and running them. So now, because there's a lot of reluctance and people are anticipating that the regulations might be a little not in favor. But however, I don't believe that the government should most probably come with a clear tax law in the coming budget session, and probably in the coming year. I mean 2022 has started, so in this year, in the maybe in the monsoon session, we should see something like a bill which regulates the entire ecosystem, regulates the NFTs and all those things. So it's not going to get banned, so you don't need to worry about it. This is the best time to be in it.
Great to hear that, sir. Definitely, there are a lot of potential in this investment class that we see, and it is interesting for us to learn about the same. Is there any other question anybody want to? Tunir, please go ahead. Yes, Tunir, ask a question.
Yeah. So as Siddharth sir just mentioned, that China banned crypto in their country, and it didn't really work out very well for them. The exact opposite of that happened with El Salvador. They legalized that as a form of their currency. So I was wondering, what effects would that have on an economy of a country on a macro scale, and how do you think it might happen in the future if multiple countries start accepting it as a legal tender? So how it might affect the values of a currency that was very limited in circulation, that cannot be produced more, unlike, let's say, dollar.
So let me clarify what a legal tender actually means. Legal tender means it is legally accepted by the government. And if somebody is trying to pay you in goods for your goods and services, you cannot deny taking that money if it is a legal tender. In other countries, so El Salvador has made it a legal tender. That means if you're buying a coffee in Starbucks and you want to pay in Bitcoin, Starbucks cannot say no because it's legally accepted. Whereas in the US, if you are trying to pay in Bitcoin, the guy has a right to say no because it's not a legal tender. So you have to pay him in dollar or something else, right? So, and see, El Salvador is a very, very small economy. I don't even think they have a direct settlement account for with the US for their treasury. So it's a very small economy, but what they are doing is great. It sets an example that this has to be. And I think yesterday itself, Brazil has announced that 1%, of their entire portfolio they are going to put in Bitcoin. Something like that came in. I'm not sure about the news, but it did come. So, creating, I mean, if you term it as a legal tender, it doesn't really make a difference. It's just the acceptance of the governments and the populace of that jurisdiction. However, it is not here to challenge any fiat currency. The fiat this complements the fiat ecosystem, and it serves as an alternate payment mechanism. So legal tender is a very good thing, but that is not it. There are a lot many things we should look at.
Arohi, may I ask a question?
Yes, please, ma'am.
Yeah. Hi. Again, a question for Siddharth. Crypto is indeed hogging the limelight. Now, this question, I don't know, it's almost like thinking out loud. A couple of months back, if I'm not, counting the days incorrectly, we had this government of India had to come out with some regulations, etc., on crypto. And I remember the evening of frantic messaging amongst us: sell, keep, sell. Your experience of this news, and how much of this news impacts the the liquidity in the crypto market, or is there an acceptance that regulatory backlash is not going to be there, and we don't need to panic whenever there's such anticipated regulation? I'm asking as a pure investor, how do we respond?
See, there have been, I think since 2016, there have been several notifications and a lot of speculative news out there in media, which said that, if you buy crypto, you'll be jailed for 10 years and all those things. These are all clickbaits, masala news. So don't really care about them until and unless the government actually comes out with a regulation, right? You have to wait for it, hear it from the government itself. The parliament will have a bill on the parliament website when the bill is about to be proposed. So and also you must see that India has around 4 to 5 million users. 4 to 5 crore users of crypto already, right? And the industry came out with an advertisement on 3rd of November. It was a front page advertisement by the industry association, which said that $80 billion have been invested, 6 lakh crores. So it is definitely a huge market already in India, and something so huge cannot be banned overnight. So even if the government says that we are going to ban it, they will give enough time for the people to exit. So you don't need to panic. And yes, because people panic, there is a lot of price action, which you see that if they say that in today's budget session, the Madam Sitaraman is going to ban it, people will start selling it. It's not going to happen overnight. It will take some time. No need to panic. And wait for the actual bill to come out. The government will give you enough time. Even in 2018, when RBI had banned banking, they gave 3 months time for the people to exit. So in a country like India, nothing happens overnight. They will give you enough time.
So the equity adage of buy on rumor and sell on news works here as well.
Absolutely, it works here. It's the only thing which works here. There's a lot of speculation in this space.
Thank you so much.
Thank you.
Thank you, ma'am, for your question. So there's just one more common question that we can take. There's one question that we had from a lot of people. It was, what is the sources that people, young investors like us, can refer to, even education-wise, while they start investing in alternative assets? So the discussion was much detailed, much elaborate on topics of alternative asset classes. So what can be the suitable way to educate oneself at this stage? It's a common question. Anybody can take up.
See, I think when it comes to educating, I think if you are just reading most of the, tech startup newspapers, etc., that will give you at least information on startups, and that kind of ecosystem has started. Tech ecosystem has started covering crypto news, etc. So I think those two things can be covered by reading whatever the daily news, etc., is. You will understand that. And the other is going to be, I think you have to follow a lot of these insightful people on Twitter. There are good people, by the way, who really talk sensible stuff. Probably, if you just follow them, you will learn a little bit more about, angel investments, learn a little bit more about, whether crypto investments make sense, doesn't make sense. I think that is a good place to start with. Though, I know the best thing to do about, learning about any investment is by investing, by actively investing. Maybe a very small sum, but at least start doing something. It is, so even if it goes to zero, in my opinion, it is probably has to be seen as an education cost. I think before I became trader on equity markets, I lost a lot of money, but I think, every time I would just, treat it as that, this is the amount of money that I've lost, my personal money, to learn something. And over a period of time, yeah, then, my losses started going down because I never used to make those rookie mistakes because I learned it at that kind of thing. So same with alternative. I think you should try your hands at investment. Have a small corpus, your personal corpus. Again, when you set these corpus aside, make sure that, your lifestyle doesn't get affected. Make sure that, your contingency funds in future, etc., are taken care of. This is pure risk capital for you to learn. I think that is the best course that anybody can, like. It's not that, you go to a 10 session course and they will teach you. They will not teach you that all content is available out there free, democratically, right, on YouTube or whatever. But doing is very, very important, because you're taking a call whether I buy or sell. That nobody can teach you. That you will only know when it's your own money, right?
Right, so definitely. Sudeshna, if you would want to ask your question, we can take that last one up and then conclude.
Okay, thanks, Advi. I have this question to ask you, sir, only. So, sir, since you had mentioned some time back that your asset class, which is angel investing, is one of the most riskiest parts, since you mentioned that, I want to know that when you started, basically, what was your perspective, or why did you actually start investing in this asset class?
Yeah, I went to Spain and I did my MBA there. And, what I noticed is that India tech ecosystem also will grow and has to grow the way, the US tech ecosystem grew. And anytime, whenever you guys look at any asset class, don't look at an asset class now. Look at an asset class in 10 years later, how valuable that asset class will be, right? Always think of future, right? Because you're not investing in for now, you're investing in for future. And I found that, hey, this is a very good time to get into it. Not everybody is going, and because, getting into venture ecosystem today is hard, but getting into venture ecosystem 10 years back was relatively easier, right? So I'm like, it makes sense to get into something of this sort. You'll get to learn a little bit more. That's how I got into it. And as I said, when you start building a network in that, so it compounds over a period of time. And technically, why it makes sense is, as I said, India is a market where we don't have a demand problem, we have a supply problem, and the supply can be fixed by tech. Be it right, it's not that Indians started eating more after Swiggy or Zomato came. Indians were eating as much as they used to eat before. It is just that Zomato and Swiggy said that, okay, fine, any restaurant you want to eat, 30 minutes you'll get the food hot and piping. That's the only thing they solved, right? They didn't create new restaurants, etc. So they solved a supply side problem. Demand is always there. Same with Ola or Uber. They did not basically, you don't have they didn't innovate on the supply side infrastructure in terms of, building more cars or whatever, or getting more roads built or whatever. They said whatever existing fleet is there, we'll basically make it available real time. So, this is, the irony of it, but India will always have supply side challenges and tech is available. So, you will keep having these opportunities. I think that's how I thought. And I said, any opportunity I look at from that lens. And I'm like, hey, it makes sense to make investments in some of this. And these are fundamental businesses, right? They're not going to go away. There is something tangible. As I said, coming back to Siddharth, sorry, I'm picking on you, is I don't understand crypto because I can't see it. I can't feel it. Right? With my thing, I can open a Zomato app and I can do a transaction and I see the value of it very clearly. Hence, I'm my brains don't operate, that I just like to have simple things. So I think this is at least fairly simple. So I said, I'm okay to get into some of this space, which makes sense to me.
You can't feel tech, by the way. You cannot
No,
ever feel tech. So just the way, just wanted to add, like what you said is absolutely right. Tech is definitely here to stay. But just the way we look at tech, like, the US in the 90s, the US grew with Web 1. Now currently we are in Web 2. And right now the momentum for Web 2 has gone away. Right now the Web 3 protocols will come in. So when you are looking at investing for next 10 years, you have to see and invest in those projects which are working on Web 3, because Web 2 will become obsolete in next 2 or 3 years. And it's all tech, it's intangible.
Well, I'd like to express my thanks towards the panelists. It was really wonderful listening to you all. I'd now request Dr. Shalini Talwar ma'am to propose a vote of thanks.
Thank you. Good afternoon, everyone. And it's such a pleasure and such an honor to thank you all. And the incredible learning that we have had is amazing. So I was just doing a quick word search of alternative investments or alternative assets, and the words that come up are like unconventional, illiquid, risky, and so on. So bottom line, I would say less understood. So for all of us today, after this session, there definitely will not be this problem. Rather, what the takeaway would for all of us would be that it's an opportunity. These assets offer an opportunity to be, cashed on with caution. Is how I would like to sum this up. And yes, of course, Siddharth, after today, crypto will not be so cryptic for us. And Lakshmi, we'll know that FIS has to go beyond the fixed income, the FDs that we have, and there are multiple opportunities which are there. Prashant, to begin with, invest in REITs and then decide where you have to buy your home. I think had someone been there to give us this advice when we were family pressure of buy a home, now that you're earning, and then buying selling, and CAs and the brokers getting paid until we could make up our mind. So now the precious advice is there. That's indeed very precious. And Ashish talked about angel investing. I think these are ahead of time things, because as we prepare for the next level of growth, this is where the investing, the money coming from unconventional, if I may still say so, sources would be very important. And I think you do. I hope you realized from when I was listening to Ashish, I was getting the feeling of what Warren Buffett always talks about: tangible, feel, analyze. And when Siddharth talks, it's the Elon Musk kind of technology. And the twain shall meet, because what you will fund, Ashish, will result in what technology will come. So indeed, by it's lunchtime, and I should not be holding us all back. But on behalf of the organizing committee and our department, Dr. Trivedi is here. He's always he's always encouraging us and guiding us to learn everything. So on behalf of our area chairperson, our entire department, students, and the audience, it's thank you is a very very light word, but it's extreme gratitude and appreciation that I would like to express for making things so simple and still so comprehensive. Thank you so much for finding the time for us. This 1 hour has been it's a precious part of the day today for me. Thank you very much, and I'm sure for all of us. Thank you.
Thank you
It
so
was a
much.
pleasure
Thank
being
you.
part of
Thank you
this
all
session.
panelists. Thank you.
Thank you, everyone.
Thank you very much
you.
for your
Thank
time.
you.
Thank you,
Thank
sir.
you.
Thank you so much.
Thanks a lot.
I've messaged a few reading material for understanding Bitcoin to
That's
me.
great.
You guys can have a
That's
look
great.
at.
That's
Take
great.
care.
Thank you.
Bye-bye.
Thank you,
Thank
sir.
you.
Thank you so much.
Bye.
We now have a 1 hour break till 3:30. I'd like to welcome you all back at 3:30 for even more insightful sessions.